right? Yeah, you should be able to now.
Okay. All righty. Click there. Oh no, they have me going. I guess I'm already going because it says pause or stop.
Oh, yeah. Okay. Yeah, it is now. All right.
All right, and you can
That's
see the
good.
screen. Perfect.
Yes.
Okay.
And okay. And I'm live streaming on YouTube now. And all right. You're ready to start?
Yep.
And okay. I'm gonna do my quick intro and then start. All right. Hi, everyone. Welcome to day 3 of this favorite indicators event. Um, we have another great day for you here. And back and this event is brought to you by TradeOutloud.com and TimingResearch.com, and all presentations are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. All sessions are being recorded individually. They will be available on YouTube, and we are also live streaming to YouTube, so the entire day is archived instantly, unedited, that you can review at any time. So to start out the day for us again, Jim, the option professor, is back for another market outlook.
Okay. All right. Thank you, David. And welcome to everybody who got up early. I think in the last couple of days, getting up early has been a pretty good deal because on Tuesday, I told everybody that it looked like the oil prices were going to be bottoming and they could spike out of there. And they certainly did once he called off the ceasefire. So Tuesday was great ideas. Yesterday, I was telling people how NVIDIA at 190, 195 in that area looked like the bottom and it looked like a good place for a spike out. And we saw a spike out there. So I'm 2 for 2 there. And again, short-term options, when you get a turning point, really do expand in price very dramatically. So personally, I thought it was a fabulous two ideas, the energy popping, which they did, and NVIDIA popping, which it did. Okay, I also brought to your attention here that there was a couple of other stocks, and they had a very good floor on them. One was Broadcom, and I'll show you what I was talking about. Right down here, you have major support at gold and purple. So anywhere between 350, 360 is your floor. And if you go to the 5-year graph, you can really see the floor right there at 360. So the bottom line is that this was the place to take a shot and you're already 40 points to the good. Not bad information, right? And you can get this information every Sunday in your box, and every subscriber gets my cell phone so you can text me if you have a question. That's a very good deal. I'll get into that later in the broadcast. The other one that I brought to your attention was Taiwan Semi. And Taiwan Semi, very similarly, if you look at the 1-year graph, is right on a level that has been holding ever since what? Ever since it broke in April. So if it breaks, that's going to be a problem. So if you see, Taiwan Semi breaking under 420, that would be a problem. But right now it is holding, and it is possible it is going to use this as a springboard. So keep an eye on the price. And I'm telling you right now, the number of 430 is extremely important. If you notice, the recent lows were 428. So obviously, if you take that out, change your tune. If not, this thing could bounce out of here. And they got earnings coming out next week, and I would imagine they're going to be good. Okay, so that's the victory lap on that stuff. Now let's get into what else is going on right now. Let's look at the SPX. I don't know if I got the quotes up yet, so I'll look at the future for you real quick, and I'll give you the future so you can see that. And as you can see, it is bouncing up. Again, I told you it is at a very critical point. If it can stay above 7,500, and again, you had an opportunity here where it dipped underneath to 74.68, and then right back above the red line, which comes in at 7,500. So I'm using 7,500 as a very important zone. If you start trading and closing substantially under there, this thing could have a big drop. If not, we could come out of here big time. Why? Because everyone's cautious going into earnings season, and the earnings are supposed to be blowout again. And so again, everyone is very cautious. And that's exactly what it was going into the earnings in April. And if you see what happened in April, right? Everyone was cautious going into the earnings announcements in April. And look at the thing, right? So we have the same kind of setup. Now, what other setups do you have here? Okay, you got the VIX setup. What does that mean? What does that mean is that the VIX is at 1674. And can you see it went above 18 for about a minute and then it's right back down? Can you see it was above 20 for a very short time and right back down? So the volatility is very much under control, which makes big money, family home offices, institutional investors, very happy to put money in because it's not a situation like it was back in January of January, where the VIX is all over the place and Lord knows what your equity is going to be from day to day. This is very steady and it's very helpful for people who want to commit money. Okay, so there's your VIX. The other thing that's very helpful, or has been somewhat helpful, is the percentage of stocks above their 200-day average. Now that backed off yesterday because the equal weight S&P did very badly. Everybody went back into memory, went back into semiconductors, okay? So that's what they did. And I think they did that because they realized that the earnings on information technology are probably going to be fantastic, and getting stuff like that on sale is not a bad deal, at least for the month of July. So that's what happened. And now we got to hold this level here, because if you start breaking under 54 and start going down, and if the S&P breaks 7,500, and if the VIX breaks above 1920, we are going to be going down in my view. And again, I'm sharing all my views. Again, I just give you my opinions. I don't give advice. So basically, that is the story as far as where we are right now. Now, if you want to know who's the spooky guy, or like Jamie Dimon says, who's the skunk at the party, I'm going to show you who the skunk at the party is. And here it is. You see this thing here? This is called the yield on the 10-year note. And on a 1-year basis, it's breaking to the upside. On a 5-year basis, it's breaking to the upside. And on a 20-year basis, it's breaking to the upside. And if it goes up to 5 or 5.5%, because inflation is not coming down, and they've got two bites at the apple, July 27th, they have a meeting, and then they go to that Jackson Hole and do whatever you do in Jackson, Wyoming, in the middle of summer. And basically, they're going to come out with some ideas. Now, there is a lean towards tightening if the inflation numbers don't back off. And the bounce that we're getting in oil is not going to help that situation. Not to mention, just because oil goes down doesn't mean gasoline prices go down. They got to refine the stuff, and there's only so many refineries, and all the stuff we're buying now is stuff they bought at higher prices. So this is not a deal where it's like Walmart with those yellow faces that they're going to have a big deal on gasoline prices. Not at least at this point. So again, that's the story, and that's the skunk at the party. And if we're going to have a big drop in August, September, and October, my bet it would be that this thing spikes up, freaks people out, and then everybody wants to get out because they realize that the valuation of the stock market is at a all-time high. The Buffett indicator is up where the satellites are, and also the CAPE ratio is up where the satellites are, way out in outer space. So if you see rates spike up, that would be enough tonic, I think, to cause a little bit of a concern. Then, of course, the fact that the return on investment looks like a hill that can't be beat. You know, they're going to be spending $5 trillion or something. Well, they got to bring revenues in to make that 5 trillion look like a good deal, and that's going to be a rough racket, maybe. So once the reality of the ROI is going to be way off down the road, not unlike what happened to the internet. You know, supposedly we were supposed to be doubling our usage every month, every week or something, and that wasn't true. And then they built so much cable, you know, WorldCom and those guys, they built so much cable, you had about 20 years of cable overbuilt. Now we ended up using it. The difference here is, you know, a lot of money's going into these chips, and don't forget, you know, cables were ultimately being used. Chips that become obsolete might not be able to be used. So you got a different ball game here. Obviously, it's not been in effect yet. But I mean, you know, there's a thing called clouds are coming into the area, and I don't know that they're years away. They could be months away. So anyway, keep an eye on things. Don't get too comfortable. But right now, things definitely look like on the upside. What else did I want to talk to you about was and by the way, I have an idea to take a look at the end of the broadcast. Let's talk about the earnings coming up. And we've got banks coming up. And I looked at them yesterday. And again, a lot of them are already advanced. So there's JP Morgan. Now it could blow out. Imagine if they come out with good earnings. This thing could take off because, as you can see, it's right near the highs. And again, if they want to go parabolic, this could be the area where it does. But again, if it is a buy the rumor, sell the fact, that could be a problem as well. So let's take a look at some of the shorter term graphs. You see we have a high point here with an RSI of about 67. Then we had an RSI here about 67, 63, and right now we're at the same. So this area here, again, the acceleration phase could happen from this 60 area, or a high point could happen. And the RSI doesn't look that great, but the trend is still up, so you can't fight it. On a 30-minute basis, this thing rolled over at 340 and has been on the defensive in the last 5 days. And of course, on the 1 month here, it's fighting for its life because, again, this looks like it's trying to roll over. But you got a gap up there and you got earnings on Tuesday. And you know what? This thing could break either way. It's very binary because it's had a big enough advance to have a pullback reversion to the mean. You see the mean is down here, right around 315. So if things don't go well, that's where we'll be trading. But if they come out and blow out, no reason why it couldn't just take off. When you look at the banks, you're going to be focusing on net interest income and loan provisions. And speaking of loan provisions, there's a couple of stocks in the loan area that I'm watching. And this is Capital One. My view on Capital One, and you can see it just came down to where it should have stopped, and it did. So far, so good. There's your stop. Now, you had a gap there. Is it going to come down to 185 and fill that first? But here's the deal. It is capped at 210. Why is this exciting to me? Because if and when it can get above 210, I believe it'll come and fill that gap at 230 and under the right circumstances, come up and fill that gap at 250. And the move from 210 to 250 in option land is a darn good run. So keep an eye on Capital One. Again, the good news is it's had a pullback and it held so far. So that the low today or whatever it was, right there at what is the number? The number is at 191 and we're at 194. So it's not very far. It has got to hold because, again, it may go into the 185 gap, but if not, that's even more powerful. And then, of course, on a 5-year basis, it came down and held purple here. So can you see 210 is very important? So keep an eye on it because you don't want to like forget about it and then hear that it's at 250 filling the gap when you were told if it got above 210, it had a chance of doing that. So that's how I keep things on my radar. And then I have things that I'd like to do. You have to have both going at the same time because not everything is the right time to do it at the time you decide it might be. Another one that's in the buy now, pay later department that I've liked and it's gone well is Affirm. Again, look at this. It comes down here. This is exactly what I look for. Turning point. You don't think the options on the calls were cheap here? And then reversion to the mean. You don't think they were cheap here at 60? Okay. Now they just had another reversion down here, a minor one. See, red is a minor reversion down to 80. So I don't know if this thing has got the juice to keep going. It's very similar to JP Morgan in that it's either going to blow out and make new highs and we'll be at 100, or it's going to have a reversion to the mean off of these earnings. So again, and obviously there is some downside view to it here on the RSI. 5-day, probably just like JP's been in trouble. So if JP's going to go, I would imagine Affirm's going to go. And if Capital One gets above 210, I think there's a lot of juice in that one. So that's the banks for next week. Now let's talk about the 3 sectors that are supposed to have the best earnings, according to analysts. One is materials, the other is energy, and the other is information technology. No surprise there, right? So let's take a look at a couple of stocks in each sector and see if there's anything going on. First one is Freeport-McMoRan. Looks pretty good. If you look at the 1-year graph, it came down, and look at it on the 5-year graph, came right down to support. So this was the area it had to hold. So far, so good. It went underneath it. They do that sometimes. Look, they did it here right before they took off, right? So they do that. It's called, I call it goosing the market. So anyway, the fact that it's above the blue line, that would be my pressure point. That's $57. So you have $59. Keep an eye on it. It could be a decent thing. The other one in the material sector that I looked at was Dow Chemical, and this thing here is in this gold line area. Used to be 42. Not that exciting a stock. Again, the materials, if I look at materials, I generally go at XME. And again, XME is down here where it might stop as well. It used to be 135. Now it's down at 100. Look at the 5-year graph. Could go way, way down. So again, materials doesn't click with me too much. If I had to pick one, again, Freeport-McMoRan, which is basically a copper company, that is the one that I would focus on. And it looks best technically as well. Plus, like I say, 57 and 59 is not too far from the exit. On energy, these are the ones I talked about, and I had them last week, and I talked about them on Monday. And these are the ones that hit their pressure points. So we'll have to see if they can hold. But this was the place right there, 105, where it should have held. Is there more future to it? There could be. If the war escalates and the oil prices revert back up, let's take a look at oil so you know what I'm referring to. Yeah, you see, this is oil. Remember, like I told you, it was going to come down and fill the gap down here, which it did. Let me show you the 5-year graph. You see, it came down, filled the gap, right? And now it's back above purple. So as long as it can stay above the number of 72 and 71, that's a positive thing. Okay. If we can get above 80, then it's going to be more serious. So those are the numbers right now that I'm looking at. As you can see, this is the neighborhood where it would hold. If it doesn't hold, oil could go anywhere it wants. I mean, if it starts getting underneath 65 and 60, you got the abyss underneath, right? You got the abyss. But right now, this thing is holding the RSI number here. This thing is holding the lows here. Where's that low come in? Comes in at 65 bucks, right? So that's where you don't want it underneath if you're bullish. And then again, closing back above the blue line at 73 would be very helpful. And we're very close to doing that. So again, that's called reversion to the mean. And that's where I come out of the woodwork and go, hey, I like cheap prices and I like when the thing is sold out because all these people that are short are going to have to cover some point. And there's somebody who's a value guy who might say, you know what, these companies make money, win, lose, or draw. Let's give them a shot here because they're on sale. So keep an eye on all these things that I'm mentioning and see what you think. You got ConocoPhillips, of course, we just mentioned, and you've got Chevron, Exxon, you know, that again has a lot of support, as I said, about 160. So if it's going to bounce out of here, this would be the neighborhood. So there's a couple there. And then you got those servicers. And on the service front, you've got Halliburton. Again, right on the number there on the 20-year. You don't want it underneath 31 bucks. And on the 5-year, you see it's had a reversion and it's fooling around right around blue. Blue comes in at 34 bucks. So we're right in the neighborhood. We're right in the neighborhood. If they're any good, this is the neighborhood. If they're no good, they're going to crash from here. The other one's Schlumberger. And there's others, but I'm just naming. So you see, this is they're at very key points. And when they're at key points, that's when I like you see it was a key point right here. A great place to take a shot. Right? Great place to take a shot. Not as good. This thing doesn't have the same technicals. See, this thing had the red line going straight up and it was just coming out of the chute. So this does not have the same technicals as we had here. But that doesn't mean it can't have a bounce off of this area. And like I say, this week alone from last week, those options on the short term did expand dramatically yesterday. And of course, if you faded into that strength, you were very happy because today you can buy them back cheaper. Okay, so that's the second one, the energy. Also LNG. Don't forget LNG. Nobody talks about it, and you'll see right here that it did its thing, right? It did its thing, and now it's on the upswing. So I don't know if this thing's going to start taking off, but the people who bet it would when it hit my lines, they're making money right now. Again, 225, 230, already at 260. All right. And of course, Williams Company is another one that does this stuff. But yeah, see, Williams Company is another one that's kind of hanging in there as well. All right. Now, the other thing I wanted to talk to you about is information technology. Now, again, reversion to the means occurred, right? This is called a reversion to the mean. So if you bought it on the drop here, use this number here, again, comes in around 814. The low was 950. You go down here to the 1-year, it's back above blue. That's a good sign, right? Because blue is rising. And so that number comes in at 980. So you want this baby to stay above 980. But what I would be doing now if I had an interest in these stocks up here, you see, I was very interested and I put them away down here. because down here is where you'd make, a better deal. Plus, even over here, I had them on my alerts at 135. So obviously this thing is way advanced since then. So, this is really not my cup of tea. But if I was in it, I would measure this thing here, which says RSI was 82. Watch this, 82. Then we make this big new high and RSI is at 58, right? Or 60. Okay, now RSI is coming back to 51 only. So if we go back up here fast and the RSI does not take out that 80 number, I would say that this rally is weak and it could go way down again in the latter months after July. So watch this thing very closely. And those people who are looking to buy out of the money put options that might really come home to roost. If this thing had a big correction later in the year, because it had the rally up towards the high and the RSI lag, this could be a great thing to keep an eye on. And of course, not only this, you'd also keep an eye on SanDisk, and you'd also keep an eye on Seagate, okay, and all the rest of them. Okay. Advanced Micro Devices, of course, had a nice little bounce here. Again, you come down to the reversion. This is called reversion to the mean, just like here. If you took your shot at 500, you're not very unhappy right now. Again, but if you try to buy it now, it's already moved, the options are already up, and you missed the boat. So that's why you got to be vigilant. And that's why it takes me a long time to find things that have had the reversion or are having a turning point. Because like I say, I specialize in options in the $200 range, and you can't get $200 options very often in any of these volatile companies unless you get them at a turning point and or a pullback to the mean. So let's take a look at a few news as much, and they've had some reversions. This is a chip manufacturer, and it's called Global Foundry. Had a big run, came all the way back down here, filled all the gap there. There's some more down here, but it looks like it's trying to bounce. And Taiwan Semi has earnings next week. So if their earnings were fabulous, maybe the other companies that are doing the chip manufacturing would do well. Um, so again, keep an eye on this one. Qualcomm is another one that had a nice correction. It does deal in the smartphones, which has a bad rap right now, but it did have the correction down here. And of course, down here was a good place to take a bite because it's already $20 to the plus. And then, of course, I think on the 5-year, it came right down. So 170 was your neighborhood. You see, 170 was your neighborhood. And right now, it does look like it's in the bounce back phase. Another one was Marvell, whatever you call it. Another one had a right to the number, right to the number, right to the number. And then, of course, it's bouncing out of there pretty good. I think even in the 1-year, it might have done the same. No, but if it can get above here, then you're back in a little bit of a green light area, and that's above 254. So keep an eye on it. If it gets above 254, that'd be very constructive for that. And then, of course, the one that I mentioned and the ones I've been, talking about is this thing had its correction, and it should come out of here if it's going to come out of here. The 5-year graph right there. I mean, if this thing breaks, you can see there's a big window underneath. So you got to be careful of that. And so that gives you a couple of things. And then I went bargain hunting on a couple of Chinese stocks last week, and they really are paid off nicely. This is called Alibaba, and it used to be 190, and it goes down to 90. I say, let's take a shot. And again, I looked at my short-term graph. I got the buy signal at 98, 96. So that was a good time to do it. Might have some trouble here, but again, it is a company that is their lead dog. Here's another one, Baidu. Again, I'll show you on the chart here. It came down to the purple, took a shot, and there you go. So that was a couple of Chinese stocks. And last but not least, I'm going to give you this one here, and then I'm going to explain how we could have a relationship. This is called Kratos Defense, and it's right on the line down here. So if it's going to stop, this is the neighborhood where it could stop. What do they do for work? There it is right in front of you. It's a technology company specializing in national security, defense, commercial satellite systems. All sounds like good stuff. And it has aerial drones and hypersonic systems and satellite communication software. And on Q1, their revenue was up 22% year over year. So what does that mean to me? It's worth a look. And to give you an idea, if it was going to stop and have a bounce, this is an option that would be of interest. So keep an eye on this option here. It is the August 21, and it is exactly $10 out of the money. And it goes for, well, last trade was 235. So it's a couple of $100. If the stock had a big move in the next month because we need more drones or whatever, there's plenty of room for it to grow if we had a nice jump. So keep an eye on it to see if there's something there. A lot of the other defense contractors, are getting a little bit of a bid because obviously the war's picking up steam quite a bit. Okay. What I'd like to do now is to give you a introduction to giving me a call. I'm Jim, the option professor. And again, each week we give you an alert and you get a options course from us. And also you get my cell number. So subscribers can text me a question and we can talk one-on-one. And also they can text me to see if I've seen anything that's not on the alerts that might be interesting as well. So you get a one-stop shop here. You get a course on options for free. That's $395 for free. Then you get alerts every Sunday night in your inbox. And finally, you get coaching, which is where me and you talk directly. And you give me your questions, you give me your ideas, you give me the ideas you're hearing from other people. And again, I can give you my insight into whatever you're looking at or whatever you have questions on. And I've been doing this for many, many decades. It's been my whole career. So I hope you do take advantage of that. David says there's people coming in at the top. He's going to put my link up there, I hope. And then, of course, you can contact me at optionprofessor@gmail.com. Good luck and good trading, everybody. I'm going to turn it back over to David if he's ready.
Yes. Thank you, Jim.
Okay. Have a good day, everybody.
All right. Thank you to Jim, the option professor, for doing that quick market outlook update for us to kick off the day. And yeah, Matt, you should be able to share your screen now.
Okay, you got my screen?
Yes, looks good. All right. And are you ready to start?
I'm always ready, man.
All right, awesome. All right, so just a reminder for everyone, I am live streaming this to YouTube, so you can if you need to leave the Zoom room for any reason, you can still watch there. Also, I am recording each session individually, and the individual recordings will be on YouTube as well later this evening. So, all right, here to officially kick off the day for it is Matt Buckley. And Matt, I'm going to start my recording again in just a second, and then you can start your presentation.
Full hour, David?
Yes. Yeah.
Okay. Ready to
And
go.
all right, I am recording again now.
All right, ladies and gentlemen, good morning, good evening, I guess, or good afternoon, depends on where you're joining us today. I'm extremely fired up to be here. We have a lot to talk about. I'm going to exercise a pilot and command decision. I'm going to mention it in passing. Investing in potentially one of the most explosive sectors where you can potentially profit, and not only profit, but potentially help save and change the lives of your fellow human beings, which is just an incredible sector and opportunity. And that's the psychedelic sector. Now, some of you might be like, what? Joined a live trade brief and this guy's going to be talking about psychedelics. Well, trust me, I'm the last person on the face of the planet who you would think would be talking about psychedelics, but that's part of the what I want to talk to you about. But first, I'm going to step through some other trades because there is a lot going on. Like I said, I was scheduled to talk about psychedelics, and but there's so much going on in the span of 24 hours, 48 hours. Now we're back in Operation Epic Fury, and shooting and other stuff going on. So I'd like to talk about that, and potentially profiting off of some of that bad. So let's do that. I'm going to save some time towards the end to definitely talk about psychedelics because it is the most explosive sector. Big Pharma's terrified. Uh, the names are exploding. Before I forget, I'll just give you a couple. So as you're sitting here, Definium, DFTX. It used to be called MindMed. This stock, ladies and gentlemen, was a $20 stock a month ago. It ripped all the way up to almost 50, and it's going to keep going even higher. Compass, let's go take a look at Compass real quick. Similar to, let me look at a 6-month chart. Folks, this was a $5 stock a couple months ago, all the way up to 15 bucks. These names are going to rip. And the third one we'll talk about eventually in a little bit is a tie. $3.50 stock, almost essentially doubled recently. How do I know what I'm talking about? Well, folks, I'm the chairman, the founder of the No Fallen Heroes Foundation. We are a 501c3 dedicated to saving and changing the lives of our nation's heroes with psychedelic assisted therapy. Anybody in this room ever see the movie Lone Survivor? If you have, you know that guy right there, Marcus Luttrell. The movie Lone Survivor had Mark Wahlberg in it. He's a Navy SEAL. Marcus Luttrell, and obviously experienced a pretty significant tragedy. The guy right there, if I hover over that, let me just draw. That'll be easier. So that's Marcus Luttrell, Navy SEAL. If any of you drink Black Rifle coffee, that's Jared Taylor, JT. This is another Navy SEAL veteran who was a teammate of Marcus. And then if you're a football fan, this is an All-American from Iowa. His name's Robert Gallery. I think last year he got into the College Football Hall of Fame. He played for the Raiders for 8 years, and also I think the Patriots a little bit. So 4 veterans and an NFL player who was suffering from horrific CTE. I'm not going to give you my full life story here, folks, but I'll give you a brief life story. Sexually abused as a kid. Lost a sister to a drunk driver when she was 19, which I more or less lost my parents that night. They were done. So a lot of childhood trauma. And then what do you do with a lot of childhood trauma? You go in the military. I flew fighter jets for the United States Navy for about 15 years and graduated from the Navy Fighter Weapons School, many of you know as Top Gun. And I flew combat sorties over Iraq. Well, off the Abraham Lincoln, which is one of the boats currently over there right now. And in 15 years of flying fighters, I lost 16 buddies and I lost 4 to suicide. So about 5-6 years ago, I said, we need to do something about veteran suicide. And around that time, a buddy of mine said, hey, there's a group of Navy SEAL veterans that go down to Mexico and they do psychedelic assisted therapy. You know, a really cool group going. Would you want to join? And I said, man, go to Mexico and do drugs with Navy SEALs. It sounds like a great weekend. I had no idea what I was getting into. KD, thank you for sharing that. KD just wrote in the chat box, my son was killed in the Navy during Operation Iraqi Freedom. I am a Gold Star mother. God bless you, KD, and your son. And if I can be of any assistance, please reach out. We actually help. Let me give you my email, wiz@nofallenheroes.com. We help veterans, first responders, and family members, because obviously you served too, KD, to potentially heal. We actually have a retreat coming up this weekend down here in South Florida. So thank you for sharing that, and God bless you and your son and your family. So I'm here for you if I can help. We've helped a lot of Gold Star moms and dads, on a healing journey. I will tell you, this was not fun. This was not recreational. It was one of the most challenging things I've ever done in my life. I was on my back for 14 hours, man. I reconnected with my father who had passed away, with my sister. I was a drunk it destroyed alcohol in my life. So I got back from that retreat and I said, this is how we're going to end veteran suicide. So what's this have to do with trading? Everything. Could and I'm kind of an expert on this, man. I took that picture. I was in the Oval Office back in April with the president as he signed the executive order on ibogaine, which is the world's most powerful psychedelic that I took. So that executive order, let's go look at the stocks. Let's go look at the stocks, man. That's me going to the Oval Office. All of these names ripped. It's a funny story. Let me look at this. There is Wiz on Friday. Let me tell you the story real quick. You see that date? I'll never forget that date. So I rarely turn off my phone or my laptop. That week was a long week, man. Long week. And it was Friday afternoon, market closed. I'm getting ready to power down my cell phone. I never do that. And I get a call. The caller ID says White House. And I laughed. I'm like, what Pakistani, what Indian dude got that caller ID? This should be fun. So I answered it because I never had. Well, it was the White House. And they said, hey, Mr. Buckley, are you in Washington by any chance? I said, I'm in Boca Raton, Florida, man. God's waiting room. Why? Well, the president is inviting you to the executive order signing tomorrow morning at 9 a.m. in the Oval Office. I said, I'll walk. I'm going to leave right now and start walking. I'm going to hop in my car and drive to DC. But thankfully, thanks to JetBlue, I didn't have to do that. So I flew up that night and then walked into the Oval Office the next morning. Joe Rogan, RFK, the FDA commissioner, the NIH director. There's Dr. Oz. Now, to the right of the president was all my Navy SEAL brothers. And Marcus Luttrell, who I went to Mexico with. So the president of the United States recently ended the war on psychedelics. And I'm not being I had to learn a new SAT word when I got home. Ineffable. I cannot put into words what I experienced. I will fail you. About 4 months ago, I was up at Harvard. The only way I was at Harvard Law School a year ago, and then recently I was at Harvard Divinity School. There, I never thought I'd be at Harvard Law School unless I was the topic of conversation and a defendant, right? So I'm at Harvard Law School talking about these compounds, and then I was at Harvard Divinity School because this experience reconnected me with my God. And ladies and gentlemen, this is how we're going to end veteran suicide. We've lost about 7,000 Americans in combat after 9/11. We've lost 160,000 to suicide. So what's this have to do with trading? Everything. These names, ladies and gentlemen, are exploding because they heal. Now, some of you might be sitting there like, that's a rather strong word, Wiz. Hey, man, that's my word, and it did to me. To date, we've helped over 300 veterans, first responders, and family members, and all of them to a person would use the H word too. Guess what? Big Pharma is terrified. Why? Because Big Pharma needs what? Customers, don't they? Folks, they cannot have healed people, right? Let me go find, this is a cool image here. I should have had it up first. Here you go. Let's look at this. This is look at this. This is, where do I click on it here? Where's the bullseye? There it is. Ladies and gentlemen, this is the psychedelic sector drug development tracker. There are a bunch of public companies I'm going to talk to you about getting close to the bullseye. Compass is one of them I just mentioned. Definium is the other one, right? A tie's out here and so, but folks, look at who's in the middle right now, Janssen. Have you all heard of Spravato? Do you know how much Spravato brought into Janssen last year? In a year, $1.5 billion. What's Spravato, folks? It's ketamine, S-ketamine. Folks, so look at the pie here. Ibogaine, what I took, psilocybin, MDMA, and the different, and there's ketamine and 5-MeO-DMT. But this, let me give you this. This is a great radar scope. I was going to talk about my bullish on America trade, but I'm on a roll here. So I apologize if I seem scattered. When I start talking about this, I can't stop. So making money's great. Yay, I made money, but you're not a pharaoh, right? They're not going to put all your money and possessions in a tomb and so you can take it to the other world. So how about making money and potentially saving and then changing the lives of your fellow Americans? So the other day, so everybody got this drug development tracker, right? I'm telling you right now, ladies and gentlemen, there is no way the CEO of Pfizer, Moderna, Eli Lilly, Janssen, Gilead will let these psychedelic companies come in and more or less heal people, right? And I actually I'll give you a copy of this report. I just sent this out to my members the other day. It's our psychedelic biotech sector report. The four names that we're going to talk about right now, I cover in this report. Comp 360 is weeks away from FDA approval. This name just exploded the other day. Look at this. Look, this name, it sold off a little bit, exploded because they released another phase 3 trial. Their first phase 3 trial was in absolute insane results. If you didn't see this press conference with the President of the United States, it's worth watching the full, however long I was in the Oval Office. Why? Because this guy, it's so funny. He looked over his right shoulder at RFK and the NIH director and the FDA commissioner and said, fellas, SSRIs, how effective are they? And they all shrugged and said, single digits, Mr. President. In the executive order that he signed, that he's holding up right there, he cited the Stanford Ibogaine study with 30 Navy SEALs who did Ibogaine. 85% of those men were clinically healed. I want to pause for effect. Antidepressants, SSRIs, single digit effectiveness. After the president looked at these men and they shrugged and said, Mr. President, those things don't work. They actually do more harm. He looked over his left shoulder, and just out of my picture I took are all the Navy SEALs. And he looked over his shoulder and said, hey, fellas, how about you? All of you guys know Rob O'Neill, right? The guy that killed bin Laden. He was there. My buddy Marcus Luttrell was there. His brother Morgan Luttrell, Congressman Luttrell. Marcus and I got back from Mexico. His brother, twin, also a Navy SEAL, combat vet, a lot of trauma, looked at him and said, man, you look different. And Marcus said, I am born again, man. So Morgan went to Mexico and did it. And when you hear Morgan tell, here's Morgan's debrief of his experience. I got hit by a bus driven by God. I never want to do it again, but it saved and changed my life. So when the president looked over his left shoulder at them and said, fellas, did it work for you? To a man, and I'm over here, I took this picture. I was just out of the camera view. I really don't care. They wanted all the Navy SEALs up there. I'm just a lowly fighter pilot. Folks, this is explosive. You will wake up one day, God willing, in the future. Breaking news, Compass Pathways was acquired by Pfizer and for $100 billion. Look at what happened a couple years ago. I think it was 1 or 2 years ago. There's a company called Gilgamesh, right? It was a private company. I think I have it. It's somewhere in this report right here. But AbbVie, big pharma company, came in and bought their single product line. They didn't buy the entire company. They bought the one product line for $1 billion. So big pharma is starting to wake up. Oh, here, why don't you scroll down a page, Wiz? Big pharma made its bet. I'm wrong. I got it wrong. It was $1.2 billion to buy Gilgamesh Pharmaceuticals' lead depression asset. It was a fast-acting DMT analog. Wow. And I just told you this. J&J Spravato crossed 1 billion in annual sales and is tracking toward 2 billion. So I'll give you a copy of this report because I go into Compass and Definium right here. It used to be called MindMed. Look at this. I told my members, they gave us a date. Hey, by June 30th, we're going to release another phase 3 trial, right? What's MDD stand for? Major depressive disorder. Do you know how many tens of millions of Americans suffer from MDD? What did the stock do? Let's go look at Definium on June 22nd. And you didn't miss this, folks. Like, well, Wiz, they already popped. It hasn't even started technically. There's June 22nd, folks. The stock went from 25 bucks and almost hit 50. It doubled essentially. Look at that. I gave members dates. Well, I'm not going to do it right now, but I have an entire Dropbox folder of screenshots from my live trade briefs of people who paid for a lifetime membership just with their Definium profits. Actually, I'm going to take some time to show you that because it's pretty damn cool. Max Afterburner. I'm going to show you lifetime case studies. Let's go find some Definium. Here you go. Here's a couple Definium trades. Bob. Look at this. Wiz, thanks so much. I've been in Definium since $5, holding the options, 700% gain on my position. What was the 700% gain? $273,000. One of my members made, listening to me. Wait, here's some other ones though. Dwayne, I closed too. Tick means trader in command. That means, you know what? I closed this because I'm the trader in command of my own portfolio. He opened 10 contracts back in July at $10 on Definium. Closed for a 1,300% gain, if you allow me to round up, 26 grand. Brent, he got into the Jan 27 synthetic stock. I'm going to show you how to do synthetic stock right now. Up 12,500%. Remember, folks, if you just trade stocks, you have no idea you can do these type of percentage returns. This is what we do in options. That one is up about 6 grand. This doesn't account, he bought some shares too of Definium that are up 800%. Those are up 20 grand. So folks, the synthetic stock I'm going to show you in Compass or Definium is the way to go right now. Let's go with Compass. And if I don't have time to get to my bullish on America trade, I'll give you that report for free too, because I don't like saying I'm going to do something, I'm not getting it done. But I am on a roll right now because I love this. So let's talk through options. Okay. If you're new to option, you know what? No, I'm going to start with Definium and then go to Compass. Sorry about that. Because I want to show you the power of options. What do I mean by that? If you want it, Wiz, I'm sold. First of all, I want your psychedelic sector report. I'll give you that for free. But man, I'm going to go buy 1,000 shares, or let's just start with 100. I'm going to buy right now, Wiz, 100 shares of Definium. You're right. The FDA, most likely, ladies and gentlemen, sit up straight when I say this. The FDA is most likely going to get an NDA from Definium in Q4 of this year. What's an NDA? Non-disclosure? No. New drug application. I was in the Oval Office with Marty Makary, the FDA commissioner, who said, when we get that, give me a day or two and it will be approved type of thing. He said, this ain't the old FDA. We're not taking a year, 2 years to approve something. He brought up the AIDS drugs and even COVID. He's like, when this country wants to do something, we move. Marty Makary promised, and it's called a rolling NDA. Compass, ladies and gentlemen, has a rolling NDA. What's that mean? The FDA is like flying formation on this name, on these companies. Look at this. They have the Commissioner's National Priority Voucher, meaning the FDA can approve them in weeks, not years. Sit up straight, folks. I'm telling you, when you get a date, like they're most likely going to do this by this date, submit their FDA app, and the FDA is saying, hey, man, give me a couple days to a couple weeks, and there is a 99.9% chance these things are going to get approved. They will pop. One more time, I'm going to show you the chart of what happened. I told my members, I'm like, we have a date. They said by the end of June, they're going to release that the data from that their most recent phase 3 trial. They released it, and the stock went up 50% in a day. I mean, it closed only up 45% with exactly. And then it kept ripping, ripped, hover, and it's going to keep ripping. Okay. So back to what we're going to do. If you wanted to buy 100 shares of Definium today, you'd be spending $4,700, right? That's not an insignificant amount of money. That's why I don't trade stocks. Trading stocks is for chumps. Let me show you how cheap you can get it. I'm going to fly in my time machine all the way out to January of 2028. Why? Because I want to give this trade as much time as humanly possible to work. Okay. We're currently at about, let's just round up, 47 bucks. Okay. Now, if you know nothing about options, you've probably heard this. Well, I'm going to buy some call options. I'm bullish. Okay, awesome. You're right. Buying a call option is bullish. You think something's going to go up. Somebody has to sell you that call option. I think it's going to go down. So selling a call option is bearish, technically. Okay, there is calls in 15 seconds. Now let's go over to here. Puts. If you know nothing about options, you've also probably heard somebody say at a cocktail party, uh-oh, the market's going to go down. I'm going to buy some puts. So buying a put is bearish. But guess what? Somebody has to sell you that put, right? They are bullish. So there's your basic options in under 1 minute. So let's do this. We're at 47 bucks right now. I'm going to buy one Jan of 2028 47 call. It's $1,700. Would you rather spend 4,700 bucks or 17? Remember, one options contract controls 100 shares of stock. Why would you buy the cow when you can get the milk for cheap? Why would you spend 4,700 bucks? There is no reason for you to do that ever when you can buy a single call option. It's so ridiculous. I'm not done. I just told you buying a call option is bullish. What did I also tell you? Selling a put was bullish. So why don't we sell one Jan 28, same price, 47 strike put? Ladies and gentlemen, would you rather spend $4,700 to buy 100 shares? Would you rather spend $1,700 to buy a call option? Or would you rather spend 100 bucks today? Now let's go analyze this trade. The first day you started investing, you know what that P&L diagram is. What is it? Long stock. It goes up 10 bucks, it goes up 10 bucks. Underneath that long stock, the top line, this is something called synthetic stock. We are synthetically long Definium. I get the same return, essentially. I get more return as if I bought 100 shares. Now, what does the word synthetic stock mean? It means I didn't buy 100 shares, so I don't get two things, and I don't care about the two things I don't get. What are they? The first thing, since you don't own the shares, is you don't get to vote. I'm fairly certain there are some hedge funds out there that have a little bit more than your 100 shares. Your vote means nothing. The other thing you don't get with synthetic stock is a dividend because you don't own the shares. Last time I checked, biotech companies don't issue dividends. So again, it makes no sense to waste money on buying 100 shares at Definium. But for the smart people, you just noticed, well, Wiz, the max potential loss is 4,800 bucks. What's the max potential loss if you bought 100 shares of Definium today? 4,700 bucks. You have the same risk as if you bought the 100 shares and the stock goes to zero. It's not going to go to zero. But I'm not done. What is a disaster? Well, How many times do you watch CNBC and the market's down 20%? What do they say? We're in a bear market, it's down 20%. Or if a stock implodes 20%, what do they say? Oh, Apple's in a bear market right now, it's down 20%. So why don't we buy what I call a disaster put about 20% under the stock, right? What's that, a 37-ish? I'm not good at public math. So what just happened? Well, the cost of the trade went up a little bit. It's still cheaper than buying the stock. It's still cheaper than buying one call option, right? Now you're up to 1,100 bucks. But watch what I did to the risk. Are you risking 4,800 bucks? Nope. I cut your risk in half. Again, rhetorical question. Why would you buy 100 shares of Definium today and risk 4,700 bucks when you could risk 2? Now, I'm not done yet. I got more magic to do. So on your screen right now is a tactic. There's no such thing as option strategies. If you ever hear a stupid instructor use the word option strategy, run. A strategy is high level. Saving for college, buying a boat in 6 months, managing risk, income generation. A tactic, synthetic stock, supports a strategy. As a military man, it makes my skin crawl to hear people say option strategy. It's incorrect. So on your screen right now is synthetic stock with a protective put. But I'm cheap. Here's what I'm going to do. I'm going to go to the front month. What's the front month? You're sitting in the front month, July. And I'm going to sell in an upside call against this name. I could sell a July 26th, that expires when? 1, 2, 3, next Friday. I could sell a July 26th 47 call and bring in, do you guys, everybody see this? What's in between 220 and 165? I don't know. I can bring in 200 bucks. What did I just do? I reduced my cost basis to 800, and I'll round up, $900. Ladies and gentlemen, on your screen is synthetic stock with a protective put, and I'm selling a call against it to bring in some coin. If Definium never moves again and it just kind of hovers, you could completely pay off this trade in what, 4 weeks? It's free. So now you know why I see the percent. I just showed you some of the percentage returns from some of my members, folks. Isn't this awesome? Now I'm showing you just one contract, but I'm going to show you a ratio spread. What's that mean? You know what, Wiz? I love what you're saying about Definium. It's healing people. It's going to get bought by somebody. So if you think it's going to get bought, watch what I'm going to do. How about we do 10 contracts in the synthetic stock trade? Well, would you sell 10 against it? No, I wouldn't. I would only sell 5. Why? Because I just told you. What if I wake up tomorrow, God willing, and breaking news, Pfizer acquired Definium? The stock's going to rip 50 to 100% or something like that. I want to leave 5 of these calls naked, for lack of a better word, to rip. Okay? I currently, I think I have one of these on right now. Right? Yeah, I placed this the other day. It's called a ratio spread. So I did 5, 5, 5, and 3. So I'm leaving 2 calls essentially open to run in case the stock rips. This is the trade I would do right now today for Compass on your screen. That's Compass, right? We were just talking about Definium. I did something similar with Compass at the $10 strike and protective put in 13. So instead of wasting time building a whole new Compass trade for you, and don't forget, if you're on a Windows, you can hit the Windows key and print screen. You can grab, I'm a nice guy, man. I'm giving you a ton of stuff here on trades that I would do in these psychedelic names. Okay. Something like a tie. Let me go ATAY. Uncle Wiz has an SOP. I do not usually trade options on stocks under 10 bucks. Why? Well, that's the option, right? I mean, $5 is almost the options premium here, right? So I sometimes, I'd say 90% of the time, if a stock's under 10 bucks, I'll just buy the stock. These names are my exception to this rule. Okay. And look at on this screen right now. Let's just go look at something. Somebody out to January of 2028 is very bullish in a tie in the 12 strike, and we're at 5. What percentage return would need to get up there, man? So you could do something like that. Just, you know what, Wiz? I'm going to buy some lotto ticket calls. I'm going to buy 10 of these Jan 28 12 calls and put them in my filing cabinet. You could do something like that, right? So with stocks under 10 bucks, if I am going to trade options on them, I usually go out of the money lottery tickets. But again, this right here, folks, it's all detailed. Let me scroll down to a tie in this report. Where's the tie? I think it's my number 3 name. There you go. Folks, and there are some serious names in here, right? Why did it pop recently, Wiz? Well, about a week ago, 2 weeks ago, it popped because it's getting added to the Russell Index. On June 8th, about exactly a month ago, H.C. Wainwright reiterated a buy with a $25 price target. They have their own medicine. I don't call these drugs. These are medicines. Medicines heal. Drugs are for customers. BPL 003. It is going to, man, well, you can read this. Again, I'm not going to sit here and read all this stuff, but man, I give you all the intel in here. 14 analysts carry a strong buy on a tie, and the price targets are insane. Okay. So again, I'll give you this report so you can read this on your own. The final name in my basket of psychedelic stocks, there's 4 of them, is Help. Helus is Heal Us, you get it? It's Helus. It used to be called Cybin. This is another one that I would buy with both hands today. They have their own. What's GAD stand for? Generalized Anxiety Disorder. So they have something that can treat GAD and also MDD. You are living, ladies and gentlemen, in the most radical time where big pharma is potentially disappear. All of these products, God put on this planet for us to heal. Not some SSRI, not the. You ever listen to some of these drug commercials where the guy talks for like 1 minute straight about all the side effects? Hey, this will help you feel better. You might want to commit suicide. You'll feel sick. These do not do that. When you get a chance, go read the Definium recent report and the Compass recent report. No side effects, no adverse events. Nobody wanted to kill themselves. This is insane. Okay. So you're going to remember this brief one day. You're going to be like watching CNBC and breaking news. Ty Beckley was bought by Janssen for $1 trillion. And you're going to go, son of, don't do that. Get into these names out. You know what? Let me give you the link before I forget, because I am going to move on to my bullet. Any questions on the psychedelic sector? Because clearly, as you can tell, I am very passionate about this sector. TTA. So I'll give you this. You can get the psychedelic report. I'm not going to sit here and read that whole report. It's chock full of intel. Okay. And we're going to talk through the bullish on America right now, this other report, because that's my other explosive sector. Okay, we're at the halfway point, or just past the halfway point. Going once, going twice. Any questions on the psychedelic space? If you want to check out more, why are those links dead? You can go check out my Instagram. It's full of, I'm very passionate about this, so it's full of content about the psychedelic space and everything that's going on. I'm honored and humbled to be able to be doing this work. Um, Look at that. This is just absolute insanity. Nearly 1.2 billion people live with mental disorders globally. Look at so mental disorders. Look at this. And teenagers. So we can fix this stuff, folks. We can absolutely fix all of this, and potentially with compounds that somebody put on this planet for us to heal. That's me. Well, that lead picture is me lying on the bed in Mexico on a mattress where I died. I essentially died on the floor of a home on a mattress in Mexico, and I thank God that I died that day. All right, going one. And for more information, you go to nofallenheroesfoundation.org to find out what we do. All right, now I'm going to move on. Ladies and gentlemen, what happened on Monday, man? What happened on Monday? And I'm going to zoom in here a little bit. Trump accounts. Folks, and love or hate the guy, I really don't care what your opinion is. I care about making money. He rang the bell from the Oval Office Monday morning. Behind him were Michael and Susan Dell. They donated $6.25 billion. These Trump accounts went live on July 4th. Then what happened? Gwen Shotwell, the president of SpaceX, said, we're going to donate a share of SpaceX. I think it was 155 bucks on Monday, 2 million of them. Did you see a couple other CEOs are starting to come out of the woodwork? Meta and all these, Zuck and everything. Folks, 6 million Trump accounts already opened. $1,000. Wiz, why are you talking about Trump accounts? Ladies and gentlemen, that is forced buying of the S&P 500. Do you understand what forced buying means? When you have a government put underneath your position, it tends to make money. So let me pull up a chart of the S. Let me close this stuff. Get you a chart of the S&P 500, and look at the past 2 years. Both market pullbacks are Trump induced. This was the Liberation Day tariff war, blast everybody, and this was Epic Fury, the initial one. If you take out the two Trump-induced hits to the market, which way would we be looking right now? It moves up and to the right. Now, this was a Joe Biden bear market, folks. The beginning of 2022 to October, the S&P 500 went down 25%. We had 9.1% inflation. It was, I don't even want to talk about the bad times. But here's what I'm getting at, folks. What do markets tend to do over time? They move up and to the right. Now, I'm going to start at I love talking like this, at the turn of the century. Ladies and gentlemen, at the turn of the century, what was going on? A dot-com bust. What did the S&P 500 do, man? We imploded. I'm going to get to this blue line in a second, but let's just talk about the market. Then what happened? We recovered, and Wiz was in the board of trade. I was at ground zero, folks, for the GFC, the global financial crisis. I was in the sea, I ran over to the VIX pit when we hit 90 or whatever it was. I was at ground zero. What happened? Market imploded. We're all going to die. Nope. Right? Then what happened? We never looked back. It's almost like it's a hockey stick right now. We had a sharp pullback during the scandemic. We had a pullback during the Biden bear market. And then obviously I just talked about the Trump tariffs and Epic Fury. Does anybody see a trend? It's not a straight line, but the S&P 500 tends to do what? Over time, move up and to the right. Now, Wiz is going to talk about the blue line. What's that blue line? That's the Fed, baby. Back in the dot-com boom, what happened? Nothing. The Fed sat there and said, that's the stock market. What happened during the global financial crisis? George Bush initially failed miserably. His Treasury Secretary, Paulson, who ran Goldman Sachs, ran into the Oval Office. Mr. President, we have to bail out Wall Street or the country's going to implode and fail. Cats and dogs living together. Oh, I guess we better do that. What a dumb decision. I started the Options News Network, the CNBC for options. I remember sitting on the floor doing our shows from the floor of the CBOT and the CBO saying what? Don't do this. Things need to be able to fail. Oh, Lehman Brothers failed. Bear Stearns, good. If they failed, they should have failed. But no. Ben Bernanke, one of the worst Fed chiefs in the history of Fed chiefs, jumped in and did what? TARP, Troubled Asset Relief Program. Well, that's not enough money to keep bailing out Wall Street. Then what did they do? Come up with different words. Quantitative easing. Okay, well, all right, we recovered. Well, no, now we're going down a little bit. Well, it needs more money. We need to print more money out of thin air. All right, call it QE2. And then look at COVID, folks. Jerome Powell jumped in and dropped the biggest financial nuke ever known to humans and up. Now they're trying to look at QT, folks. What's that? Quantitative tightening. But ladies and gentlemen, what I'm getting at is everybody gets a trophy. Things can't fail. It's not going to be a straight line, but we are going to move up and to the right on the S&P 500. Period. Let's get back to my report and look at that image. Where's my S&P 500? Folks, we are at, let me look at my other screen. Let's just say we are at 7,500 right now. Do you think in the next 5 years that the S&P 500 could double? Yeah. Let's just round up. So we could hit, that green line is my bullish case for the next 5 years. I think by Dece of 2031, we hit 16 grand. Remember these numbers. I'll remind them of you. What if we just kind of suck? Our base case is 12.5. What if we have a Biden bear market again and blah, blah, blah? China invades Taiwan. The epic fury gets worse. Inflation, jobs, 8,800. But Wiz, sitting here today, folks, I'm telling you, my Super Bowl case is absolutely realistic. 22% return. If we return what we did, if you took out the Biden bear market, we would have averaged over 20% for the past 5 years. Right? So remember these numbers. One more time, I'm going to remind you, folks, it ain't a straight line, but markets tend to move up and to the right over time. Let me age myself a little bit here. I love this chart right here. Oh, the meltdown. Why am I going to use this one? Because a young ensign, Matthew Buckley, in 1991, started trading at Naval Air Station Key West. And what happened? There's the there's the dot-com boom. There's the global financial crisis. There's COVID. There's the tariff. Ladies and gentlemen, up here, people in the media were like, oh my God, the market's melting down. I'm like, what? So one more time, I'm going to remind you, markets, at least the S&P 500 tends to move up and to the right. So I'm going to show you right now, essentially what is a hedge fund trade. We go years into the future. I'm going to bring up the S&P 500, SPX. I don't trade SPY, folks. Let me give you, I'm not your tax accountant or your tax attorney. I don't play one on TV. But ladies and gentlemen, I get better tax treatment trading an index over an ETF. Do not trade an ETF, folks, when there's an index. Plus, the ETFs settle in cash. I'm sorry, the index settles in cash. The ETF can settle in shares. Anyway, but here are my current trades down here. Look at these. Do you think we can double in the next 5 years on the S&P 500? Yeah, I do. All right. Well, why don't we go look at buying a December of 2031 $15,000 call? Whoa, that's pretty expensive. It's 11 grand. Well, why don't we put a lid on it and sell a 16,000 call against it? Okay, well, that's pretty cool. It's only $2,100 then. Ladies and gentlemen, watch how much you could potentially make if my base bullish case hits. You ready? How many of you would spend 2,100 bucks today to potentially make 100 grand? I'm being quiet for a second. I want that to sink in. 98 grand. How many of you would spend 2,100 bucks today to potentially make 98 grand? Yes, me. Let's go with my Super Bowl. What was that? 22 grand? Let's look at the 18,000. Let's look at buying the S&P 500 18,000 call. Whoa, it's 4,300 bucks. I'm not done. Let's sell the 20 grand against it. Well, that's nice. That's 1,500 bucks. You ready for this? How many of you would risk 1,500 bucks today to potentially make, drum roll please, $200,000? If the answer is no, you're a fool. Ladies and gentlemen, I have a ton of these positions on, and so do a lot of other people. You see that? This is what hedge funds do. I don't agree with it, but I know. Look at Kevin Warsh, the new Trump's plant at the Fed. The dude wants to cut rates like you read about in Rate Cutting Magazine. When interest rates are low, stocks will grow. When interest rates are high, stocks will die. So, folks, and some of you might be sitting here like, well, Wiz, it's very low probabilities of these max profits. That's using at the money volatility in today's options. Where do you make money, folks? Let's bring up this chart. Where do you make money? Does anybody in this room have a broker who lets you trade off the left side of a chart? Of course not. Where do we make money? In the white. Today, we have to project our thoughts forward in space and time so we can place a trade today. And in this report, you can read here's all my bullish intel, right? And then as a fighter pilot, as an options trader, then what do? What are the threats? What's going to keep us from doing this? And I map them all out in this report. The inflation, SpaceX, Taiwan, China, blah, blah, blah. But ladies and gentlemen, if I'm somewhat right, and remember, in options, it's the journey, not just the destination. Let's say you did this bull. This is called a bull call spread. Wiz, I love it. I'm going to buy the 18,000 call. I'm going to sell the 20 against it. I'm going to spend 1,500 bucks to potentially make 200. Let's say I'm wrong. Let's say in the life of this trade, you see 16 grand down here. Let's say we only go up to right there, 16 grand. How much did you make? Oh, darn, you only made $77,000 on this trade. These trades, these bullish on America trades, are what we do in our AR, accelerated retirement portfolio, right? What if I don't know, we hit 18 grand on the S&P 500? Well, that'll be around $99,000. Again, I could pull up that Dropbox folder of my members with their bullish on America screenshots of how much money they've been making. Now, some of you, like Wiz, well, hell, if I'm going to put this type of trade in my retirement account, so you know what? I'm going to risk 10 grand. Okay. How many contracts gets us to 10 grand? Right there. 7. Lucky 7. How many of you would risk 10,500 bucks to potentially make, drum roll please, 1.4 million? I want this to sink in, folks, especially if you're new to options trading going, wait a minute, what is this sorcery? It's not. This is how you do it, man. This is how I've been doing it I've been trading since 1991, folks, and doing this stuff. So I love turning the light bulb on for people. Now, again, let's go with the destination. Wiz, I did the bull call spread, the 1820, and we only went up to, let's do 16 grand. And you got it wrong. We only went up to 16 grand. Oh, I'm sorry for you only making $544,000. Sorry. What if we only go up to 20? All right, Wiz, we only went up to Oh wait, no, 20 is max profit. We only went up to 18, I think I did. Yeah. Yeah. Oh, I'm sorry. You only made $665,000 on your 10. I'm such an idiot. Ladies and gentlemen, I call these our bullish on America trades. And I detail that. Well, I just showed you the damn report. I break it all out in here, man. The intel, the bullish intel, the bearish intel, the trades are listed right there, and with the screenshots and everything like that. So this is. Oh, and by the way, let me show you. I just posted on my homepage my Q2 results. Q2, my model portfolio, 80. If you allow me to round up, 84% return in one of the most volatile quarters since COVID. How'd the S&P do? 17. How'd the NASDAQ? Whoa, a whopping 23. How'd the Dow do? I don't care about the Dow. 84% return, folks. I just posted all my trades on the homepage. I am absolutely crushing it. Okay. So the same, I think it's on the same page I just gave you. And I think David's got the link, or I can give it to you as well. This is in our tactical trade alert service. Okay. Where is it? Top Gun options. So it's 90, folks. I don't drink anymore, thank God, because ibogaine destroyed alcohol in my life. But I used to say that's a crappy bottle of wine, folks. For a bottle of wine, you can get airborne in our tactical trade alert service. It's 97 bucks a month. I blast out 1 to 2 of these alerts per week. Okay, if you do the annual for 970, I'm going to throw in Options Weapons School. Options Weapons School, folks, is me taking 9 sessions to get you up to speed with trading options. So if you do the annual, I'm going to throw in something worth $497. If you kind of followed what I just did, like, okay, I get that bull call spread a little bit, you're perfect. Right? Even if you didn't follow it, I take a building block approach right here, folks. Not till session 2 do I even talk about options, man. Session 1's like, hey, man, this is the market. This is my 7-step trade plan. This is the basics of investing. Then I talk about calls and puts, and we take a building block approach. So one more time, if you do an annual for 970, I'm going to throw in Options Weapons School. You're going to make 497 bucks. But if you want to kick the tires, it's 97 bucks, folks. And you immediately get access to that bullish on America trade and the psychedelic report. Okay. And we have a ton of them. I have an AI sector report with all our trades in there as well. Now, obviously at Top Gun Options, we do live trading as well. But the tactical trade alert service is perfect for folks who, I want to read stuff, man. Wiz, I print this stuff out. I do too, by the way. And I grab my highlighter and do all this stuff. I talk about the recent jobs report, how bad news was good news, right? Isn't that funny? We're in bizarro market again. Bad news is good news. Why? Because an awful jobs report means the Fed might be able to cut rates. So all this stuff is in our tactical trade alert service. It's only 97 bucks, folks, and you can check that out, man. But we do live trading here as well, and that's in our full throttle program. Let me give you that link too, if /full dash throttle. I think next week, I think we're doing a full throttle. Yeah, I think, yeah. Oh, yeah, it's on the screen. Wiz, why don't you read? July 14th and 15th at 10 a.m. Eastern. I'm going to open up the doors and just do my regular live trading sessions, and you can come eavesdrop. That's where the Bullish on America report is, right? I just gave you that link, and you can download that Bullish on America report, which is right here. All right, I got about 5 minutes left. Questions, concerns, comments, smart remarks. So David gave you a link. I gave you a link, and I'd love to take your questions. But one more time, I'm going to repeat that the psychedelic sector, folks, even if you don't, because trust me, using the word psychedelic makes my skin crawl too. That's why I usually use the word entheogen. But we were lied to, man. We were lied to by Nixon and that whole war on drugs, man. It was an absolute lie. Who was it? Ehrlichman was his chief of staff or deputy chief of staff. He said before he died, of course, oh yeah, we during the Vietnam War, the hippies, we made psychedelics illegal because it made them free thinkers and love people. So we tarred them with the psychedelics, and then we tarred African Americans with with marijuana, so we could clamp down on both those subversive groups. Wow, wow. Let me remind you, folks, that the definition of a Schedule One drug in this country is no therapeutic use and a high risk of addiction. What did I just describe? Alcohol and cigarettes. 100% legal. The ibogaine that I did was anti-addictive. It destroyed alcohol in my life, and it was the most therapeutic thing I've ever done in my 52 years on the planet. But they're a Schedule One drug, right? So that's why the president signing the executive order to get moving on them is a big deal. Look at the harm scale, folks. The most horrible drug on this planet is alcohol. Harm to users, harm to others, like my sister being killed by a drunk driver. 100% legal. Let me end on this note, man. When I went to DC one time, a congressman who shall remain nameless, look at mushrooms down here, folks. LSD. Ibogaine's not on here because it's kind of brand new. It would be underneath mushrooms. You ain't going anywhere on ibogaine for a day and a half. And I, knock on wood, not too much harm to others. But folks, a congressman behind closed doors said, Wiz, I love what you're doing. I said, awesome. He said, well, you're going to have a problem with the big pharma alcohol and tobacco folks. And I was speechless. I'm like, what do you mean I'm going to have a what? Isn't that your job? So, folks, we are living in a new age of Aquarius, man. These names are exploding. Compass, look at them. Definium, Atai, and Help. If you want access to that report, I already gave you the link. It's in there. It's the /TTA. That stands for Tactical Trade Alert. And then this one, Full Dash Throttle, is the Bullish on America report. But take a look at these names, folks. I don't want to do a told you so. David, he does these every once in a while. If I come back a year from now or whenever and Definium's up 1,000% or Compass or Tie, I'm gonna say I told you so. Don't be one of those people that's kicking themselves, going, "Man, I should have listened to Wiz." With those psychedelic names, they are exploding, and I know for a fact because I know a lot of hedge fund guys. I know private equity. I know well, can't tell you everything, but I'm telling you that there are some explosive things about to happen in the psychedelic space. I mean, they're already happening, but things that I know with near certainty are going to happen in the psychedelic space that are coming. And I just told you in that document in the psychedelic report, you can see some of those dates that I dropped in there. Okay, so I'm a fighter pilot. I'm an options trader. I have to put the bomb through the target on time, and I'm going to do that right now. So everybody else, have a great rest of your day. Happy hunting. Make sure you're hedged, and fights on. David, thanks for having me, man. I appreciate it.
All right. Thanks, Matt. Great presentation as always. So thank you for being here. I'm going to put
You bet,
your
man. I'll see you
link
next time.
in there. Yeah, sounds good. All right, check out Matt's link there. And our next presenter is having some technical issues, I think, but hopefully he will be here in just a second. Oh, here he is. Zahir, are you there?
Hey, David, can you hear me?
Yes.
Fantastic. Yeah, apologies. I was stuck in some kind of cyber loop. I wasn't getting the Zoom link.
Yeah, that's weird. Yeah, we'll have to figure that out later. But all right, you're here now. So,
Absolutely. What do you want me to do? Should I just go straight into the screen share?
yeah, you should be able to share your screen now.
Yeah.
And um, everyone. I'd like to welcome Zahir Anwari of SublimeTrading.io. Someone we met recently, and I've seen his name on many other events over the years, but we hadn't had a chance to connect until recently. So happy to have him here. Welcome to Timing Research.
Lovely. Thanks for having me.
Okay, I see your screen now. Looks good. So I'm going to start my recording again in just a second. Oh, you're ready to start, right? Are you ready to start?
I'm ready to go.
Okay, I'm going to start my recording again, and then you can start your presentation. So I'm recording again now.
Lovely. Fantastic. All right, guys. Hi. Apologies for that, but we're here. We're ready to go. Once again, really appreciate the opportunity. Thank you to David for having me. So let's dive straight in. We're going to be talking about how to make 30% plus a year with one indicator that helps you find and compound high performing stocks. Ultimately, what we're going to be learning is a repeatable, rules based process for moving beyond opinions, stock tips, and market noise to building long term wealth. This should become clearer as we go along. Now, most investors are drowning in opinions, market calls, stock tips, crash warnings, AI hype, recession fears. It's ultimately noise dressed up as insight. I'm fairly active on LinkedIn, which is my social media platform of choice. Recently moved to YouTube, and the noise is pretty horrendous. It's really difficult to decipher what is good information to what is ultimately just people just trying to have something to say. And the more we move away from that and focus on a rules-based process, the better decisions one will make, and ultimately the better returns one will make. This session is about process. It isn't about predictions. It's about using the Sublime Trading portfolio process to identify high performing stocks and assets with repeatable rules. No day trading, because I believe that comes with some serious flaws. No top calling. We hear it all the time on the internet that the market is going to come to a crash. Yet all we see is the S&P 500 set record highs time and time again. We just have to go back to COVID. That's just been absorbed into the long-term trend. All the talk around Trump tariffs last year, that's forgotten about. We, of course, had the escalating situation in the Middle East earlier this year. That's all been absorbed into the market, and it just keeps on setting record highs. So we want to get away from top calling and align with the trend. We certainly don't want to be buying into the narrative of falling knives. We keep on hearing about how buying into cheap stocks is the way to do it. It actually isn't. Buying into cheap stocks is just really another word for catching a falling knife. And we want to move away from that. Instead, we want to use a rules-based process for finding strength, managing risk, and letting winning stocks and assets compound, because that's really the secret sauce to wealth creation. Now, this process that I'm going to share with you was really built from absolute frustration. In my early days, which is going back to the early 2000s, like everyone else, I was tired of shiny objects, which was often around day trading, quick wins, short-term strategies, which led to weak returns. A lot of conflicting opinions, because you'd have someone telling you to buy the euro dollar and then someone else telling you to short the euro dollar, and then strategies that basically look clever but fail to compound capital properly. And ultimately, all of this was going on while I had a career. I'm assuming everyone on here is a busy person. You've got a job, businesses, you're married, kids, hobbies. You've got your life going on, and then trying to manage and build a portfolio around that is actually quite straightforward, but not if you fall into the narrative of day trading and quick wins. It just doesn't deliver. So I ended up building a process that ultimately I wish I had back in 2007. So I've done all of the hard work here. I've decoded it. I built a process for busy professionals, and this is ultimately what I'll be sharing with you. So a little bit about myself. I started trend following in 2007. That was a real enlightening moment for me. Before that, I was day trading, as I said, swing trading, looked into the whole Warren Buffett value investing thing. It was all very slow and clunky. The book that changed it for me is Way of the Turtle by Curtis Faith. If you haven't read this book, guys, order it, push it to the top of your reading list. I am a big believer that reading is also a form of procrastination. You want to get away from reading as quickly as possible. You want to move into implementation, and good implementation through good training and good understanding. But a book to read is Way of the Turtle by Curtis Faith. It's a game changer, and it really put trend following back on the map for me. And it made me question, why is trend following not pushed as the way to invest? Why is value investing everywhere? Why is day trading everywhere? Swing trading, scalping? Yet we hear very, very little about trend following. And if you look at performance tables, trend followers have been at the top of performance tables for decades. So once I started looking into it, it made absolute sense to me. I've got a background in software engineering, which really fueled my love for the trading technology and the tools that I have built, because we are absolutely in the tech age, and you want to learn how to use technology correctly to build your portfolio. And I would not add AI into that. A lot of people now are turning to AI to compensate for skills that they haven't developed, and that's a dangerous game that you're playing. You want to learn to use the technology that's been around for decades. In fact, it's into, some of the scanners now that I'm using, they're into their 20th version. So these are really refined technology that a lot of people are still getting to grips with. Now, I was an English teacher, teaching English as a foreign language for 10 years, and that really helped shape me become the mentor that I am. So I went from teaching English into mentoring people into building their own portfolios. And the money that I started earning really came from my days in photography. I worked in advertising photography. Our images went on the side of buses and billboards, and that's really where the money started coming in for me. And when the money started coming in for me, that's when I started learning to invest it, and learning about the technology and going on this journey that I am on today. I co-founded Sublime Trading, which is our education platform, in 2018, and then the Reversy Fund, which is a Luxembourg-based hedge fund. So it comes with a lot of clout and credibility. You've got to have a track record to have any sort of hedge fund. That was incorporated in Luxembourg in 2023. Both the education platform and the hedge fund, they're built on the same process, which is ultimately to turn professional trend following decision into a clear, usable portfolio workflow. Now, over the years, I've been blessed to be able to have my message shared across all these wonderful platforms. One thing to note, guys, that I didn't work in the city, didn't work for my hedge fund, didn't work for an investment bank. I come from a regular background, software engineering, teaching English, photography, and through learning to invest my own money, I now have a hedge fund. So it's been quite a journey. It's been a 20-year journey to get to this point. But over that time, all of these publications have given me a platform ultimately to share my message. And I've got Timing Research there now in the top left corner, thanks to David, which I'm able to put on this badge as well. Now, we apply this process across everything we do. In Sublime Trading, that's the investor education. That's where we have portfolio training and also copy service support. We actually show our portfolio for our members to copy. And then the Reversy Fund is a professional fund management built around the same trend following philosophy. So we use the same philosophy across both, slightly tweaked. The Reversy Fund requires slightly tweaked risk management principles, but ultimately it's still the same philosophy of holding winning positions and compounding. Today, I'm going to show you why most investors struggle to build real market wealth, how we reduce thousands of assets into a focused shortlist of leaders, how we identify the highest quality opportunities before any capital is committed, and how a rules-based trend following process turns analysis into portfolio execution. I just want to show you a comparison table here. Let's say you have two portfolios running side by side. You put $20,000, £20,000, euros, whatever the case is, in a tracker fund, an S&P 500 tracker fund. And let's say you put $20,000 into a broker account where you find stocks that outperform the index. That means move further and quicker than the index. Let's say you have a 20-year time horizon. You'd add an additional $100 to the pot each month. And let's say with the tracker fund, you average 11%. That's being a little bit generous. I think over 20 years, you're likely to have 8% a year. But let's say you have 11% a year. And remember, that will be adjusted for inflation as well. And as I said in the title, we're aiming for 30% a year. That's what our audited track record comes in at for our fund. Guys, look at the difference in returns. With a tracker fund, you'll have around $250,000, which if you look at it in isolation is not a bad return. But as I said, if it's adjusted for inflation and if you're looking at retirement of 20 years at least, it's not a lot of money. Whereas at 30% a year, you've compounded to $4.5 million. Now, that is true wealth creation. Now, the difference isn't activity. The difference is a process, it's asset selection, and it's compounding. Learning these skills will deliver superior returns. And not only will it deliver superior returns, you'll develop a set of skills that you can then pass on to your kids and your loved ones, because the system is designed to keep us in a state of financial illiteracy. We go to school, we build careers, we go to work, and then what do? We all end up in the same process, in the same cycle. And ultimately, it leads to a lot of underperformance. So someone has to break that financial illiteracy loop, which has to be you. And then you've got to pass it down to your kids and loved ones, and they can then continue your hard work. And that's what Reversy stands for. The fund that we have is called the Reversy Fund. Reversy stands for Revolution and Legacy. So it's a portmanteau, beginning of revolution, end of legacy, Reversy. And that's the name of the fund, because those are the two things that we really stand for. Revolution in the way people are upgrading the way they invest, and legacy, well, everyone wants to leave something behind that's bigger than us. So Reversy is the name of the fund. The portfolio service is currently running at 290% in profit. So this is based on a £20,000 account, $20,000 account. That's really the minimum amount we expect our members to start with. Our copy service has been running since early 2023. That is now growing. That has now grown to over 290% profit in just over 3 and a bit years. So this really shows the power of just taking a few positions, holding and compounding. And those positions, those stocks that we invest in, are stocks that are outperforming the index. They move up quicker and further than the index. So the objective, again, is not more activity. It is a repeatable process that compounds winners over time. And in that same time, guys, the S&P 500 has climbed 100% in the time that our portfolio has climbed over 290%. So we're 3xing currently the index. So why most investors never build real wealth from the market? They do not lack information. We ultimately live in the information age, right? Going back to when we were kids, we had to go to the library to find information. That's no longer the case. Information is on our mobile phones. But the challenge now is filtering through all of that information, actually finding good, credible, actionable financial intelligence. That is what is lacking for most people. And ultimately, that means a lack of a repeatable process that survives noise, emotion, and changing market conditions. So here are the mistakes that people make. They chase tips instead of tracking strength. A tip gives you a name. I can take SpaceX, for example. Everyone is caught up in that SpaceX hype. Now, look at what SpaceX is doing right now. It's doing what any IPO does, which is it's ultimately swinging up and down. And it's going to do that for a very, very long time before it actually finds its footing. I mean, look at NVIDIA, for example. NVIDIA went sideways for 16 years from its IPO before it became the behemoth that we know it to be. It actually started trending in 2016, but before that, it went nowhere. It just went sideways. So that is the challenge for a lot of the SpaceX investors. They could see no return for a very, very long time because ultimately they were just chasing a name. What we're looking for is strength. Strength gives you evidence. Evidence can be scanned, it can be ranked, it can be filtered, and ultimately it can be acted on. Mistake number 2, they react to headlines instead of following evidence. This goes back to what I was saying at the beginning. Social media is awful for noise and headlines. And, even our media channels, standard CNN and BBC, it's just all noise and headlines. It's sensationalism. It's ultimately to get people on the wrong side of the market. Headlines explain what has already happened. That's the other thing. It's already been factored into the market. Remember, institutions pay a lot of money to get news early. So by the time we hear the news, it's already been acted on. So we don't want to copy the institutions. We don't want to chase headlines. Instead, we want to follow price action, because price action shows us where capital is actually moving and where the trends are kicking in. It's actually a far simpler approach. This is the thing. If we can identify where the money is, ultimately we are identifying where the institutions are. If we identify where the institutions are, all we need to do is jump on their back and piggyback the ride. So they're doing all the hard work. All we're doing is piggybacking the ride. So as retail investors, we actually have a huge advantage. We don't have any red tape to deal with. But because we don't have any red tape, people just end up being greedy and trying to outsmart the market. And that's where a lot of people fail. Mistake number 3, they confuse activity with progress. More charts, more alerts, more trades, more opinions. But after all of that, there's still no edge. You've seen those images of people sat in front of 6 screens, with multiple time frames and news feeds. And if you look a little bit closer, a lot of that is free charts, free news feeds. They haven't really invested anything into it. So it's really just a lot of noise across multiple charts. So we want to get away from that and ultimately bring a more streamlined, straightforward approach. Mistake number 4, they buy weakness and sell strength. This is what I said at the beginning, that catching a falling knife. Most investors are trained to hunt for bargains, cheap stocks, discounted stocks, undervalued stories. Warren Buffett is everywhere as this, this investing genius, which he ultimately is. He will always go down in history as a legend. But if you look at his performance in the last 3 years, it hasn't been legendary at all. He's been applauded for stockpiling cash when the S&P 500 has climbed 100%, and stocks like Seagate Technologies, which we'll look at in a second, have climbed 600%. So you've got to take all of that information with a pinch of salt. Sometimes these legends, they're kind of forced down our throats and people don't really question it. Appreciate other people's success, but always question what they are doing in relation to what the market is doing, and you'll then come up with a different opinion. The market rewards the opposite. It doesn't reward undervalued stories. It rewards strength that keeps getting stronger. That is why trend followers are found at the top of performance tables. Buy strength, sell when strength fades. It makes sense when you think about it. Most investors start with a ticker. Going back to the whole SpaceX thing, this is the mistake. A ticker without market, sector, and trend context is just a name on a chart. Our edge starts with the stock pick. You have to start with the market. You then have to look at the sector. You then have to look for the strongest stocks in the strongest sectors. Then you have to look at the setup. How are those stocks setting up? Because just because they're the strongest stocks in the strongest sectors, how are they setting up? Breakout entries, pullback entries. How is the trend unfolding? Then you have to have the right entry point. Then you have to, of course, consider the stop loss, because a stop loss is unique to each asset. Some stocks are more volatile than others, so they require a wider stop loss. Then we have to think about risk allocation. Then once we're in play, we have to think about compounding, because we want to add more of a winning stock. And then, of course, the exit management, typically a trailing stop loss. So there is this process that you have to go through. And there is there is very much an element of familiarization. It's like driving a car. Once you sit in a car for the first time, you've got all of these individual parts: the clutch, the brake, the gear stick, the steering wheel. You're looking ahead of the road. You've got your wing mirrors. You've got your rear view mirror. You've got all of these different individual parts. But once you get into the rhythm of it, you become one with the car, and you just end up driving it without really overthinking things. It's the same thing with investing. You've got all of these individual parts. You've got to learn them. You've got to bring them together, and then you just flow with it, and it just becomes second nature. The goal is not to predict the next move. The goal is to build a portfolio around strength and manage it with rules. An asset is never analyzed in isolation. A strong asset in a weak market is vulnerable. A strong asset in a strong sector has fuel. So step 1, market direction. Before we care about any asset, we ask, is the market giving us the green light? And to do this, we use the S&P 500. This is our indicator, our barometer, our thermometer of what the market is doing. If the S&P 500 keeps on moving up, we're in a bull market. It's as simple as that. And I'm going to show you how we do that. Step 2, sector strength. The strongest assets usually come from the strongest sectors. This is where institutional capital is flowing. And a good way of finding these is a scanner. If you use a scanner and you program the scanner to find stocks that are setting record highs and that are breaking out from sideways markets and that are breaking out from bull flags, you have a scanner that is actually showing you where the money is. Regardless of what you think or what you hope or what you want, you have to put that all aside. the beauty of a scanner is that the scanner will go into all 11 sectors, because there are 11 sectors. If you look at the internet, it's only ever big tech that people tend to talk about, but you've got healthcare, consumer discretionary, consumer staples, real estate, communication services. There's 11 sectors. So a good scanner will go in and scan all the strongest, will find all the strongest stocks in the strongest sectors. Click of a button. To do this requires a little bit of experience, and we have developed a two-tier filtering process. We do not jump from one ticker idea straight into a position. We separate discovery from decision making. So the two-tier process is this. Tier one is market scanning. This is where we use a scanner that we've programmed. It's a professional grade scanner. We don't use free scanners. I pay for my scanner because then I have complete control over what I plug into that scanner. Scanners that are free or scanners that are cheap are limited. Scanners that you pay for will give you complete control. So this is where the business mindset comes in. You have to invest to be an investor. People tend to just want to go for free and do everything on the cheap. And that can work to a certain extent, but I can tell you it will lead to underperformance. There has to be an element of investing to be an investor and to achieve that outperformance. So our scanner takes 20,000 assets. That's all the assets that we want. Now, I'm based here in the UK, but my main focus is the US market because of the age and the maturity of the market, the opportunities, the way it trends. The US market simply cannot be beaten. So sometimes I'm even 100% in the US market. It's just that it's well diversified across all the sectors. But when the UK market offers me good opportunities, I will take them. When commodities like gold and silver set up, I will take them. If any currency pairs set up, like right now, I'm monitoring the Japanese yen pairs. They're all starting to break out in trend. I will take some of those opportunities as well. So it is about diversification, but the US market is always my bread and butter. It's the spine, the heartbeat of my portfolio. The objective is to find where strength is appearing. So that's where the scanner comes in. And then tier two is where I do the manual analysis. So the scanner will typically give me around 100 to 200 stocks every day. So it'll go through 20,000 stocks and it will find the 100 to 200 stocks that meet my criteria. I will then do a manual analysis using bespoke charting tools that I've developed, and I will cherry pick the very best assets for my portfolio. And this will take anywhere from 1 to 2 hours on a daily basis at the end of the day. So once the markets close, I've got that time to settle down and do my analysis. Now, you don't have to do this every day. You may just do it once a week at the weekend, which is great because the markets are closed for 2 days. But this is a service. This is obviously something that I do for my own personal portfolio. This is the process that I've built over the last 20 years. It's the process that I use for my hedge fund. And it's also the process that we use in our copy service. So members subscribe to our copy service and we do this process for them on a daily basis, saving them money for the scanner, saving them 1 to 2 hours of scanning and analyzing the market. They get an understanding of what we're doing through instructional videos and educational videos, but ultimately outsource the process for us. We then share our portfolio and they copy the positions. So the second step, tier two, is we take that 50 to 500, typically 100 to 200 on a daily basis. We find the best 10 to 20 assets for the portfolio. Only the strongest setups move forward. Step three, relative strength. We don't buy cheap stocks. We don't buy popular stocks. We don't focus on opinions. We're looking for leaders that outperform the market, those stocks that are moving up further and quicker than the index, so we can move away from average performance to that 30% mark. Now, here's the thing. Every stock that I invest in goes through what I call the 4-phase sequence method, or the 4PS method. Think of it like a flight of steps. Every good stock moves up. Well, actually, if you think of it like an IPO, it IPOs, then it tends to go flat. Then it booms. Then it goes flat. Then it booms. Then it goes flat, booms, flat. That is what we're looking for. We're looking for a stock that moves up like a flight of steps over many, many, many years. So this is the pattern that I look for. And I'm looking for at least 5 to 10 years of history so I can do proper analysis. First of all, I want the stock to have a proven performance history. I want to be able to look at the history of the stock and see at least 12 to 24 months of a period of it going up 100%, 200%. Then I want it to go flat. This is that sideways market. Then I want that breakout. This is where the next trend is starting to appear. And then that phase 4, that is when I enter. So these are the 4 phases that I look for. So the scanning and the analysis, that 2-tier process that I just showed you, is ultimately applying this 4-phase sequence method for me to then shortlist all the stocks that are entering phase 4. So my portfolio is now loaded with phase 4 stocks, all the strongest stocks and assets that are in their new trend. Think about it, guys. All of this abides by the philosophy that we know. The trend is your friend until the bend at the end. The longer the consolidation, the bigger the breakout. So that phase 2 consolidation base is actually very, very important. I want at least 3 to 6 months of sideways market, potentially even longer. Think of gold. Gold went up from 2001 to 2011. That's that phase 1. Then it went sideways from 2011 to 2024, 13-year sideways market. Then it broke out in 2024 and it went on this massive run up until the start of this year. What is it doing now? Well, it's reset and it's now going sideways again. So the phase 4 has now reset to phase 1 and we're now currently in the new phase 2. So you can see how gold followed this philosophy as well. So what we're waiting for gold and for silver is to break out of this sideways base, which will be phase 3. We don't want to enter in on the first breakout because that could be a first breakout. We usually wait for the second or the third breakout. That's confirming that the trend is in play. And then we enter. And looking at gold, we held gold for 2 years. So it's worth waiting, holding and compounding these positions. And while gold is setting up, we've got all of these stocks that are already in play. So my portfolio already has opportunities based around phase 4 stocks while gold and silver set up. That's the hallmark of a good investor, knowing where the money is right now and not just looking at gold and going, oh my God, I want gold to break out. Stay neutral, stay detached, move to where the money is. Excuse me. Okay, step 5, setup quality. Never, ever, not every breakout deserves your money. We want the strongest assets breaking out from the cleanest setup. So that's what I talked about earlier. Stop loss placement. I mentioned before we care about how much money we make, we need to know exactly where the idea is wrong. So no stop loss, no trade. Every stop must have a trade. Every position must have a stop loss. To not have a stop loss is suicidal. The reason why a lot of people don't use stop losses is because they don't know how to. And because they don't know how to use stop losses, often they're too tight. And because the stop losses are too tight, they're constantly getting stopped out. And so when they get stopped out, they then think, oh my God, I've got to move away from this and not use any stop losses. But now you've got 100% of your account. So a good stop loss is one that doesn't get stopped out on normal volatility. But when it does stop, when you have been stopped out, the position has clearly failed. So there is an art to stop loss placement. And I'll show you how we do that. Risk allocation, we want enough size to matter without enough risk to become emotional. A good setup with poor risk is still a poor trade. I typically do not risk more than 2% per position. If you start risking 5, 10, 15, 20%, it's too much. You're emotionally invested. And that's why you then end up constantly looking at your broker app to see what's going on. You want to have a small risk diversified across many positions, a well-diversified portfolio, cut out of the losers, hold and compound the winners. And compounding winners is the real secret sauce. The real money is not made from being right once. You don't just pat yourself on the back and go, hey, oh my God, I've got a good stock, well done. No, it is made from adding strategically to proven winners and letting trends do the heavy lifting. So once you buy a stock, let's say Apple at, I don't know, $150 and it moves up to $160, don't close your position first of all and say, wow, that's good. And don't just watch it. Be strategic. Say, right, I'm going to add more. So buy another 1%. When it goes up to $170, buy another 1%. When it goes up to $180, buy another 1%. And manage your stop losses on the previous position so you're not adding any more risk. Once your new position has been triggered, move the stop loss to entry on the previous position so you're not actually adding any more risk to your portfolio. It's clever, right? This is how you compound your winning positions. We add to strength because the market is already proving the position right. Compounding, guys, is a must. It's an absolute must. And then finally, exit management. This is where most investors fail. They buy well, but they then butcher the exit. We use a trailing stop loss matched to the asset's volatility. The exit protects the compounding. So while we're compounding, the trailing stop loss is moving up as well, locking in profit. So we're simultaneously making profit while we're protecting our capital and protecting the profit that we're making. Okay, so knowing what works is not enough. Most investors do not fail because they lack information. They fail because they lack a repeatable execution process. Information is everywhere. Execution is rare. This is where most investors break down. They start with good intentions. Headlines get noisy. Markets pull back. Confidence drops. Rules get ignored. Profits get butchered. Without a clear strategy, behavior becomes the problem. This should be your weekly routine. Check the index. If it's moving up, you don't need to worry about anything else. Check sector strength. That's where the scanners come in. Run whatever scan you use. I call it the Sublime scans, whatever scanner you use. Review the shortlist from the scanner. Cherry pick the very best, confirm the setups, and then execute the strategy. Entry, stop losses, winners, and exits. And simple enough to follow, strong enough to matter. And that's the thing, guys. Simple enough to follow. Too many people are jumping around from one shiny penny to another, because the strategies that they're using do not deliver, they're not robust enough, and ultimately do not fit around a busy lifestyle. This system does all of that. Now, let's see the process in action. You've seen the workflow. Now, let's apply it to real stock examples. And for that, I'm going to move to TradingView. What I'll show you in TradingView, the one indicator that drives my decisions. And it'll be interesting for you to understand what I mean by the one indicator. Then we look at market, sector, stock. We look at the candidates, tier one. Then we look at the shortlist. And then we'll go through the whole process of how I go from setup to exit. Okay, so let's move across to TradingView. Yeah, we're halfway through. I've still got a bit of time. So let me just stop sharing my screen. Give me 1 second. Bear with me. Just gonna share. Okay, sorry guys, I couldn't find my TradingView for a second. David, could you just confirm that you can see my TradingView chart, please? I think you can see my TradingView.
Hey, oh yeah, I saw there were 4 charts up and now it stopped.
Yeah, how's that? Does that work?
Yes, looks good.
Okay, fantastic. Okay, so what we're looking at is the S&P 500. Now, before we get into that, first of all, I want to show you this list over here. This list were the list of stocks that were picked up by my scanner yesterday. Now, we know based on the S&P, the Dow, the Nasdaq, it was quite a quiet day on the indices. So because it was a quiet day on the indices, when I went to town with my scanning, there weren't a lot of stocks that were picked up by my scanner. But notice one thing, look at the names. I'm sure there are a lot of companies here that you've never even heard of. And me being here in the UK, this is certainly the case. And this is what's so fascinating about the US market, that there's so many stocks that when you actually start analyzing these companies, you think, wow, why doesn't anyone actually talk about these companies? For example, one of the stocks that I have recently added into my portfolio is Fortinet. Fortinet gets no media attention whatsoever, but look at Fortinet as a stock. Look how well it's performing very, very well, certainly since May of this year. And this was a stock that was picked up in May. It met our criteria, and we now have positions. So we've been holding this stock since around $120, and it's now trading at around $163. So this is the beauty of the scanner that we use. Now, every asset that makes it into the portfolio meets a 16-point checklist. Half of that checklist is done by the scanner. So there's certain criteria that the scanner can do. The other part of the 16-point checklist is where the manual analysis and these bespoke charting tools come in. So the sweet spot for the analysis is where technology and human expertise meet. You do not want to outsource all your thinking to technology, guys. Do not give up on yourself. Okay, so this is the list of stocks that were picked up from our scanner. Now, sometimes that can be 50, sometimes it can be 100, sometimes it can be 200. But let's start with the S&P 500. The S&P 500 overall is bullish. Now, in the top left, we have the monthly. In the top right, we have the weekly, and we have two daily charts, bottom left and bottom right. Monthly, weekly, and daily bottom left are my analysis timeframes. What I'm looking for, guys, the one indicator that I'm looking for is multi-time frame alignment. I want the monthly, the weekly, and the daily to be all confirming bullish strength. I want them all moving in the same direction. If the monthly and the weekly are moving up, but the daily is moving down, then we don't have multiple time frame alignment. We have something that is off. So we want all three time frames moving in the same direction. So that is the one indicator. Now, that one indicator is made up through a multitude of other indicators, which is where that 16-point checklist comes in. But I'm just going to give you a quick overview. On the monthly time frame, what I'm looking for, what I'm looking for is an overall bull trend. Particularly, I want it trading above the highest point of last year. So this green line, this is the highest point of last year. This red line, that's the lowest point of last year. So if an asset is below the lowest point of last year, it's a bear market. If it's above the high of last year, it's a bull market. If it's trading inside the annual levels of last year, it's a consolidating market. So if we just go to gold, for example, gold is trading inside the annual levels of last year, which is why it is in a sideways market. So when you have simple markers like this, you know straight away what kind of market you're dealing with, and you don't need to then bring your opinion headlines into your analysis, because the analysis is telling us exactly what we need to know. So monthly, the S&P 500 is moving up. It's above the highest point of last year. On the weekly, I want it to be above the 200 SMA, the 50 SMA. I have a trend filter, which is currently green. And on the daily time frame, it's above the 200 SMA, the 50 SMA, and the blue line, which is the 20 SMA. So above all three moving averages. Currently, the S&P is just flat. And the reason why it's flat is because it went through a big run from the low of March through to the high of June. After every move, there's a period of consolidation. When it goes through consolidation, we look at the markers. Well, the 50 SMA is holding as a support zone. It's pushing the market up. We're now waiting for that breakout. When the S&P 500 breaks out, that is a confirmation we're in a bull market, and we can then start going to town with adding more stocks and assets into the portfolio. Now, of course, there will be stocks leading the way that are already breaking out. Fortinet, for example, I will add those into the portfolio on reduced risk, say 0.5%. When the S&P 500 breaks out and starts setting record highs, then I would add positions at full risk, because I have the whole weight of the market in my favor. So there's these small tweaks that I make. But overall, guys, the most important thing to note is that the S&P 500 is bullish. If we look at the NASDAQ, same scenario. It's above the high of last year. It's above the 200 and the 50 SMA. Same setup on the daily in that it's currently flat. And then if we go to the Dow Jones is leading the way. It's a bull market overall on the monthly, weekly, setting record highs above the moving averages. And also on the daily, bit of a pullback. We're waiting for that breakout and a continuation. So overall, the indices are looking very, very strong. Now, one of the stocks that has been in my portfolio since last year is Seagate Technologies. And if I open up the monthly time frame, guys, you can see how far Seagate Technology has moved up since June of 2025, July of 2025, when I entered into this. So I've been holding this stock for a year now. And you can see that in the time that the S&P 500 has climbed 30%, this stock has climbed 690% to where it currently is. At its peak, it had climbed almost 900%. So if we can find these stocks, the stocks that outperform the index, and we only need a handful of these, and we hold and we compound these stocks, these are the ones that will push your performance from average or underperformance, which a lot of people have, to that of supernormal returns, outperformance. So looking at the weekly, look how well it's moved on the weekly time frame. Here's your 200 SMA. Here is your 50 SMA. This is where we entered back in June, July of last year. Look how well it's moved. Back then, it was around $130. It's now trading around $900. That $1,000 mark, as you expect, is a level of comfort. The stock will swing up and down around that price. Then it will settle down and push towards $2,000. Ideally, we see a stock split. We want this stock to come down to $100 like we saw on Nvidia. We want to have a 10-to-1 stock split, and then we want to catch it early, and we want to see the ride back up to $1,000. So in an ideal world, we see some kind of stock split. Whether that happens or not remains to be seen. Now, once that stock sets up, so that's, I just wanted to give you an example of a stock that is performing well, that has performed well. But a new stock is Fortinet. Fortinet, new stock that is in the portfolio. And the reason why I say that is because it's only started its new uptrend. So here is your phase one. Look at this period of trend from 2020 to 2022, 2-year trend, very clean trend. Here is your phase two. Phase three was the breakout in May, and we're now in phase four. Where is this likely to go? Well, looking at Seagate Technology, we got in at around $130 and it moved all the way to $1,000. This is still only $160. This stock has every opportunity of going to $500 and $1,000. So those are the levels that we want to envisage, not hope, envisage. Whether it reaches that remains to be seen, but there is every chance. All we need to do is keep following the process, which is buying, compounding, holding, and managing with a trading stop loss. Where are those levels? Well, that's where the daily in the bottom right comes in. Sorry, I moved a little fast there. Monthly in the top left, weekly in the top right, and the daily in the bottom left. These are our analysis timeframes. The daily in the bottom right, this is my strategy timeframe. So this is where you find my entry points, my stop losses, my trailing stop losses, my compound levels, and these are the levels that I move into my broker account. So if I just open up the daily in the bottom right, first of all, you'll see these little green markers. These little green markers, these are entry points. So every time there is a green marker, the software is saying that this is an entry point that you want to consider. So if we entered on this first marker, the following entry points then become compounding opportunities. So look how cleanly this is moving up. This is what you want to see in a good stock. A nice move up, pull back, move up, pull back, move up. Look at today's price action. This is Fortinet so far today, a big green bar. What we want is that breakout and continuation. Now, every time there is a green marker, these little green markers below the bar to say, look, here is an entry point you should consider, the software will produce an entry level, a stop loss, and a what I call a risk-free level. But ultimately, what I want to see is I want to see price hit this level. And then when it hits this level, I then wait for the next entry and I compound. So that's how I strategically compound. I give one position enough time to move. When it gets to that level, I then wait for my software to give me another entry point, and then I buy more of that. So this is how I buy, hold, and compound. And you see this red line at the bottom? This is the trailing stop loss appearing. So as the stop loss, as the stock moves up, the trailing stop loss is appearing. Now look how far away it is from the stock. And that's why I don't get stopped out on normal volatility. People have stop losses that are way too tight. And because they're too tight, they're getting stopped out regularly. And because they're getting stopped out regularly, they're not gathering any momentum. And then they think that the market is rigged or they're not very good traders. When in fact, if I can do it, you can do it. You've seen my background. I'm a regular person with a regular background who basically just wanted to do things properly and then figured it out, decoded it, and added the technology to create a system that worked for me. Fast forward to today, I have a hedge fund that has a 30% track record. And this is what I'm sharing with you guys today. So step away, slow down. Greed is not good, regardless of what Gordon Gekko in Wall Street says, right? Greed is good. Greed isn't good, guys. Greed is good when trends are in play and it's done well through good position sizing, compounding trends. But you do not want to just be greedy. You want to understand when to be greedy. You also want to understand how to execute greed. You also want to then understand how to protect your capital and stand aside when the markets tell you to. Okay, so let's just have a look at one more stock just so that we can... let's have a look at Delta Airlines, because Delta Airlines is a stock that recently emerged. And I remember Delta Airlines well, because Delta Airlines was one of the first stocks I ever really bought that did very well for me. And this is going back to 2013, 2014. Look at that trend. Very clean trend. But since then, it's just been in this massive sideways market. But look at what it's doing now. Going back to that 4-phase sequence method, I said phase 1, phase 2, phase 3. We're now in phase 4. And this is a cheap stock. It's less than $100. So this stock could break out and it could perform very, very well. This is a stock that could go on to $200, $300, $400, $500, maybe even $1,000. So this is what we want to be doing, guys. You want to be finding all of these stocks that have a history of outperforming the index, that are entering phase 4, take small positions, hold them, compound them, cut out of the weaker ones, and just repeat that process again and again and again and again. Okay. I am now just going to go back to my chart, excuse me, not my charts, my slides. Sorry, lost my wording there for a second. Okay, I think you guys can see my slides. So I'm going to just continue straight in. Right, so what you just saw, you saw how I used the one indicator, which is multiple time frame analysis, on real charts inside TradingView. I went through that whole process from market direction, sector strength, asset selection, setup quality, entry, stop loss, risk, compounding, through to exit management. So what happens next? Well, you can keep trying to piece the market together yourself, which is possible. I did it, but it will take you a very long time. So it'll take you time and it'll take you money. Or you can use a structured system that we've already developed to identify strength, manage risk, and compound winners. The wheel is already in motion. We've decoded it. We've created a system. It's now about you taking hold of that wheel and making it work for you. So what we have is the APL monthly subscription, a process-led portfolio workflow designed to help investors follow high-performing assets with clear entries, stops, risk, compounds, and exit. It's built for investors who want portfolio decisions, not predictions. So what you will get is full APL access and instructional videos. So the APL is our portfolio copy service. We call it the asset position log. You'll get daily portfolio updates. You'll get end of day position notifications. You'll get the entry, the stop loss, the risk, and the compound levels for every position. You'll get the exit management updates for every position. You'll have private community support, and you'll have onboarding support as well. So ultimately, every single move that I make in my portfolio, you'll have full understanding to it, and you'll have full access to the management of it as well. So stocks like Seagate Technologies, if you had joined our community a year ago, that would still be in your portfolio potentially today, 12 months on. So the APL monthly subscription is a monthly portfolio work for investors who want the process, the decisions, and the management framework. Now, typically, it's $249 a month. Using the code that I've created for David, use TR50, and you will have $50 off the first month. Come in, try it out. If you like it, you can continue. Now, typically, after 1 month, when members stay, what we want is our members to sign up for the year. If you sign up for the year, you get a 40% discount, reduction on the price. You want to give the strategy a chance. People who pay month by month always end up quitting because they're looking for a reason to quit. People who stay for the year and give the strategy a chance end up doing very, very well. But come in, try it out. It's $199 for the first month with a $50 discount using that code TR50. Go to apl.sublimetrading.io. Now, this is not just a spreadsheet. It's a spreadsheet that records information. The APL turns a process into portfolio decision. That is the difference. Data is useful. Process is what compounds. So this is what the APL will look like. You will get the date. You'll get the asset. You'll get the stock. You'll get the sector. You'll get the entry, the stop losses, the compound levels. There's a live data feed that comes in here. So you'll see the profit and loss of each of our positions. You'll see the risk allocation. You'll also see how old the trend is. A mistake that people make, you may be able to relate to this, is that you see a stock and you think, wow, I should buy that. And you just keep on watching. You keep on watching, you keep on watching, and you just see it going up and up and up and up. And then FOMO gets the better of you. You jump in and then it reverses. We want to get away from that. So this will get you away from that. We'll tell you how old the trend is. and whether it's a new trend, a middle-aged trend, or an old trend. So you'll know exactly when you should be getting in, when you should be compounding, or ultimately when you should be standing aside and waiting for newer opportunities. It's where the process turns into portfolio decisions. So who is this for? It's for investors who want structure, for investors who want to stop guessing, for investors who want portfolio decisions they can follow, for investors who want to build a serious long-term portfolio. It's ultimately for serious investors, guys. Serious investors, serious process. This is not for day traders, top callers, bottom guessers, signal chasers, anyone looking for a magic button. That's all over the internet. There will be someone who will try and sell you that. That's not what you're going to get here. This is not entertainment. And I think that's a mistake that a lot of people make. They look at this as entertainment. They look at it as fun. This is really your future and your family's future. This all goes back to that whole reversy piece, that revolution and legacy. The APL gives you the process investors are missing, not because it predicts the market, because it gives you a repeatable way to follow strength, manage risk, and compound winners. Edge is not a feeling. It is a defined process. And remember this, guys, if you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. So if you're consistently underperforming, you don't have an edge. And that really needs to be addressed. Please check out our Trustpilot. So just go to Trustpilot and look for Sublime Trading, and you'll see all the wonderful reviews, members matching our performance, a lot of 100% plus return on investment. So do check out our reviews on Trustpilot, something we are extremely proud of. These are all verified reviews. So before you go back to the noise, remember, most people will keep building opinions. You can actually leave and learn a process. This is the real upgrade. So once again, what you get in the APL, full access to the copy service and instructional videos, daily portfolio updates daily. So remember what I said earlier on in this presentation, we scan and analyze the market every single day. So you'll get all the opportunities that are setting up on a daily basis. Because we're doing all the hard work, which takes us 1 to 2 hours a day, it will take you 5, 10, 15 minutes at the end of each day to copy the portfolio. So you get all of the benefits of our portfolio without the workload, because you've outsourced that to us. But because of the instructional videos and the educational videos, you'll get full understanding of the process. End of day position notifications, entry, stop loss, risk and compound levels, exit management updates, private community to discuss your portfolio, and onboarding support. There you have it, guys. Once again, you can go to apl.sublimetrading.io, put in the code TR50 to get $50 off the first month at $199. And then after that first month, if you'd like to continue, then you do have the option to get a 40% reduction on the annual price. David, over to you, please.
All right. Thank you.
You're welcome.
You have a few more minutes here. Do you have any other examples or anything you'd like to share with us?
Yeah, sure. I can have maybe we can put it to the guys out there and ask them if there's any particular stock they want me to have a look at. Maybe a stock they've been considering.
Oh, sure. Yeah. Yeah. Anyone have any symbols you want to enter? What about Palantir? Everyone.
Okay. Yeah.
A lot of people ask about that.
Yeah, absolutely. Okay. Let me just make sure I've got the right. Yeah, Delta Airlines. Sorry, I think I was sharing the wrong window. Okay. Yeah. There we go. So Palantir, really, really good example of how we can apply the 4PS, 4-phase sequence method. So if I just open that up, okay, look at the IPO. So Palantir had its IPO. In fact, it wasn't an IPO. I can't remember. I keep on being corrected by people that it wasn't an IPO. It was some kind of other listing. But let's just call it IPO for now. September 2020. So we're now in that sort of 5 to 6 year period where we have history. So we can actually analyze this stock. So Palantir behaved exactly like any IPO. It went flat. And it went flat until the breakout in November 24. So it took 4 years for it to actually break out, which is what we could see with SpaceX. Then we had that massive move up from around, what was it, around $45 through to just under $210. So that's your phase one. If you caught that, happy days. If you didn't, no problem. Because while it was going through its phase one, there were lots of other stocks that were going through phase one anyway. Now it's currently correcting. So this isn't a period where you want to be jumping in. because it could be a falling knife and it could keep on dropping, and it could drop all the way to $100. It could drop that down to the low of last year. So this isn't a time to be buying into Palantir. Why would you be buying into Palantir when you could be buying Fortinet? Fortinet is already moving up. This is where portfolio allocation comes in, where risk allocation comes in, where the investor mindset comes in, where the process comes in. So looking at Palantir, sorry guys, I've got a window open if you can hear a little bit of noise in the background. All I'm waiting for is this sideways market or this correction to be completed. How long that takes remains to be seen. What I'm waiting for is that breakout above the highest point of last year. Once it breaks out, then I will consider buying with a view to seeing Palantir go all the way up to $300, $400, $500. Another stock that is worth considering is HPE, Hewlett Packard. Went through a sideways market. It's now broken out. What we're waiting for is good entry into this stock. You may have entered in at that beginning phase there based on an aggressive entry. You would now be in that. But if what we're waiting for now is a nice little sideways period and an opportunity to get in. A stock that has done very, very well for us is Amphenol. Amphenol is a stock that's been in my portfolio since November 2023. So I've actually caught this whole move up. And what you can see right now is that it's attempting to break out and move into its next uptrend phase. So we could potentially see this stock move to $200, $300, $400, and so
on. Scott in the live chat also asked for TXN. Texas
oh, yeah,
Instruments.
very good. Yeah. Texas Instruments. This is actually a stock that's in my portfolio. So, sorry, was that Scott? Very good stock. Texas Instruments is a stock that's been in my portfolio numerous times over the years. So you can see here, very good phase one, flat phase two, and now in phase four. It had the phase three around $240. It's now in phase four. So yeah, this is absolutely a stock that should have been in your portfolio, this year, and you should now be in that profit phase where you're holding and compounding. If you're not in this yet, then you'd want to see a breakout above the all-time high, and then you can start buying into that stock. You don't want to just jump into it right now, because if you look at it on the daily time frame, it's currently going sideways. And the reason why it's going sideways is because it had a gap up on earnings, and since then it's gone flat, which is pretty normal after a gap up. So what we want to see is a breakout and a continuation. So TXN, it's absolutely a very, very good stock to have in the portfolio. So yes, Scott, good shout on that. Any we got
I think I think we're about out of time. So
perfect, David. All right, all good.
All right. Thank you for being here.
You're welcome. Thanks for having me.
All right. I'm gonna post your link for everyone again, so everyone check that out. All right, and just a reminder for everyone, check out those links there. But also, in case you didn't hear this earlier, I'm recording each presentation individually. And we are also live streaming the whole day to YouTube. So the full unedited day is being instantly archived to YouTube, and then the individual presentations will be posted to YouTube later tonight as soon as I can get them processed. I'm trying to find one more link for you that I can give you. So that page right there will be the archive for the entire event as soon as day one and day two are there. And then, of course, all of today's will be added to that page as soon as possible, too. So, all right, next up is Silas Peters. Silas, are you there?
I am. Hello, test.
Yeah, sounds good.
All right.
You should be able to share your screen and get set up now.
All right. Let's see here. How you doing?
Good. We're having a good day. How are you?
Good stuff. All right. Can you see the screen there?
Yes. Looks good.
All right. We just tell me when we're ready to rock and roll, and we'll go ahead and get started.
All right, I'm just double checking my setup here. Everything looks good. Okay. I'm going to start my recording again, and then you can start your presentation. So I am recording again now.
All right, let's go ahead and get started, guys. First off, hello to everybody out there and wherever you are in the world. And I want to say thanks to David and Anka and the Timing Research team for having me on. I always enjoy coming and doing these workshops for you fine folks. So before we get started, as always, just if you have questions, comments, feedback, feel free to pop those into the chat. And once I get through teaching you this strategy and this setup that you can literally start using today if you wish, if we have time, we'll go back and answer those questions for you so you make sure you're in a good place. Now, my name is Silas Peters with T2 Markets. Again, thanks for being here, and Timing Research team, thanks for having me on. I know that you guys have a lot of good presenters today, learning lots. So hopefully you're all soaking it all in. And basically, I just start off with saying that you're in the right place. If you're kind of sick of, beating the tires, losing money, tired of confusing strategies, and want something real, something that works. And by the end of my workshop here in Time with You, you're going to see a way to trade with confidence, with mechanical rules and high probability setups. Really the complete strategy and system, no guesswork here. We must quickly cover the risk disclaimer. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So hopefully that's very important to you and you understand that. Let's talk about what we're going to learn today. We're going to talk about why price action patterns beat indicators. We're going to talk about this 3-point setup, step-by-step entry and exit rules with real trade examples, and then how to apply this starting today. And my goal for you is that I will prove to you that this works in any market or time frame. But this is the real benefit of listening to today's workshop. We are not going to be focused on chasing hot stock tips. We do not need dozens of indicators cluttering your charts. We don't need some NASA terminal. You will leave here with the exact rules for entry, exit, and target. Those are really the three ingredients that you need for the trade, right? Rules for entry, exit, and target, and you'll have your complete trade management plan. So this is to give you a sneak peek idea before we get into the meat and potatoes of the strategy. You're going to be able to spot and identify trades like this here in Halliburton, like this here in Bristol Myers, is 3.5%, 6%, 9%. It's $400, $800, $900 per 100 shares. These all start to add up. Lockheed Martin, 5%, 6%, 6%. We can, of course, buy the stock. We can buy calls, call debit spreads, use options, whatever your flavor or style is. It's very versatile. And then futures, which I use this every single day in futures markets. We have a 30-minute chart of gold futures. This is $800 a contract, $450 a contract. 5-minute chart of the E-mini S&P. Let me see if I get my little drawing tool out here so we can really snazz it up while we, there we go. So we've got 3 points, 8 points, 6 points, 10 points, all using a very repeatable and predictable pattern, and a lot of potential here. And those that like to trade, let me see if I can clear that out, guys. Sorry, clear all drawings. I didn't know it stays. I thought it was just on that slide. But this is a 610 tick chart for those that like a little bit more activity. Of course, something like on S&P, NASDAQ, you'll see a lot more setups. But you got 4 ticks, 7 ticks, all in a single session. Who would be happy with $218 a day, maybe $500 a day, maybe $1,000 a day, even $50 a day? I think we all would, right? And this pattern is responsible for identifying all these moves before they happen and then let you know when to get out as well. So again, you'll have the complete process. So you are in the right place today if you want simplicity and consistency. If you tested dozens of indicators or subscription services, you've been frustrated by emotion-driven trades. You want something simple and mechanical, okay? If you're a retail trader out there, or even maybe a pro who's fed up with overcomplicated systems and the endless noise of indicators and just noise that is really designed to be a distraction for you, pay close attention, because what I'm about to show you is different. You're going to finally get something that you can rely on, no guessing. And really, it's the same strategy that I've been using for almost 20 years, which is hard to imagine, but we're still talking about it today because it actually works. Now, quick backstory on me, background. I'm the founder of T2 Markets, co-founder and partner of Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader, also speaker, author, educator. Started my career at the Chicago Board of Trade. I worked as a private family office consultant. And most importantly, though, I'm a husband, a father, and I'm a mentor to thousands of students across the globe. And this is really what makes it all worth it. Okay, guys? Now, I've spent years in the trenches, trading stocks, options, futures. I try everything. Indicators that claim to predict the market, flashy newsletters, elaborate strategies that, frankly cost more in frustration than they've ever paid off. And taken losses, right? I think we've all taken losses, but I found what works, and now I build tools so you don't have to bleed your account dry by experimenting. Now, let's talk about, why most traders fell, and kind of address my struggle additionally, probably exactly what many of you are going through, have at some point, overcomplicating systems, chasing lagging indicators, making emotional decisions, and then just really lacking a repeatable edge. You've got to have an edge if you're going to be participating in these markets. Now, before I discovered this pattern, I was right where you are. My charts looked a lot like spaghetti, indicators everywhere, chasing hot stock picks, and just overcomplicating the process. Looking at all these Greeks and robot trading EAs, black box systems, and complex strategies, or the drill of, hey, we need to add more damn indicators on our chart, right? I've been mind blown by some of the screens that I've seen from students, whether it's been at our in-person workshops or online. You can't even read the price action, which is crazy, and it just leads to frustration. Emotional hesitation, entering too late, exiting too early, risking more than you should, and then getting burned again and again, losing money, losing confidence, and trapped in a cycle of kind of hoping and second guessing. I'm sure everybody here can resonate with that. And yeah, so of course it does. So it kind of led me to the big discovery, and I discovered something powerful, really what's called a 3-point reversal pattern that we're going to be discussing shortly. It's been around forever, but most traders ignore it or complicate it because it is so simple, and they think that they've got to make it more complicated to make it more accurate, and that's the exact opposite of what you should be doing. So I thought, well, what if I could build something completely mechanical around it? Exact rules, precise targets, no emotional guessing. We start with that, back it up with test. Hell, I was already doing it manually, and I knew the power of it, and that already worked. And I've already given you a hint. It consists of only 3 steps. And so let me ask you, can you follow 3 steps? 1, identifying what we call a trend shift. Step 2, defining the exact entry exit target, and then trade only when those rules align. Can you follow 3 steps? And if you do these, your trading becomes a lot cleaner. And if you skip them, then you're back to the noise. And because we're trading price action, we have a strategy that produces repeatable setups, works across all markets and asset classes, and they're easy to spot in real time. And these charts right here are going to start appearing to you with clear and total clarity. Okay, they're going to be popping out of the charts like this 55-point trade in the NASDAQ, a $330 per 100 share or 7% move in silver. These moves here in DIX, DKS, $10, $12, $15 a share. And these are the most crystal clear, clean charts that I think you will probably ever see. Coca-Cola, Euro US dollar, Forex, 110 pips. Biden on a weekly chart, 51%, 56%. Coca-Cola, E-mini S&P. This is a 11 points on a 1-minute chart. I'm going to tell you that simplicity beats complexity every single time. Now, how smooth, how clean were those setups that I've shared? All right, so let's get right to the rules of this so you can start applying this in the markets immediately. And this strategy, again, consists of 3 points. So 1, 2, 3 strategy, and it helps traders identify trend reversals and continuation patterns trading with high accuracy. So whether you're a day trader, a swing trader, a position trader, understanding this pattern will significantly enhance your ability to spot profitable reversal patterns and setups in the markets. And one thing that I want to stress is people will automatically get caught up in, well, does it work on Apple? Does it work on a 5-minute chart of Bitcoin? Does it work on corn futures? Does it work on NVIDIA? It doesn't matter. We're trading price action, and price action is universal. So let's start with point 1, as this is the baseline starting point for a pattern. Step 1 is about spotting a potential reversal. And what we're looking for is the trend peak or bottom, the highest point in an uptrend, or the lowest low in a downtrend, okay, within the current price move. So let me show you a quick example. So you can see that we've got price heading higher, price is heading higher, and then price is heading higher. What we're looking for is that final top or final peaking point, right? And that is our number 1 point. For a downtrend, it's just the opposite. We're looking for that lowest low, which is our number 1 point. All right. So then once we've identified that number 1 point, we're now going to look for the retracement. We're going to look for the retracement, and that's the first retracement from point 1 after forming a higher high in a downtrend or a lower low in an uptrend. So here's an example. We've located a number 1 point, and then we've retraced from that high, which has given us a new swing low. It's our number 2. In a downtrend, we've located our lowest low, which is our number 1 point. We've retraced higher, giving us a higher swing low, and then pull back. That gives us our number 2. And then number 3 is where we're going to, as the name applies, it's really our third leg. It's either the second low point or higher low for a long or bullish formation, or the second high point or lower high for a bearish formation. So this is what it looks like. Here we have a 1, we have a 2, and then we've retraced and we have a lower high, right? We have a high and a lower high. That becomes our number 3 point, okay? So in a downtrend, we have our 1, we have our 2, and then we have our 3. This is the retracement or higher low. This low is higher than this low. So we have a 1, we have a 2, and we have a 3. All right, so now what? What do we do now? Well, we have our 3-point profit pattern, but what are we missing? What are we missing? Yeah, where and when do we enter? How do we enter? Where or how do we enter? Well, we're simply waiting for a break above or below the number 2 point. So here is a bullish entry example. Bullish obviously means that we're looking to go long. We're expecting that market to go higher. We're simply waiting for the market to do what? Break above the number 2 to get long. So here is a bullish entry example. Price is traded through and above the number 2 point. We can all agree on that, correct? 1, 2, 3, we wait for a break above the number 2 point. Now for a bearish example, same rules apply. Everything is going to be the same rules, just inverse. For an entry, 1, 2, 3, we're looking for a break or close below the number 2 point, right? We're expecting the market to go lower. So we're looking to sell that stock, sell that futures, buy a put option, sell bear call spread. All right, so our trigger entry is when we break below the number 2. 1, 2, 3, we're looking to break or close below the number 3. So do we see how this is damn near, if not 100% mechanical up to this point? We're all seeing the same thing, and that is rules-based, and that is mechanical, right? So once price breaks through point 2 after forming point 3, it signals a trade entry, and that is our 3-point pattern. So up to this point, pretty straightforward, right? Well, what about profit targets or our limit order take profits? And what about stop losses? Because every trade that we place needs a stop loss to manage risk. And trade management, what do we actually do once we get into the trade? Also very important. We've got to have a plan. So great questions. We must use a stop loss to protect our capital, and we need to know where we should look to take a profit, as this is why we are in the market in the first place. So first, let's cover risk management or stops. This simply means that sometimes Mr. Market does not do what we want it to do, and it may go in the opposite direction, and that's okay. We're not going to be right 100% of the time. It's the cost of doing business in trading. But what we'll do is we need to locate where we're going to put a stop order in to protect our capital in case that we are wrong. So if we start with a bullish setup, it's going to start beneath or below the number 1 point. Okay. So we have our 1, our 2, our 3 bullish setup. We're going to put a stop below the number 1 point. Okay. Now for a bearish setup, again, same rules, just flipped upside down. The stop is going to be above the number 1 point. All right. So here's our 1, 2, 3 pattern. Our stop is going to go above the number 1 point. All right. Now we can talk about ways to adjust that and manage it in our advanced sessions, but we must start above or below to give the market breathing room to allow it to move in its anticipated direction. All right. Now, let's talk about the fun part of trading, which is profit taking. Okay. So in a bullish setup, it's going to be the distance between the number 1 and the number 2 point measured up. All right. The distance between the 1 and the 2 measured up. So if we've got to know the distance between the low of the 1 measured to the high of the 2. And whatever that distance is, that range, we're going to measure higher from the number 2. So we measure from here to here, and then we're going to measure up. In this case, it's $1.98. So we're going to add $1.98, and that's going to be our profit. That's our profit target. Okay, we measured up. That's our profit target. Everything has been 100% mechanical up to this point. All right, so now for a bearish setup, let me clear this out again. For a bearish setup, same scenario. It's the distance between the 1 and 2 point measured down. So we have our 1, 2, 3 pattern. Our target is going to be measured from the high of the 1, measured to the low of the 2, measured down. So whatever this range is, $3.68, we're going to take whatever price this is, and we're going to measure $3.68 to the downside. And you can see that is our profit target. Are we following that so far? So to recap, for a bullish 3-point strategy, we've got trend established. Price is heading lower. The price retraces higher. Then price pulls back, making a higher low. And then we're looking for an entry above that number 2 point. So we have a 1 and a 2 or 3, and we're looking to get long on a break above that number 2 point. So now for a 3-point bearish strategy, we've got price trading higher. Price retraces lower. The price retraces higher, making a lower high. 1, 2, 3. And we're looking to get short on breaks below the number 2. All right. Again, everything is 100% mechanical up to this point. Let's walk through some examples. Monthly chart, I purposely, by design, have left the ticker symbol off because people would get caught up. Well, what is this? Is this McDonald's? Is this Apple? Is this the E-mini S&P? Is this Dogecoin? It doesn't matter. We trade it the same way, regardless of the market, regardless of the time frame. Okay, so if we look at this chart, we have a monthly chart. We can agree that the trend was going higher, going higher. The last high becomes our number one. The retracement and then pull back up is our number two. And then the pullback gives us our number three. So we have our 1, 2, 3 pattern. We already know what everybody else out there is guessing, scratching their head about. Well, gosh, where do I enter? Where's my stop? Where's my target? Well, we know all that in advance. We know that we're looking to get short on breaks below the number two, initial risk above the high of the one, and our target is the distance between the high of the one, measure to the low of the two, whatever that is, measure down. That's our profit target. Okay, so on this monthly chart, here is all plotted out by automation. There's our entry, there's our risk, and then there's our target one. Okay, all done for you automatically. Weekly chart, 1, 2, 3. Remember, I did all this by hand for years. All this by hand for years. Thankfully, with technology and automation, none of that is needed, right? None of that is needed because we don't have time to be doing all of this by hand, right? The markets are on the move. We need our ideas. We need to know where and how to take action when the opportunities present themselves. So here is what happened. We have a 1, 2, 3. There's our break above the two with a target and our risk. Daily chart. Okay, so again, we worked from a monthly. We worked down to a weekly to now a daily. Here are your opportunities. The lower that you continue to go, you're going to have more opportunities. It's basically like any indicator. The lower you go, the more price action that you're going to have, and the more opportunity. It can be more noise, but you've got to know what you're doing. Hourly chart. We start to see more opportunities, right? We've got a short here. We've got a long here. We've got a short here. And we're currently in a short here, looking for target one and looking for target two. And this is the E-mini S&P. Hourly chart. Here's a 13-point move hitting target one and target two. Here's a 43-point move hitting target one. Okay, here we are again. Another hourly chart. There is our short setup hitting target one to the T, hitting target one to the T. And then this one is currently in process, working its way to target one. Now, can you trade it on lower time frames? Absolutely. It is my go-to on the 1 and 2 minute charts. 1 and 2 minute charts. Again, you see more opportunity because we're on the lower time frame, more price action, more movement going on in your respective market. We see a short, we see a long, we see a short, we see a short, and we see a short. So if you like scalping, you like the opportunities, and we've got folks trading these on 30-second charts, even 15-second charts, and even the tick charts. And so when we have this mechanical plan, we have this very clear mechanical process, rules-based process. We only trade when the rules are met, meaning we're not forcing entries, we're not guessing, we're not fudging criteria just because you feel like the market should move up or move down. We're waiting for our 3-step criteria to be met. And this is what separates hobby traders, emotional traders that are second guessing, chart hopping, chasing entries, to those that follow a systematic process, a mechanical plan. It's either there or it's not. It's either there or it's not. And I will tell you, even with years and years of experience, emotions and discretionary nature kicks in, right? It's just part of the way that we're made as humans. But when you can remove emotions and remove the discretion and make things you're trading a mechanical process, it really becomes a game changer, right? And so, like we see here, more examples of crude oil. You have the pattern clearly set up. You're not listening to all of the talking heads. Well, the geopolitical macro says that we're doing this, and we're OPEC cut the barrels, and no, follow the price action, follow the patterns. $5,800 move here, followed by $4,700 move here, and this is a daily chart. You can go higher, you can go lower. This is gold. You don't have to trade gold futures. You could trade minis, micros if you wish, full size if you wish, but you can trade GLD, GDX, or any other components, and then options on these. So how do you trade options on these? Well, we'll talk about that here momentarily, but it's fairly straightforward. You see a long trade idea. Well, we can buy call options. We can buy call options. We can sell bull put credit spreads. Bull put credit spreads. I personally like to trade credit spreads. We see have a short here. I'm going to sell bear call spreads. Cardinal health. Do longs, do shorts. I'm selling bull puts, selling bear calls. You can trade directionals. Google. Who could identify this and sell Google or sell bear calls or buy a put option? Very, very simple and straightforward. So let's talk about what you've learned so far. A very simple step 1, step 2, step 3 pattern. Do you agree with me up to this point? Yeah. Everybody here, up to this point, feel confident in what I've shown you. Something that you could say, gosh, I mean, we've only spent about 30 minutes together, but yeah, heck yeah, I can follow this. I can spot this pattern. Okay, the market is heading lower. I know that I'm getting geared up and ready to take a possible long. All right, lower, lower, lower. There's my final number 1 point. I wait for that market to retrace higher and then pull back. That gives me my number 2. Once we stop printing these higher lows, that gives me my number 3. I know days in advance, because we're on a daily chart. I know days in advance where I'm getting in. I already have my predetermined stop or risk and my target. So I'm not fumbling around, stressed and guessing and white knuckled when the market goes higher and triggers through number 2. I know exactly where I'm getting in. I know exactly where my initial risk is. I know exactly where I'm taking profit. Very straightforward. You've learned how to identify entry, stop, and loss. All of the key criteria to place our orders and enter the market. And if we know that we're looking to get long at a break or close above the number 2, we can automatically then put an OCO order in, which is called an order cancels order, that handles the entire, basically automates the entire process for us. Meaning, if I'm looking to get long right here, I'm triggered into the trade. We execute that trade. I'm getting long, then we can place an OCO. Meaning, OCO, everybody know what this is? Order cancels order. Once we're in, we put an OCO where our stop goes in and our target. So if the market decides to go higher and hits our target, it's going to cancel the stop. So we don't leave a naked order out there, or market does not do what we want to do and goes south and hits our stop, it's going to automatically cancel our target. So the entire process is automated. In fact, we could even start off with an OSO, order sends order. So you place the trade here, and once you're triggered in the trade, then your OCO order goes in. And that should be available on most platforms. Everybody follow me so far? So what can we do? We are bullish. Well, we can buy the stock. We can buy futures. We can buy call options, whether that's a debit, just outright calls, debit spreads, or we can sell put options. Sell bull put credit spreads, sell cash secure puts, whatever your style is, okay? So in this example of ABC stock, we break above the number 2, we close above the number 2. That's our confirmation. Stops go in, targets go in. We're bearish. If we are bearish the stock, we sell stock, sell futures. We can buy put options, right? Buy put debit spread, or we can sell bare call spreads. Very, very simple, very, very mechanical. Now, you need to stop trying to do this by yourself. You probably say, well, this looks pretty snazzy. How do I do all this by myself? How do I find these patterns on my own? Well, at this point, you know what it takes. You see the steps. You've got the rules. Nothing's been held back. But now you're saying, well, now I've got to go learn charts, and I've got to learn these multiple indicators, spend hours backtesting, maybe buy expensive tools. No, that's what the strategy is built to eliminate. You get a system that does the pattern spotting, the plotting of the entries, the exits, the targets, the daily setups across multiple markets and time frames, so you can actually start trading with clarity. Start trading with clarity. Now, what if you had a tool that locates the pattern for you, automatically plots your entries and exits, and could scan multiple markets and time frames? Would that help you find high probability trade ideas on a daily basis? Of course it would. Well, good news. That's exactly what we did. Is we built a tool that does just that. Now, you remember our examples from earlier? Remember where we were drawing all this out manually, hand drawing, something that I did for years and years? Got our 1, we got our 2, we got our 3. Okay, this is $51.18. This is $54.32. So now let me measure this to this. Okay, that's $3.72. Now let me add that to that. Nobody's got time for all that, right? Nobody's got time for all that nonsense. We spot where the pattern was forming. Second, we had to map out those 1, 2, 3s. Lastly, get the calculator out and define that range for our targets. Well, with the powers of technology, all of the heavy lifting is done for you. All the heavy lifting is done for you, where you can now have your platform of choice identify the 1 and the 2 and the 3. So now you're on point, ready to take action. And then once it triggers, you know where your risk is, you know where your target 1 and your target 2 are. Pretty straightforward. Just like we saw on silver, just like we saw on Dix, just like we saw on Coca-Cola. Clean, clear charts, just like we saw in the euro US dollar. Now, what we've been looking at is think or swim. Think or swim, right? Trading view. This is what it looks like on Think or Swim. This is what it looks like on TradeStation. This is what it looks like on NinjaTrader 8, the indicator and scanner. Trading view, what we've been looking at. MetaTrader 4, MT4. And then also MetaStop. Super, super clean. You don't see any other junk, any other noise there that is causing you confusion. We also have it for wealth charts. Here's your indicator. Here's your indicator plotting the key ingredients that you need to know. Now, why is all of this different from maybe what you're accustomed to? Well, you've seen that we don't have dozens of indicators. We're not using, 10 different subscription services. no loading multiple strategy experts. We're not chart hopping. We're not second guessing. All that stuff there that is designed to clutter your mind, drain you mentally, drain you financially, and still leave you lost. Still left second guessing. This is different. It's simple, mechanical, and rules that everybody can follow. And what you'll be able to find and see is that you are operating with mechanical consistency. You know exactly what to do next. So with that, that's going to reduce your stress. You're not making emotional decisions, and you're going to see high probability setups every day. This is what myself and hundreds of students use every single day. It's one of the core tools in their toolbox. When you implement what you've learned, what your new trading day looks like, it starts with confidence. You wake up, you glance at your scanner, glance at your screen, you see valid setups, and you already know exactly what entry, exit, and targets are. Less stress, better decision making, less margin for error. And I'm going to tell you guys, results matter. Using this as one of my primary entry method techniques, we get results. We flat out get results. And you can see that that this pattern in this setup is responsible for each of these right there on the screen. Believe me, I would not continue to be using nor talking about this nearly 20 years later if I did not believe in what I'm teaching you right now, plain and simple. It's why I still use this every single day. It's simple and repeatable. It's pattern-based, i.e. not lagging, and it works across all markets and timeframes. Somebody says, well, does it work on Alibaba? Sure. Does it work on Trump coin? Sure. Does it work on a daily chart? Yes. 15-minute chart? Yes. 1-minute chart? Yes. And if I have some time, we'll take a look at the markets today. And now it's all automated. I built a step-by-step program so you can master this strategy. And what we're going to do is we automate, we execute, and we repeat. Automate, execute, and repeat. And we do all of this with what we call the 3S code. And you can start using this in your toolkit starting today with the 3S code. Now, let me ask you this. Let's do some math. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you $50 to $200 plus a month? How many hot tip newsletters promised the moon and delivered scraps? If you added up the time, the stress, the mistakes, the pain, you've already paid way more in losses and wasted effort than what this investment will cost you. That I can almost guarantee. With 3S code, you're going to get full on-demand trading. Watch whenever you want, at your speed, at home, in your pajamas, whatever. You're going to get the full indicator and scanner suite, the tools that you will literally be using daily. You're going to get ongoing support and community. You're not alone. Members only Telegram room, direct access to me. And where it really shines is you get to see how this works in a live market environment. Every week we have live trading and training sessions. There's no better place to see it being talked through and analyzed and trades in real time. And these are all recorded in case you can't make it. They're held every Tuesday. So if you want to get started, become a student today, you'll be ready to rock and roll by next Tuesday. Now, if you try to build what I'm giving you here, the scanner, indicator, rules, training, live sessions, community, You literally spend thousands of dollars. You lose time figuring out what works. You make mistakes that will cost you money. You feel stressed. But here, guys, it's packaged, it's proven, it's ready, and we're not going to charge $29.97. We're not going to even charge $19.97. In fact, we're not even going to charge $9.97. Not anything near that. With this package, you're going to get the 3S code indicator and scanner, access to the weekly strategy and scan sessions, and access to our private Telegram room. But you're also going to get access to our top 25 option strategy guide, chart pattern principles trading, and all of our bonus and quick start guides. You can get started accessing the full entire package, all updates included for life, by going to code.t2markets.com. Code.t2markets. And I want to remind you guys is that this is lifetime. This is not a renewal, not a subscription. And yes, you get access to all of those platform providers that we have mentioned. Imagine being able to spot high probability setups every day without hesitation, without having, without guessing, having mechanical clarity. It truly becomes a game changer. Knowing where to enter, where to exit, where your target is. Imagine trading both swing and day without the chaos, without worrying if that newsletter or that indicator is going to, provide you some false signal. 3S code eliminates all of this. Now, to remind you, you get full access to all of these platforms. It's not, hey, this fee for, pick or choose. If you use Metastock and TradeStation, great. If you use Thinkorswim and TradingView, fine. If you use MT4, TradingView, Ninja, TradeStation, Thinkorswim, perfect. Load them up on all of those if you wish. Code.t2markets.com. I'm going to remind everybody that you're also going to get access to our weekly strategy and scan sessions. They're recorded, archived, placed in the members area in case you can't make the session that day. No worries there. And then the indicator and scanner includes everything that you need to make logical decisions. So you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas as we've been going through. Going to give you your entry, exit, stop, target levels, all color-coded for easy reference. Customizable settings, multiple look-back periods. You can scan for setups only, trigger only. What do I mean by that? A setup would be one that is in the process of setting up. So you have your 1, 2, 3. That means we're in the process. We're in wait mode. Trigger only would mean markets that have triggered. Your 1, 2, and your 3 would mean that you've already triggered. You can scan for intraday setups, swing setups, position setups, all or none, depending on your personal preference. And any instrument, stocks, ETFs, futures, Forex, everything you need to make your decision. Now, 3 bonuses that you're also going to get as part of this package is 1, our chart pattern principle trading manual and guide. This is a 90+ page PDF manual, how to read charts, how to identify trend and range markets, additional strategies, option strategies, seasonal market trends, COT types, order types, and so much more. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade this pattern in so much more. Very, very comprehensive. Number 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so, and do it the right way using the 3S code strategy. And then bonus number 3 is access to our private Telegram room. Okay, we've talked about the private Telegram room and the private training. This is, I'm providing ideas every single day, pre-market, during the market, post-market. You're going to get access to this, providing you some key levels on markets, showing you setups, giving you ideas, basically feeding you fish while you're fishing. Okay, and that is open 24 hours a day, 7 days a week. And you're going to get high quality, high odd ideas. And I'm going to tell you guys that it's not just me, right? It's not just me doing this. We would not be talking today, would not be blowing hot air, listening to myself talk if it didn't work. Students come to me all the time. I tried indicators before, they didn't work. Well, this is mechanical, this is proven, it's universal. Or I'm too new, I don't have time. Works in all time frames. Training is included. Well, Silas, what if markets change? Well, the markets are always changing, but the markets are the markets, and all we're doing is trading the ebbs and flow of the market every single day. Strategy is based on price action, which is timeless. So if you're sitting there going, well, I've bought indicators and I've got burned, well, I get it. That's why this isn't some secret sauce, black box indicator. I've given you the rules, and now I've shown you how you can automate that process. Why? To make our life efficient. You follow the rules, you don't guess. Or if you say, I'm not experienced, I don't have hours, great. You don't need to stare at charts all day. This works across all time frames, day or swing, and the training plus all the live sessions show you exactly how to do this step by step. You're never alone. And the market, whether it changes, whether it stays the same, whether it rallies, whether it crashes, whether it stays sideways, we're trading price action. When emotions flare and your other mega indicators are lagging, price action speaks very clearly. So we've opened up some slots for this special event today. You go to code.t2markets.com, code.t2markets.com to get started. You can get the 3S code indicator, a 3S code scanner, weekly strategy and scan sessions, private Telegram room access, my 25 top option strategy guide, chart pattern principle guide, and all of my quick start guides and bonuses, and so much more for a one-time lifetime fee. So I've taken this here. I think I've kept us on track. If I've got a few minutes, what we'll do is I'll take some questions in the chat. And what we can also do, my favorite part, is looking at some markets just to show you here in real time. Would that be okay if I show some charts to you guys? All right, so let me take a swig of water. And I promise we'll keep everybody on track. Can you type in the chat, guys? Can you see my chart? Sometimes things freeze up, and sometimes it doesn't transfer. Can you see the chart? We're looking at trading.
Yeah, I can see it.
All right, cool. All right, so this is IBM, right? And can you guys see the 3S code pattern on this chart? Remember what we just looked at? Here is the 3S code pattern. Here's that 3S code pattern. So here's where we trigger target 1 and target 2. Here's where we trigger. This one actually fell on us. And here is the last 3S code pattern. I'll show you a market that I'm in right now. We have not had a 3S code trigger. We're waiting for that, but you can go back and see. You can see the last 3S code buy and the last 3S code sell. And how would we do this? Well, again, you can buy call options. You could buy put options. I like to sell bull puts. I like to sell bear calls. That's what I've done. And we would need a lower low to get a new pattern right here. Quite simple, guys. You agree? Now, let's take a look at the E-mini S&P today. As you guys know, the S&P has just been ripping after we had this first hour volatility. We had what, 30-point range, up 30, down 30. Now we're up 52 on the day. But you can see the pattern. Here was a 3S code coming in. If we go back to the European session, 3S code buy, sell, 3S code buy, 3S code buy, 3S code sell. Now check this out. We're talking about 15-second charts for those that want a lot of opportunity. Let me clear out some of the madman drawing here. Look at all these setups going on, guys. Look at all, you tell me, sell, 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 buy, sell, sell. Let's move forward. I mean, I'd be done. Be done. Quit trading. But if you're a trade junkie, check this out. Sell, sell, sell. Target one, target one, target one, target one, target one. Here's another sell. Can you scalp the heck out of this market? Look at it. Still going on here. Selling when the market is just doing nothing but go higher. Hit target one, sell, hit target one, sell, hit target one, sell, target one. Finally got a buy. Look at this. Buy, target one. Currently in a buy. See how we don't have to make anything up? It's all right there for us. Plotting the entry. You don't have to go, well, okay, gosh, it's a 15-second chart. Let me subtract 76.75 from 81.25. Okay, that's going to give me three and 3.25 points. Let me go figure out what that is. No, you enter the trade, you put your limit in. Enter the trade or your OCO. Enter the trade. Multiple opportunities. And that's just scratching the surface, right? That's just to give you a real quick glimpse of all the opportunity. If you're a day trader, if you well, hell, let's go to the 15-minute chart. Let's go to the 15-minute chart just because we're all excited and getting on a roll here. If we go over, we'll go over to the 15-minute chart. You can see, and no, this is not repaint. This does not repaint. So here's a sell, target one. Here's a buy, there's target one. There's a buy, target one, target two. And now we're just waiting for next setup. You see the arrows plotting? New ones are being plotted every time we have a new high. Once we retrace, we'll get a number 2, and then we'll get a number 3. So, yeah, a couple of questions. The question is like, well, why don't you use the actual numerical, like 1, 2, 3? It's a great question. Makes complete sense. It's a limitation of the technology, so we just use the arrows, so it's not a big deal. If you want to change the color, though, you can. Even change from like a cross to arrow to a cross or a dot. I think you have that ability. So it's all right there. The platforms, again, just as a quick reminder, you get access to each of any or all. So TOS, which is Thinkorswim, TradeStation, NinjaTrader 8, Trading View, Wealth Charts, MT4, and Meta Stock. So there's no license. If you want to add them on all multiple platforms, you can do that. Yeah, you can load them on multiple computers as well, for sure. So I think that's it, guys. Appreciate your time. This is always fun. I really enjoy this stuff, and especially when I get to show stuff that works. It's the only thing I'm ever going to show is something that works. something that we actually use with our live trading. So I appreciate your time today, guys. Thanks to David and Anka once again for having me on. Hopefully they'll have me back sometime in the future. Always a pleasure. I'll turn it back over. You guys have a happy and safe summer. Stay cool out there, and we'll see you on the flip side. Talk soon.
All right. Thanks, Silas. Yeah.
Thanks, David. Have a good one.
All right. You too. Thanks. All right. So yeah, thank you to Silas for being our third presenter for today. And we have 4 more great sessions still to go today. So Eric Gebhardt of Altivest is up next. Eric, are you there?
Yeah. Hey there, David. I'm here.
Oh, okay. Great. Yeah, you should be able to share your screen and get set up now.
Okay, give me just a second here. All right, I think we're good.
Yes, looks good. All right. Are you ready to start?
Sure, I can do that. So what do we have? 1 hour or 45 minutes or what is it?
Yeah, an hour.
Okay.
So,
All right. Well,
all right.
great. Yeah, great to be
Right.
back.
I'm going to start my recording again in just a second, and then you can start your presentation. So
Okay.
I am recording again now.
Thanks, David, for having me. And we're going to get started here. We've got a lot of information to cover. So we're going to look at our favorite trading indicator when we're looking at options trading for really any market condition, bullish, bearish, and even non-directional. The same strategies that professional money managers often use. It's called the RTI. It's a color-coded indicator used for automating risk and profit controls, as well as trade selection. So no chart watching needed, no guessing, no stressing out. We also have a trade alert technology that comes right to your email and phone, and it's just a one-touch responsive technology. You're going to want to see that as well. And really, to kind of wrap the whole thing up beyond the technology, we are real people. So our clients end up talking to us often, and that's part of what we do. And before we get further, do take a look at the risk disclosure. We're not going to spend an hour reading every word, but keep in mind that you should always use risk capital when trading. Past performance is never a guarantee of future results, and there's always a risk of loss when speculating. A little bit about who we are. Since 1997, we've been a registered introducing brokerage firm. We developed our proprietary technology along the way, trading tens of millions of contracts. We're registered with the CFTC. We're a member of the NFA, so that means we're regulated and registered. And my name is Eric Gebhardt. I'm a co-founder of Altivest. I'm a BS in Business Administration from the University of Southern California. So the Trojans. I've had several securities and insurance licenses over the years, and currently have my Series 3 commodity futures license, as well as the 65, which is really for registered investment advisors. Maybe you've seen us before online or perhaps even in financial periodicals and media and so forth, some of the presentations we've done, and love doing these webinars and so forth. And actually, this was a live event just about this time, about a year ago. There was apparently about 1,000 people in attendance. So that was a lot of fun being able to speak at that event. There were some other like politicians, and I think Peter Schiff. In fact, I ran into Peter Schiff as he was heading to the pool, and we chatted for a brief moment because I had met him a few years earlier at another conference, so that was kind of funny. But anyway, so if you haven't seen us before, that's fine. If you have, we're going to cover probably some new material, and maybe you've seen some of our quotes. We often get referenced in some financial publications. Here we are on MarketWatch just a few weeks ago, they were asking us about treasuries and gold and the stock market and so forth. So we like to give them our thoughts and comments when we can. All right. So with that preliminary out of the way, really the question is, why should you look at alternative investments in your portfolio? Well, they can have a low correlation to traditional investments, and they may improve diversification and lower portfolio risk. So what we're talking about here are really alternative strategies rather than just being passively in the buy and hold camp with traditional investments. So we're going to look at non-directional strategies where you see a market going back and forth in between a range of the high and the low there. Bullish strategies and bearish strategies. I think you need to have everything in your back pocket to use when needed. And this is an interesting too. Keep in mind for perspective, if you're old enough to remember, like I'm old enough to remember the dot-com bubble and the crash and so forth, you had all these high flying, kind of the equivalent of the Mag 7 stocks. But, if you look at what happened after they had their day in the sun and they soared and then they came back down to earth, a lot of these stocks took, 16 years to break even, 26 years to break even. AOL went to nothing, so on and so forth. So the point is, you don't want to just rely on something always going up. That's really what I'm getting at here. And, just more recently, keep in mind that almost all the gains in the NASDAQ 100 in the first half of this year came from just 10 individual stocks. So everyone who's been in those stocks has obviously done very well, but that's a lot of concentration risk. And we're going to kind of touch on that a little bit. And what I'm referring to here is we want to make sure you stick around for later in the presentation. We'll show you kind of a new way to trade the biggest tickers in the stock market using 6 times leverage. And, some of the tickers here, Apple, Amazon, IBM, Oracle, JPM, NVIDIA, Meta, some of those big names. So that'll be kind of interesting. But that's kind of a side note to the options indicator that we're going to look at. So what I like to do is kind of point out really and relate to you, the trader, and we're people too. So we have these same thoughts and emotions when it comes to trading, even though we're professionals and we're doing this for many years. Um, there's certain barriers that seem to always pop up and get in our way when it comes to trading. And we think we've built something that helps really leap those barriers and kind of jump those hurdles. But we identified these 3 barriers over the years, and I think you can probably relate to these. How about just too much information, narratives, conflicting price targets, opinions, clickbait, headlines, on and on and on, just kind of overloaded with information. And then more recently, tweets. This made me laugh because it's so painfully true. This is kind of how we used to do things back in the day. In fact, we used to update our charts by hand, if you can recall that. So anyway, but now you get one tweet after another trying to hit the keyboard and keep up to what's going on. So that's an overload. It kind of hinders your decision making. You end up like this poor chap here, kind of frustrated with his head in his hand. So analysis paralysis, that's the word for it. How do you know what is or isn't important? This guy here is struggling with too much information. So that's kind of our first barrier. And the second one is time. All of us are limited with our time, kind of like an option, right? We only have so much time in life and in each particular day. So, how do you prioritize things? And we only have a certain allotment every day. You need discipline. And this is how kind of some people envision their trading setup. And that this, obviously looks pretty cool. But I think the practical reality is we end up too often like this guy here, just kind of trying to maybe do too much with too little time. And you're just screen watching and staring at the screen and getting frustrated. So we're not going to do any screen watching. And really, unless you have a really useful indicator and a plan, it's not that easy. Here's an article from MarketWatch just last month. Only 5% of day traders are making money. Um, and then, so yeah, it's not to say that it can't be done, but it's just not that simple. It's not that easy, although it does seem on the surface to be that simple. But it's not. There's just a lot of things to get in our own way. And I think that brings us to number 3. We do get in our own way with human emotions. Fear and greed tend to kind of make these what would have been a reasonable decision, somewhat unreasonable. So you ride that emotional roller coaster when you're trading far too often, and you'll end up thinking you're a genius when you're doing great. And when you're not doing so well, you'll start to panic and capitulate, maybe surrender with a white flag, and then you end up back and forth on this cycle. So we're going to try to keep you off that roller coaster and try to control your emotions. So we're going to use automated strategies for professional options trades, and I think that's going to help us really overcome those barriers. So before we jump in, who receives the premium? Well, the seller. The seller collects that premium from the buyer, whether it's a put or a call. So with that in mind, there are long option strategies where the person is actually paying the premium, or it could be a debit spread. The net result is they actually pay a net premium. And, for example, you might be bullish and you might buy an out of the money call spread or call, or you might be bearish, you might buy an out of the money put spread or just an outright put. But you're paying a premium for that. So you pay money, and that's called a long option strategy. And then there's short strategies where you collect the premium, also a credit spread. And you can do this with non-directional strategies. You see the market going in between that range. Perhaps even in a bull market, if you want to collect premium, you might sell some out of the money puts or put spreads. And conversely, if you're looking at a market dropping or in decline, you might sell some out of the money calls above the market. But I just saw the prior presenter talk about that as well, selling calls and puts above and below the market. So in any case, a couple of terms we're going to look at here. And we're not going to look at the Greek alphabet in total, just two letters from the Greek alphabet. Delta helps determine probabilities. How much does the option value change with a change in the underlying asset? So that's the definition. But option traders look at it as the approximate probability of expiring in the money. So for example, if a delta is 0.2, that means there's a 20% chance that option expires in the money. And if it's conversely, 80% chance that it would expire worthless. And remember, delta is always moving. That number is always fluctuating as the underlying price fluctuates, and also as time works its way down. So it is not the probability of a winning trade. So keep that in mind. It's important to keep that in mind about delta. And then there's theta. So speaking of time, really it equals time decay when you're talking about options. So options all have a limited life. They all end up at zero value in terms of time value. At some point, every option has an expiration. So theta is really a sensitivity to time, or a measure of time when it comes to options trading. It's a negative number. It equals 1 day of time decay. And here's just what it looks like on a graph. It's probably easier. Just pulled this chart up here, and you'll see as you approach time zero, sometimes a visual is better than a few words. And then how do we use delta and theta with option strategies? There's different strategies to use, and we're going to focus on just a few of those today. So we're going to look how money managers might trade options, and we're going to look at why selling options can be a better choice than just buying options outright. So this was an article from a couple years back, and just a few key points. They said managing risk like a professional. So when you're selling options, it's a sophisticated financial discipline, and it's a professional approach. It distinguishes its option sellers from novice speculators, and I agree with that. And then it says it's a strategy often preferred by long-term investors who value consistency over high-risk speculation. So I think that's a fair assessment. And then I asked ChatGPT why professionals sell instead of buy options. They talked about the time decay advantage. They looked at the higher probability of profit because the seller receives the premium up front. They mentioned income generation strategies. They also mentioned market neutrality. We just mentioned that too, about sideways markets. So there's opportunities there. And then summarizing, selling options can be a preferred strategy for many professionals. So I don't know. I think they might have said it just as well as I could have. So I think that's a reasonable assessment of selling options and why Wall Street is really trading option spreads as well. And that incorporates selling options when you're doing a spread. So they're using theta decay to their advantage. They're collecting premium from the buyer to offset their cost. So here's what it might look like, for example, if you do a credit spread. So this is on the S&P 500 mini contract, and maybe you are a little bit bullish and you might sell an out of the money put spread and you collect the premium for doing so. So the red line is the put you sell and the blue line is the one you buy below it as a hedge or protection because you're not naked. We're not doing any naked shorts here. So, and then you can see here the market kind of trends a little higher and higher. And then over time, you'll notice this these blue squares called the RTI. That's our RTI indicator right there. And I'm going to explain how that works. So that's our favorite trading indicator for options. And it's our own proprietary technology. But you'll see here in this example, we can go right back. So on this day, maybe you sell an option spread and then the market moves a little higher over a few days and then you finally close it out. So you sell it first and then you buy it back later for less than what you originally sold it for. So just a good example there, just to visualize it. You can see this vertical line here better right here. That's the expiration date of the option spread. So we're always going to close these out before expiration, I should point out. And here's a non-directional strategy. They call it an iron condor. And you're selling an out-of-the-money call spread and put spread simultaneously. So you collect premium on the put side and the call side, and you look for the market price to stay really within that range. So you can see here, market's kind of chopping around and chopping around. And then finally here, you see this blue RTI indicator right here, and that's your signal to close out that position and take your profit and move on to another trade. And you can automate this as well. So that's a real key point, and we're going to show you how to do that. So you do not have to screen watch. We talked about that as one of the barriers to trading. And what that means is you can set up your account so that anytime you get a blue RTI to take a profit, then an order will be placed automatically for you. So just keep that in mind. I'll show you more of the details there, but essentially this is a non-directional strategy. And then here's a variation on that, something we created called the Dragonfly. Use 6 different legs. And here's what it might look like. You have the calls here, you have the puts here, and these are both spreads, the call spreads and the put spreads. The net result is you collect premium on the call side and the put side, and you look for the market to kind of stay in that range between essentially the red lines, just like on the condor. You can see this these arrows here, just to give a illustration. And you'll notice the market's kind of trading lower and a little higher, and then you get this blue RTI again, and that's a signal to take profits and move on to another trade. So there you go. We'll point out how that works and some of the details, but the structure of the Dragonfly is such where you're always going to sell 4 calls and you're going to buy 3 further out of the money calls and then 1 closer to the money call. So that's really your hedge or protection to cover the risk of being short the calls, and you have the same structure on the downside. And then, of course, you can be directional, whether you're bullish or bearish. You don't always have to be non-directional. You know, here's something called a bull hedge. It's really just a combination spread, and it's a bullish position you might take if you want to speculate, or maybe hedge. Maybe you're short in the stock market and you're using this as a strategy to hedge. You know, here's an example where you simply, if you're bullish, you might buy an out of the money call spread here. You can see the blue and the red line, but you simultaneously sell an out of the money put spread, and that will by and large pay for or cover the cost of the out of the money call spread there that you bought. So these can be self-financing, and you can often do these out of credit, so it doesn't cost you anything and even covers your commissions and everything. So you collect money by selling this out of the money put spread, and then you pay to buy this out of the money call spread and the market rallies. Then this trade would do well. You can see you have the RTI down here as well. So that's just a bullish strategy, another variation on the flexibility of how these option strategies can work with these spreads. And maybe you're bearish, so just the exact opposite here. So you could do something what we call the bear hedge. So you sell an out of the money call spread and you collect the premium, and you take that premium you collected and you buy an out of the money put spread. And you do this simultaneously at one order. So then see in this example, the market drops and this trade would have done well. Just hanging on to it here, and that's kind of the whole idea. If it went sideways, then you end up probably really not losing anything because you could have probably done this for a credit. And if it went the wrong way, say up, up and away, then you have to cover your risk on that short call spread. So that would probably be a losing trade. So rookies end up doing this most of the time. She talks about this popular trading strategy and why it's so risky. And what do you think she's talking about? I'm just kind of curious if anyone wants to chime in. What is the popular risky trading strategy that rookies so often use? So if anyone has any thoughts, feel free to chime in and put it in the chat there. But in the meantime, I will tell you what she's talking about. It says majority of small-time traders are buying the most basic call and put options, which have a much lower probability of profit versus advanced strategies like option spreads. So this guy here, John Foley, CEO of Options AI, said everybody in the business knows that if you're only buying out of the money calls, you're likely going to lose money over time. So that's really what they're referring to. If all you did was buy puts, or if all you did was buy calls, then that's a lower probability position to take, is really the point of what they're making there. So we're going to look at professional option spreads. These are pre-built strategies. So credit spreads and debit spreads, where you're actually always selling an option to help pay for the ones that you buy if you're doing a debit spread. And this is all done with technology. Our proprietary algorithm automatically creates these strategies. We've got one-touch responsive trade alerts, any market condition, and then our favorite indicator, the risk thermal indicator that we mentioned. And then, so we're going to jump into a quick demo here. And let me switch screens if you bear with me just a moment. Okay. Sometimes these things get a little glitchy when you switch over, but I think we're okay. And if not, somebody will let me know, but yeah, it looks good. Okay, so this is the dashboard for Theta Trader. And you've got your menu items up here. This is a demo account I use for presentations, but if you had a Theta Trader account, it would look very, very similar. And first thing up here, you'll notice any active trade alerts, and we'll jump into that in more detail. You'll notice your Theta trades for the day right here, and then your open short positions, any premium collection strategies here, and then open bot positions right here. You'll notice the color coding here, and we'll explain how that works and some of the details there. And then this is your account information that's coming and integrated directly with your AltaVest trading account. And then you've got the quotes here on the stock indexes. And the three indexes we're really primarily trading with Theta Trader are the E-mini S&P 500 right here, the E-mini NASDAQ 100, and then the E-mini Russell 2000. Excuse me. And then really the primary reason we do that is because that's where there's so much liquidity and volume. And if you're trading these out of the money spreads, whether you're buying or selling them, then you need those strike prices to be available for you. So sometimes these strike prices could be quite deep out of the money that you're buying and selling. And if there's no volume or liquidity, then it just doesn't work. You can't trade the spread. And that's kind of a problem with a lot of individual stocks and ETFs, unless you're trading the top 10 most heavily traded issues. And also with an index, it's less volatile. So that's another key component too to keep in mind. A lot of these non-directional strategies work much, much better with an index. But so here you have your bullish strategies that are pre-populated and your bearish strategies that are all pre-populated, and then non-directional or neutral strategies. So what we'll do here is, why don't we look at a couple of the, let's see, this is the Condor, has 44 days till expiration. And you can see it's pre-built for you. It's all pre-selected, the strike prices, and this is what it looks like on the graph. This is the call spread you're selling, and this is the put spread that you'd be selling. And you just look for the market to stay essentially between those red lines. And that's what it looks like on the graph. Then here is, let me expand this here a little bit so you can see better. So here is a table of all the details on this trade. And you'll notice your days till expiration, your put risk, call risk, commissions, cash required. And this is your maximum profit potential at expiration, targeted return on cash, and then targeted annualized return at expiration. And these numbers are there to compare one trade to another. That's really the best way to look at those, kind of on a relative basis. But look at here. The algorithm has chosen these strike prices here and to sell this call, and then to buy this put and to buy this call. So the algorithm has built the trade for you. And let me point out something that's really important. So the put that you're selling is a 67.50 strike. So this red line down here. And the algorithm chose that in part because of the delta. The delta is 7.83%. So that means there's over a 92% probability that this put will expire worthless to somebody else. So keep in mind that you're selling it to someone else, you're collecting the premium, and someone is paying that premium. So you collect the premium from the other person, and you have a much higher probability of success on this trade. Look at the call option here, the 79.50 strike, 7.76%. Again, very similar, 92% probability that the call that's being sold, that you're selling, is going to expire worthless in somebody else's hands. So that's the way to look at it. And then you can see it's defaulting to a sell because you're selling the spread, collecting the premium, and it always defaults to a 1, but you want to do 3 or 4 or 5 or 10 or whatever you want to do. You can see your cash required, profit potential going up and down as you do that. And we'll go ahead, just do 9 of these for the sake of being different. And that's how easy it is. You see the order being placed, and then it just assumes you're filled in this demo account. So that's how easy it is to do a condor. Now we can do a dragonfly. Let me show you that here. So here's a dragonfly. You can see there are anywhere from 33 to 44 days till expiration in terms of dragonflies available. And this is what the dragonfly looks like. I think this graph helps a lot. So you're selling these 4 calls, buying 3 further out of the money calls as a hedge or protection, and then 1 closer to the money call. And then you same structure with the puts. And again, this is a non-directional or neutral strategy. So from this point here, you want the market to kind of just stay within this range between those red lines. And then you see this vertical purple bar, that's the expiration date. And the key thing here is the call that you buy here, in this case, is 50 points closer to the money compared to the 4 that you sell. So the delta is higher, and that means it would react. It's more sensitive to price movement, and you own it. So it's going to provide some additional protection versus what a condor can do. And the same with the puts. And the dragonfly can be more robust and more risk averse, but you do give up a little profit potential because you actually pay money to buy this call and this put, and that costs a little bit of money. You have to give up some profit potential when you pay that extra premium, sort of like just buying some insurance, and you increase your premium if you buy more insurance, same kind of thing. But we like the dragonfly a lot, and I'll show you why. And you can see here, same type of details on the dragonfly that you saw in the condor. And you'll notice the cash required, profit potential, it's quite a bit different than the Condor. That's because the Dragonfly you sell in quantities of four calls and 4 puts. The Condor you can just do, one at a time, of course. So that's why the margin is higher, because instead of doing just one short put and one short call, you're doing 4. So you see here the cash required, profit potential, targeted annualized return, and so forth. But you notice the put and the call that you're selling, though, the put has a delta of 9.68 and the call has a delta of 6.54. So nonetheless, these are higher probability outcomes, and that's why the algorithm is deciding to tell you, hey, this is one you ought to sell to somebody else. There's over a 90% probability this put is going to expire out of the money. And in this case here, you've got a 93.5% probability of this call that you're selling to someone else will expire out of the money. Then the ones that you buy here are a hedge, or they're basically protection against unlimited loss is really what that's about. So we'll go ahead and do maybe 3 of these, and you can change the price here. You're trying to collect 8.3 points or higher. And we'll do 3 of those just for the heck of it. And we'll go ahead and place that order. And it's just that simple. The order's placed. And if it were a real live account, you might get a fill back, very, very shortly, or it might have to sit during the day before it gets filled, or it's possible it's not filled at all. It just depends. So that's an example of how to place a neutral Dragonfly trade or a Condor trade on the E-mini S&P 500. And of course, if you were bullish, you could choose from any of these kind of trades here, or bearish right here, any of these pre-populated strategies. And those are available. Now, what I want to show you here is, let me point out, we've got a really interesting feature, a trade simulator. And I've loaded a couple here already to show you the distinction between the, let's find it here, between the, here we go, the Condor and the Dragonfly. Let me squeeze this down. Okay, so here's a Condor placed backwards in time on May 1st. And we'll use these buttons to go forward or backwards in time, or you can go all the way to the end, but we'll go ahead here. And you'll see the RTI is turning colors, getting yellow. Just elevated risk, but still don't do anything. And it gets green, so all is well, do nothing. The trade's losing money, but still the RTI says, and the algorithm, the secret sauce behind the curtain, says don't do anything. And then you finally get a green RTI, so things are looking better now, but still do nothing. And then you get a blue RTI with 7 days remaining, and that's your profit-taking order. And again, that can be automatically done for you. Sorry, folks, I just had to take a sip of water there. Okay, so that's the June S&P Iron Condor, and you see here with 7 days till expiration, you have a blue RTI. So here is the June S&P Dragonfly. So this is the same exact trading activity. You placed a trade on the same day, May 1. Be back here on May 1. So instead of a Condor, you do a Dragonfly. You can see the trade's losing money, which is normal because theta decay has to work. Time has to tick away. And then you get a blue RTI here that says to take profits. And you had a blue RTI with 11 days till expiration. And you compare that to the Condor, where you had to wait another 4 days before you could close that one out and take your money and move on. So a big benefit of the Dragonfly compared to the Condor is oftentimes you'll get an earlier signal to close out that trade. And then remember too, we're always going to be out of these trades before the expiration date, whether it's for a profit or a loss. Let's look at another one here. Here's another Condor. Okay, so this one here just went almost, after a week or so, just started taking off. The risk was too great, and this ended up being a losing trade. So that's the red RTI. And again, if it turns blue or red, whichever comes first, Theta Trader will automatically place that order for you. You don't have to do anything. The orders are placed on your behalf. Theta Trader is monitoring your account, and it will place that order for you when you have a trigger for a red or a blue RTI. Red is too much risk, take your loss, and of course blue is for profit. So you can see that that condor was a losing trade. Now remember we talked about the dragonfly has a different structure because you actually own this call here and you own this put. So we're going to go back and just double check that we're on the same day, April 30. So here's April 30. Instead of a condor, here's a dragonfly placed on the same day, same expiration. So again, market's doing the same thing, obviously moving higher and higher, getting really close or through that upper boundary, but you don't have a red RTI. You do have orange, which is elevated. And actually here, look what happens. You end up with a blue RTI. So you end up with a profitable trade. Meanwhile, had you done a condor, then you see you had a red RTI for a losing trade. So the dragonfly can sometimes be more robust, and because you own this call option in this case here, it provides that additional insurance. So it gives you more staying power. So that's really the key distinction there. And then let's go ahead and show you how to make this happen under settings. So under the settings, under my account, you'll see the activate risk manager. That's the red RTI. And then activate profit directive. That's the blue RTI. So you'll check this box. And then you can choose the default level, which is the red RTI at 50%. Or you can choose the orange level at 38, or you can make a custom number anywhere from 25 to 50. So that's fine if you want to go with a different level, but keep in mind if you have a lower risk threshold, you'll have more frequent losing trades triggered, but the magnitude and the size of each loss will be smaller versus the, say, the 50 default rate. So that's how you do it. I just keep it at 50 for the sake of the presentations. And then you'll just save those settings, save them here, and that's it. That's all you have to do. And then Theta Trader monitors your account for you. And if you also had questions, there's a great help file as well in Theta Trader explaining all of the color coding for the RTI and what that all means and all the definitions for the spreads. And there's also a tutorial series here. These are all videos and help you navigate with these video tutorials, also placing trades. And this is really interesting too. Here's a masterclass education course that we have embedded in Theta Trader. So anywhere from introduction to basics of futures trading all the way down to advanced index option spreads. So it's all right here as part of Theta Trader. And then we also have, don't want to forget that, we also have up here, you find it under TradeScope. It's our daily newsletter. So it gives an idea of what we're looking at with a few simple graphs and a little narrative on what's happening with some of the, I guess you could say, play-by-play on that day, and then what to look forward to moving ahead. So this is just a 1 or 2 page document. Clients really like looking at this one. You don't have to search, all over to find something relevant. It's all right here. And then here is something else I wanted to point out. Let me go back here. You'll notice that you can go back in time as well with the trade simulator. I showed you that. But then there's also, you can see all your closed positions and open positions on one page. And let me take a look here. These are the orders we just placed. So here's how you would look at your closed positions. And again, this is just a demo account for webinars, but there's 20 closed positions on this page here, and you'll see 17 winning trades, 3 losing trades, and your total profit and loss. But what's interesting here, you have 16 short option spreads and where you've collected premium, and then 15 of those were winners and 1 was a loser. And then you had 4 long or bought positions, and 2 were winners and 2 were losers. So it kind of makes sense even just with this demo, randomly placing orders, that you're going to have more of a winning track record with your short option positions versus your long or bought option strategies. So I just wanted to point that out. But again, don't make too much of the wins or losses on here, but just wanted to show you that you can go back in time and look at all your closed positions and trade history. Now here I want to show you the trade alerts. So you'll see you can view them here and here by clicking here and here, and I'll show you not only do they show up on your dashboard, you'll receive them via email and on your phone. But here is the first trade alert. This is the S&P E-mini Dragonfly spread for today for the September position, or expiration, I should say. And so this is what the trade looks like. You see the calls and the puts here and here. And remember, you're collecting premium. And I want to point this out here. It's pre-selected in terms of the quantity. So ThetaTrader knows your positions, and it knows the quantity that's appropriate for how much cash you have in the account, how much available capital you have. And so really, all you have to do, if you like the look of the trade, is just touch accept. But you could change the quantity by going lower and decreasing the exposure, but you cannot add to your exposure on the alert. So hopefully that makes sense. You can see it there. But I'll go ahead and just accept the alert. If you don't like it, you just touch reject. But you can see here the premium being collected, all the cash required. And this is all net of cost and commissions and everything, by the way, everything in ThetaTrader. And they have 72 days till expiration. And again, you're not planning to hold this till expiration. Oftentimes you place a trade like this and maybe within 30 days, you'll be able to close it out. I mean, not every time, but quite often. So I'll go ahead and accept that one. And there it is. It just shows up here, right here. And then I think there's one other. Yeah, so here's another one. This is actually a butterfly, a bullish position. So bullish position, if you're not familiar with the butterfly spread, it doesn't really matter, but you can see it right here. You sell these two calls, collect premium, and then at the same time you use basically that premium to buy closer to the money call here and a further out of the money call there. And essentially this trade works when the market ends up in a range within a certain period of time. But they're nice because they have a very low level of cost to really get involved. You can see here it's a butterfly call spread for next Wednesday's expiration, the dollar index, the Mag 7 stocks, so on and so forth. Next Tuesday's CPI report could erase some of the rate hike fears. Actually, what we're thinking is CPI is going to be a lot lower than what people expect because the energy prices, working their way through the economy, and so that's going to be a little bit dovish in regards of Fed policy, and markets like a dovish Fed. So anyway, so if you like what you see here, you want to do this kind of trade. Again, you could adjust the quantity lower if you wanted. We'll just go do 35 instead of 40. And this is just my demo account. And then you just touch accept and that's it. So that's how the ThetaTrader dashboard works. Very simple, very easy to use. Again, you've got the three markets here and the bullish, bearish, and non-directional strategies. And everything's available at a glance right on the dashboard. So hopefully that makes a lot of sense. Now I want to show you what I think is probably the best feature of all. Let me just switch over again. Okay, so how about the trade alerts coming directly to your phone? So these are one-touch responsive alerts. They're integrated with your AltaVest account, and they come right to your hand, and all you do is touch accept or reject on your screen. So it's just that simple. So here's what it would look like. You'll have your phone, you'll get a text message with a link. You'll touch that link, it'll take you directly to the alert. Here's an example of an alert, another dragonfly. You see the calls there and the puts, so it should look familiar. And the quantity, again, pre-selected for you based on your account size and other positions in your account. If you want to go higher, you can't. but you can go lower for some reason if you want to take the quantity and just go down a little. All the details there, and then you just touch accept. And then our Theta Trader magical technology handles everything for you. And then if you have the RTI automated with the risk and the profit taking, then your account is being monitored day by day and the orders are being placed for you. So here's how to get started using Theta Trader. So that includes everything you just saw, the software, the theta trades, which are the pre-generated option spreads, the RTI, that's our favorite indicator, the risk thermal indicator. So automated risk and profit controls. Then you have the trade simulator. So we looked at a couple of examples there. And that's a great, actually a great education tool and learning tool and really just an analysis tool to go backwards in time and be able to test, these six-legged spreads or four-legged spreads or two-legged spreads or whatever you want to do. And that's actually a really, really great tool. People like using that a lot. So all of that together valued at over $3,500 with all that software. And again, we talk about the RTI, the blue or the red. Very, very user-friendly. Then, of course, you have the trade alert technology. You simply touch accept or reject. And these alerts are already integrated with your trading account, so they're live. And then once those trades are placed and if they're filled, then again, you have that RTI to automatically manage the position for you. So the yearly value there, over $4,400 for that trade alert technology. So just to summarize, Theta Trader, that includes the alerts valued at over $8,000. And then you have us, your private coaches. So we'll work with you and share screens with you. And we're all licensed and experienced, been doing this for many, many years now. And I did look at what the cost of a trading coach might be. So I think this is out of ChatGPT. So private trading coaching, starting at $2,000 for a 3-month commitment or a comprehensive package ranging from $5,000 to $15,000 for a 6 to 12-month period of time. So yeah, I've seen that often. It's not uncommon, and that's fine. There's no reason why, um, people shouldn't necessarily pay for a coach or pay for education. And so what we're saying is, yes, the knowledge is priceless, but with Theta Trader, all of the training and the coaching and materials and access to us, that's all included. And I think that's a value of at least $10,000. So we'll be your co-pilot. We're licensed, we're experienced. We'll review your trade history, discuss your goals and trade strategies moving forward. So with Theta Trader, your membership, you get all of the technology that includes the trade alerts and the simulator and everything else, and the private coaching valued at over $18,000. And then, yes, it does sound a little bit corny when you have these, but wait, there's more. I just don't want you to forget the daily trade scope. So we have that research available that's only available and proprietary to our Theta Trader members and clients. And you're thinking, okay, this is great. I want to do it, but I don't know. I've never traded futures or futures options. Well, an option works the same way, basically, no matter what the underlying asset is. So if you understand options, you understand by and large futures options. But remember too, I mentioned the training we have in Theta Trader with the video tutorials, kind of have our master classes, what we call it, on futures and options. So futures overview, basics, options, futures options, stock indexes, and then advanced strategies for indexes as well. So all that's available. It's all part of the Theta Trader program, valued at $1,900. So that research there with the Theta Trader and the classes there valued at almost $3,000, $2,952. And then the online tutorials, so you're never alone, whether it's with us or with the video help in Theta Trader. So that's all part of Theta Trader as well. So just to summarize everything, Theta Trader software, the alerts, the private coaching, and all the education valued at over $21,000. And of course, that's not what we offer the Theta Trader package at. We did used to do this in person at $4,000. So absolutely That's something that we did live events often, different cities, and have a room of investors and traders, and that was a lot of fun meeting people. But of course, actually, we would have kept doing that, but the pandemic kind of put a stop to that, unfortunately. But our retail price on the website, $9.97, but we're going to do even much better than that for you. And this is a lifetime membership. So our discount with the Synergy Trading event here. So what we've done here, you can become a lifetime member, only 3 payments of $197. And there's the link, cf.altivest.com/TR. And there's the QR code. Take a picture of that and take you right to the order form. Here's my direct phone number and email. So if you had any thoughts or comments or questions, good, bad, or otherwise, you're welcome to reach out to me. And now here's what we can do for you. You can save another 16%. Here's the one payment option of only $497. And again, this is a lifetime membership. So here you have your 2 choices, 2 ways to become a member, either one payment, $497, or 3 payments of $197. And that offer expires tonight. And really, to summarize the offer, you don't really have an excuse because we do have a 30-day money-back guarantee. So if you sign up and 29 days and 23 hours later, you don't feel you can go forward, don't worry about it. Just let us know. We'll refund your sign up. And then also, you can get a free membership as well. $100,000 or more in your account, you get a 100% rebate. And if you have $25,000 and above, you get a 50% rebate on that membership fee. So a lot of people like to take advantage of that. Who doesn't like getting something for free? And I mentioned the money back guarantee as well. So you don't have any risk on your membership fee. I would recommend, if you're at all thinking about doing this, go ahead and get signed up. You get your login credentials. You can start using the platform in demo mode, getting familiar and comfortable with it, start talking to us. And if something changed in the next month and it's not for you, that's fine. We'll just rebate your sign up fee and life goes on. So really, you don't have any risk on that membership fee as you're going through the process of getting your credentials to log in and learn more about Theta Trader and what we do. And then here's a few FAQs, and I've got a little bit more time here, so I think we're on track. Advantages of trading E-minis, I kind of touched on that, which is really liquidity. And here's a few, again, AI, lower cost, capital efficiency, defined risk with spreads, reduced volatility exposure, improved probability of profit with spread outcomes where you're selling options, cost-effective directional and range strategies. We looked at that already with range-bound strategies. Time decay, capturing theta decay, absolutely. Flexibility. So yeah, you can do things that have asymmetric returns or something that has more of a modest return profile. Then we talk about execution and liquidity on the E-mini underling. So that's a big, big advantage on the E-mini option spreads. And that means too, you're going to get better execution in a more liquid market. So, and also the E-minis allow the Dragonfly spread at one price and one order. So again, you're doing 6 different strike prices with the Dragonfly as one order at one price. And you can't do that really with securities. If you can, if someone's done it, let me know. But I've seen different platforms. I've been on different platforms, and you have to break up typically an order like this into 2 separate orders, at least the ones I've seen so far. So that's a big advantage. You get one price at one order to do those 6-legged spreads. Here's another advantage trading the indexes. You're not looking at filtering through 6,000 securities and ETFs and individual stocks. So those premium collection spreads on the stock indexes, these are limited risk professional strategies. You can customize for any account size. You got the higher probability outcome with the deltas when you're selling the premiums. These are flexible strategies for all market conditions. You have a wide margin of error, so you don't always need to be accurate or pick a direction. Here's a recent trade. You had the 8150 calls up here, 6475 puts down here, and you can see 1,675 points between the short calls and puts in that example. And here's another example recently, over 1,800 points between the short calls and the short puts on this particular Dragonfly. So you have a wide margin of error. And again, to summarize, these short option strategies where you're collecting premium, they can be non-directional. You could sell some out of the money put spreads, or you could sell some out of the money call spreads. Long option strategies where you have a debit spread. They can be useful at times. They are limited risk and they have that asymmetric return. So it's kind of like swinging for a grand slam. That's kind of the difference. If you're doing a debit spread versus a credit spread, you just want to get to first base, and a debit spread, you often want to get, all the way to home plate. But the disadvantage is it has a lower probability of outcome. So you can see you could do a straddle where you buy a call and you buy a put and hope you get a big move up or down. Or you could just simply buy an out of the money call spread and hope it just continues higher, or an out of the money put spread. And there's no margin calls when trading spreads with us. These are all coverage strategies. So these are not unlimited in risk. So no margin calls, you don't have to worry about that. And you have tax efficiency. So all E-mini options, all futures and futures options have tax efficiency. So what am I referring to? Well, the IRS considers these what they call 1256 contracts. So they have the benefit of a favorable 60-40 tax treatment. So that means 60% of your gains are taxed at the lower capital gains rate versus your personal rate, 40% taxed at your personal rate. So that can end up being a big difference at the end of the year with that tax efficiency. There's no more itemizing with each trade as well. You'll get your profit at the end of the year on your 1099, and that's all you need to do your taxes. You don't want to end up like this poor guy here. And always consult your tax attorney or advisor, though, for specifics and details on tax issues. People ask about IRAs. Yes, self-directed IRA, tax-advantaged accounts. You can trade with us as well. We work with Equity Trust. And if you tell them you're with AltaVest, they will waive their setup fee. So that's very thoughtful of them. We've worked with them for many years. And then just a reminder as I wrap it up, and maybe there might be a few questions, but just a reminder here, we are a full service futures and options brokerage firm. So we talked about theta trader and trading options and option spreads, and we do an awful lot of that. But we have clients doing other things too, just typical trades in commodity markets, a lot of gold, a lot of silver, things like that, and more things you're familiar with. But I also want to point out this. Did you know individual stocks are now available as futures contracts? And you can utilize over 6 times leverage versus individual stocks. And what am I talking about? Well, single stock future is actually coming this month, 55 stocks. And so these are single stock futures. And let me, here are some of the symbols here, Amazon, AMD, Bank of America, Caterpillar, JPM, Intel, IBM, Google, all the big ones. I kind of showed this earlier, but let me kind of give an example. So this is really the power of capital and operational efficiencies. That's kind of a good summary there. So how it works is each contract size represents 100 shares of the underlying stock. So the contract is 100 shares of NVIDIA or 100 shares of IBM. And here's the real kicker, though. Here's an example. Here's a fully funded investor versus someone trading a single stock futures. And you both have $20,000. So a fully funded investor, they have $20,000 and they use that to buy 100 shares of NVIDIA at $200 a share. So that's a $20,000 investment to buy 100 shares of NVIDIA. But a single stock futures investor purchases one contract of NVIDIA, and the margin is $3,000 of capital. So instead of $20,000, they've used $3,000 of capital to have basically a position in 100 shares of NVIDIA. So I think that's going to be really exciting, and we're going to help you get involved with that. That's coming in just the next week or so. So those will be available, and I think that'll be a really exciting way to have exposure to some of these popular tickers. And then we talked a little bit about commodities and how clients like to trade gold and crude oil and other things as well. Well, what's the best performing asset in the last 20 years? Gold. So if you didn't know that, you know it now. And then why is that? Well, gold has now overtaken the U.S. Treasuries as a global central bank's top reserve asset for the first time since 1996. So essentially, central banks are selling treasuries, U.S. Treasuries, and they're buying gold. Here's that chart just from a different angle. So it's the white line there, of course, is your gold and then treasury holdings. Talking here about gold moving up to 10,000 by the end of the year. I don't know. It's hard to make price targets, but generally speaking, we don't think the run in gold is over. And, look at this. China is increasing its holdings here, the gold line here, and they're selling dollars and treasury securities, I should say. And then, here's another People's Bank of China buying its most gold since 2003. And the reason for that really is inflation. The purchasing power of the US dollar just keeps declining and declining. So the currency is getting debased, and something like gold as a hard asset, then it just priced in dollars, it's just going to keep going up in value. And it is the largest asset in the world, $28 trillion. NVIDIA is at 4.9 trillion. So kind of amazing when you put it in context. And then really, gold reserves as a percentage of US government debt are still dramatically low. And if you want to equal the high of 1980 that gold had, in a inflation adjusted basis, gold would have to be $26,000. So very interesting to think about. Energy prices, I don't know. That's been a real head scratcher, but the bottom line is we've been selling our strategic petroleum reserve, and it's near record lows right now. That's why. So we kept supplying the market, at least in the US, and that's what's helped to lower prices after the last 2 or 3 years. So that can't go on forever, though. You can see here we're at record lows in the strategic petroleum reserve, and you can't get much lower, else the salt caverns actually collapse. So kind of interesting to keep in mind, but let me wrap it up. We like alternatives, may improve diversification, lower portfolio risk, commodities, gold, things like that. People are moving away from the 60/40 portfolio. Even BlackRock is moving away, Bank of America, capital is rotating into gold. So that traditional 60/40 stock and bond portfolio mix is outdated. And the reason why is because it just hasn't been working like it should in recent history. So we like theta trader, we like alternative strategies, go anywhere, flexible strategies, non-correlated strategies. And that's a lot of information, and there's probably a few questions, and I'll be glad to answer them if I have another minute or two. Let's see here. Let's see, I don't see anything in the chat, but yeah, that's the link there. And that's my direct phone number and email address if you have any questions. But again, if you're kind of just on the fence, feel free to sign up, and then we'll help you along the way and get your login credentials and at least start digging into it and receiving alerts. That's a nice thing about it, is once you get your login credentials after you sign up, you'll start receiving alerts immediately. But that'll do it for me. That's all I have at the moment, unless there's some questions, David.
I'm not seeing any at the moment, but yeah, we have a couple, well, about another minute if anyone has anything.
Let me think. Oh, well, here's a question people ask. I'm in Canada, and can I trade with you? And the answer is yes or no. It depends where you are, so let me know. Same thing with Europe. It just depends where you're located. And then people ask about how much to start trading with. Well, it's really how much risk capital are you comfortable trading with? But, call us and email, talk to me. We'll be able to answer that for you.
Okay. All right. Thanks, Eric.
Thanks.
Someone also just asked about the recording. I am live streaming to YouTube this whole event. So basically that means the entire day is instantly archived for you to review at any time. And then also separately, I am recording each individual presentation, and I will get those processed and posted later tonight as soon as possible. So, and then the individual recordings for yesterday and Tuesday are also available. So that second link I just posted is the full archive for this event. And I'll post Eric's link there one more time, so be sure to check out his offer. All right, next up is David Gonzalez. David, are you there?
I'm here. I'm here. Let me just share my screen really quickly. 1 second.
And all right, thanks again, Eric. And yeah, then next up is David Gonzalez of thefivers.com. David, I see your screen now. Looks good.
Awesome.
And are you ready to start?
I'm ready to go. How you doing?
I'm good. How are you?
Great, great, great. Always
All right.
amazed at the wonderful name you have.
Yes.
Yeah, every time they
Yes.
say David, I get caught off guard. But anyways, all right, let's get into this.
right.
I'm glad Eric was just talking about indices and futures because I am a futures trader primarily, and I'm glad he touched on not having this scan thousands of stocks every morning because I used to do that, and I don't have to do that anymore because I trade futures. But anyways, let's get into it. Welcome. So over the next hour, I'm going to show you how I read what the crowd is doing using 3 tools: VWAP, volume profile, and cumulative delta. So my goal is not to dump indicators on you. It's just to get you thinking about price and volume, the way people moving size think about it. And by the end, you'll understand why these tools work, not just where to click to turn them on. And on top of that, by the end, I need you to stay because I'm going to show you 400 days of data and a special indicator that I have built, custom made, and that we share with our Fivers community. Now, the Fivers Futures is a proprietary trading firm. I am an analyst and trader over there. We fund people to trade. So basically, you prove to us that you're able to trade. We fund you with capital and an account, and we share the profits. So let's get into this. Like I said, today we're going to talk about VWAP. So I see that as the crowd's average price, right? And we're also going to touch on anchored VWAP. We're going to talk about the volume profile. So it's things like point of control, value area, and the nodes. We're going to talk about cumulative delta, touch on it a little bit, stacking all of them and how to enter your trades, and also my custom opening range indicator with 400 plus days of data. So I urge you to stick around, sorry, and at the end I'll have a little bit of insight. So I'm going to pull you away from the markets a little bit. That's everybody knows about Black Friday. By the way, if you have questions, go ahead, put them in the chat as I talk. I'll touch on them, or we could just do questions at the end, however you prefer. So let's step away from the charts. Picture a Foot Locker. Everybody wears tennis shoes on Black Friday, right? And you have, I don't know, a pair of Jordans that normally sit on the shelf at the $150. Nobody's rushing to buy. Well, maybe some people are, but then the store announces a doorbuster 60% off opening at 6 a.m. What happens? Well, you're going to have lines that form around the block. The seconds the door open, there's a stampede. People are grabbing boxes off the shelf as fast as they can. They're going to pay. They're getting multiple boxes, etc. Now hold that picture because I want you to notice what the crowd just told us. At $60, this shoe is wildly in demand. So the crowd showed up with force. That rush of people is how I want you to think of volume, and it applies directly to the markets, right? So if we were to think about it visually, and I actually waited and took, because a lot of people make presentations and the examples are pulled from way back in the day or whatever. Everything I'm going to show you is from today's charts, right? This is screenshots from an hour ago, so we could see everything in action. And I'll pull the live chart so we can see how the indicator I'm going to talk about acts and how well it performed today. So basically, the shoppers are the volume, where the crowd shows up is the value, where it doesn't is rejection. But a story only gets so far. So for example, if we were to look at this chart, you could consider this area here is where the shoes were trading at $150. Of course, this is the NASDAQ futures, the NQ. And then when it drops here, we could consider that the door buster price, so $60, right? And then we have this rush of volume here with these red bars, right? And then we have the cumulative delta showing us that, okay, we have decreasing volume and the rush of volume here. And I want you to look left at the volume profile at these bars. This long bar here. So the way to think about the volume profile is the volume bars rotated on the side and the volume at price, right? I'll get a little bit more into detail in a few, but just think that, okay, we had our shoes selling here at 150, the price drops, everybody rushes in to buy, right? This is the simplest way to think about it. Now, the real way to approach it, because the market is an auction, right? It's not like a price where it's fixed. There's bidding, back and forth bidding. So we're looking at aggression, which is why I use cumulative delta. We're looking at where the price is closing. So where is where are people agreeing on value? Where is the value area? Where is absorption? So when somebody knows something and quietly outbids everyone, we call that absorption. So the market is essentially a nonstop auction. Now, what is VWAP, right? I'm going to touch quickly on VWAP. As you know, the acronym means volume weighted average price. It's the average price traded today, weighted by size. It's a benchmark that institutions use a lot. That's why a lot of people gravitate towards it. That is why I use it a lot. So basically, here's the part that matter and why almost nobody explains it. When a big institution, a fund, a bank desk has to buy 10,000 contracts, they get graded on execution. And their benchmark is VWAP. So if they bought below VWAP, well, they got a good fill. The boss is happy. But if they paid above VWAP, they did a bad job. So there's a massive structural pool of money in the market whose entire job is to transact around VWAP, right? That's why price so often gravitates back to it. So it's not a magic line. It's a line that a lot of real money is actively trying to trade against. And that's why it works, in my opinion, right? Now, we need to know about the formula. How is it calculated? Well, it's friendlier than it looks. I see there's a math formula here, but you take each trade's price, you multiply it by how many contracts traded, add all of those up, divide them by the total number of contracts. So price times volume, sum divided by volume. Now, why is it weighted by volume? Well, compared to a regular moving average, call it maybe a 20 period MA, the 20 period moving average treats a bar where 50 contracts traded exactly the same as a bar where 50,000 traded. But VWAP doesn't. VWAP says the price where a huge amount of business happened should pull the average towards it, and the price where almost anything, nothing happened, barely counts. So a VWAP is naturally tugged towards the prices where the crowd actually cared about it. So let's call it a crowd weighted average, right? Not a time weighted one. So this is an example of VWAP. This line in orange here is VWAP, and you could see, okay, we have price fall down. It's anchored to the beginning of the session, and then when price pulls away and is too far from it, then it reverts back, right? So this would be an opportunity for a mean reversion trade. So all VWAP is telling you, okay, if we're above VWAP, we are bullish, quote unquote. And if we're below VWAP, we are bearish. Now, if we are below VWAP, that means that technically during the session, price is trading at a discount. And if we are above, well, then it's getting expensive, right? That's one way to think about it. There's also anchored VWAP because regular VWAP resets at every session. So here I have various VWAPs anchored to different areas. So in orange, you'll see the regular traditional VWAP that I use that is anchored to the beginning of a session. And then I have a couple other ones anchored. This one is anchored at the opening high. This one is anchored at the opening low, et cetera, et cetera. Now we can see today we have convergence of all of them, and then price takes off. Well, that tells you that institutions realize that this was a very good area to to buy, right? We could also see the huge volume of increase. So think what I just mentioned, the store. We have people rushing in the store, and then we have the aggression here on the cumulative delta. I don't have the volume profile here, but we'll get into that. By the way, these are the last 3 days of trading, right? I wanted to have recent examples so we could see things that are happening right now in the markets as we speak. So volume profile, basically, like I said, it's consider the volume bars rotated. It's better for me to just show the examples. So here we have the last 3 days with the volume profile anchored at the beginning of the session. So think of it like this volume here rotated and shows you the volume at each price, right? How much of it traded. And there's 3 areas to consider. We have the POC, so point of control. It's the most traded price, the fair value. We have the value area high, so the upper edge of the value. And then we have the value area low, so the lower edge of the values. And the value area is 70% of the day's volume. So what does that tell you? Well, it tells you that when we're at the point of control in this, for example, red bar here, red bar here, red bar here, this is where, this is the value area. Now, sorry, this is the point of control. But when we have low volume nodes, so basically below here and above here, this tells you that, okay, we're trading at a discount. So it might be a good area to consider buying, right? We could also see these volume bars evolve during the day and tell you where the contract is being traded the most. And we're going to look into how to pay attention to that and how to use that in our favor. Why do they work, right? So the point of control acts as a magnet. Think of it like a rubber band or a magnet. When price moves away from it, it tends to revert back to it, right? And then the value area high and lows are the edge. So we could consider them support and resistance. So let's look at this example right there. So let's look at this first day on the left, right? We had our point of control here. We saw price move up, that completely gets sold off, and then revert back to the point of control here. But what happens once it gets back to this point of control? Well, it gets sold again. So that's the part where I'm talking about. This acts as a magnet very often. Now, price continues to move lower. Price really travels to the downside, and then we have a new session and a new volume profile develops. Now, here's an interesting thing to consider. When you're trading, it's always good to look left, right? And if we consider today's session, well, what happened? We had our point of control right here around 75.52 on the ES. That point of control, today's point of control, and that's why I have this blue rectangle here, was yesterday value area high. And the prior day's value area low. So what you could do is line up these areas over time, and they will give you an idea of where to pick your spots. So we had our value area low on one day. That value area low became the value area high, and eventually became the point of control where we could buy from. So there's a lot of confluence happening here. The other layer we could add is we were trading above that orange line, which was VWAP, so volume weighted average price. What do we see here on the volume bars? Huge increase in volume once we trade at this price. We see aggression on the cumulative delta indicator. So all these indicators stacked on top of each other give you a strong bias and a strong incentive to enter long. And we actually took this trade today, and I'll illustrate it in a few. So moving along, I'm going to touch on shapes really quickly. I don't necessarily use them, but since we're talking about them, I want to touch on them. Usually the volume profiles will have different shapes. They call them P shape, B shape, D shaped. and they usually mean something. So if you have a D shape, it's the days in range, everything is balanced. If you have a lowercase b shape, well, it's a sell-off, right? It's often bearish. A P shape, we have a drive up. A P shape, for example, here, what happened? Well, price didn't spend a lot of time down there. It moved up really fast. So that's what that explains, right? But I think looking at the profiles over multiple days and finding areas of confluence is where you find the most value, not just looking at the shape of the profile, right? Looking at the extremes. Now, let's get into cumulative delta, right? So delta is equal to aggressive buys minus aggressive sells. So basically, it's telling you how, for lack of a better term, how aggressive buyers and sellers are, right? Basically, here's the mechanic. Every trade has two sides, but only one side is the aggressor. So if you send a market order to buy, you lift the offer. You're the aggressive buyer. You wanted it now and you paid up for it. But if you send the market order to sell, you hit the bid. So you're an aggressive seller. Delta is, like I was saying, aggressive buying minus aggressive selling over some period. And then the cumulative delta just adds it all up into a running line throughout the day. So you can see who is more aggressive. Now, the thing that makes it useful is divergence. So say the price grinds up to a new high, like we have here, for example, prices really moving up to a new high, but cumulative delta, it's not making a new high. So right there, today's not the best day for divergence, but usually you would see on the turn that the cumulative delta would be flat or opposite to what the price action is doing. Well, that's announcing basically that there's a drift and that there might be a turn, right? There's no real force there. Moving along. So when we layer all these things together, VWAP, we have a bias. Who's winning? Are we trading above or below? We have volume profile. So where's the value? Where is are we at the value area high, a value area low? We have cumulative delta used as sort of confirmation. So who's being the most aggressive? It's a stack. And we take trades when all of these things agree, right? Now, I, as a futures trader, usually trade the opening range, the New York cash session. We trade it live every day with the Fivers futures. And usually what happens is the first 15 to 30 minutes will set the tone for the rest of the day. And we're going to see practically what happened today. And then we'll have the range high, the range low, and then, the first battle lines. So that's where I unify all these things and add my custom indicator. And that's where my edge lives. So I call it reversal because it's a reversal indicator. So it uses everything we just talked about, sets levels and triggers on what makes sense as a entry signal. So it kind of takes the guesswork out of it. Now, it's not going to be able to trade for you. It won't be able to make decisions for you, but as in the name, it's called an indicator. It will give you a reference in order for you to enter and exit, or kind of have an idea of where you should be entering, where you should be exiting. And today it played out beautifully. So this is reversal in action today on the NQ. So this is the open, right? What the indicator does is that it gives you the opening range. So we'll have this, you can see this blue line here. Let me see if I can annotate. All right, very good. We have these blue lines here. Are you guys able to see the pinkish arrows I'm using? Can you see them, David? Yes. All right. Perfect. So these two lines, these blue lines, are marking the high and low of the range. And layered with the volume profile, we could consider that for the first 15 to 30 minutes where the value area low and highs are kind of being defined. And today, that's what happened. Now, the indicator defines these two areas. Then it gives you the 50%. So basically the half point of the range. Now, why is that very important? Well, think about the store, and that's how I started with the analogy. Think of our shoes, our Nike shoes. Our Nike shoes are trading here at, let's say, keep it simple, $100, right? And here they were trading at, say, $20. All right. Well, what happens when they go and they start trading or they start selling at $10? There's a rush in the store, right? And the indicator triggers. You see that A plus there? That is the trigger. So that would have been your first entry. And today was a great day because we had multiple entries. We had 1, 2, 3 areas where we could have possibly entered. And when you enter, you're risking the prior low, right? So you have your lows defined, you have your high and low defined. You wait for the first 15 to 30 minutes to occur. By the way, this is I'm an intraday trader, so this is a 1-minute chart, but it allows you to filter out all the noise. And you're risking these lows. And then the next thing you're looking at is your potential profit targets. And I'm going to get into the statistics as to why we have these profit targets the way they are. So your targets are here, this green line here. Your second profit target is here, this green line here. And your third profit target is here. Now, as I was taking the screenshot, I took it at right before here. I took it at 12:45, so a little bit before. We were still trading around here, but by now we've taken off, and I think we've hit this target. We'll check in a bit. But what you would do and how you would take this trade is you would wait for the trigger to fire, and you're risking your previous low and targeting these areas. Now, you could enter in one shot, you could gradually scale in, which is usually what I do. And today was a great day of a trend day, right? Let's continue with the examples. This was the NASDAQ. Oh, I need to get out of this. Sorry. We actually, by the way, we're live every day on the Fivers Futures YouTube channel. And this is Alejandra, who trades alongside me, where there's various traders that come on with different levels of experience. I've been trading for just under a decade, but there's different traders that come with different levels of experience to share their expertise, and we take the trades live. We show our wins, we show our losses, and it's on YouTube live every day from 9 a.m. Eastern to 11 a.m. Eastern, from Monday to Thursday. So you guys can come. It's totally free. We have a fun time. We trade live. We share our expertise. Of course, it's for educational purposes. We are not telling you where to enter, where to exit. We're just sharing our experiences and teaching you how to actively trade and manage these trades live. So this is actually the trade I just showed you. This is me taking this trade live this morning. So you could go ahead and go. This is the Fivers Futures YouTube channel. You could go and check that out if you have the time. So I actually took it on the ES, and the ES only gave us one trigger. So as I was telling you, the indicator works like this. Erase. And it worked even better on the ES, right? And on the ES, I actually have the profit target and risk to reward ratios right there. We had our range defined. We traded a little bit above, pushed below, form equal lows. You got triggered, so you were entering the trade around here, risking this prior low, or if you preferred this, but it was equal lows, And then on the first exit, on the first TP or take profit, as they like to call it, you had a almost 1.28 to 1 trade. Now, if you entered with multiple contracts, you had then the opportunity to have a 2.39 to 1 trade. Then you had your third exit, which didn't occur when I took this screenshot, but by now we're trading well above that. We're trading around, let me take a look at the chart, 75.88. So yeah, right around here. And the take profit, the target was actually 75.88. So you could have almost top ticked the asset today, right? I really wanted to show the things in action, and I'm happy I was able to get a live example of what occurred today in the markets. By the way, guys, don't be shy. You can ask anything you want in the chat if you have any questions. I am open to answering them, but let's keep going. So the data, and that's important, and that gives us confidence when it comes to taking the actual trade. So let me get these annotations out of there. I backtested about 400 days of data starting, I would say, was it March of this year? And with this indicator, you're basically your profit targets when these trades actually work, right? 75% of the time you're going to reach that 1-to-1 or 1 to 1.5 profit target. 53% of the time you're going to reach the second one. 33% of the time you're going to reach the third one, and then on really, really good days, those days work out 19% of the time. But we don't need to go to the extremes. We can stick to the first two numbers. I think these numbers are very valuable because what that tells you is that when these trades set up on the long side and on the short side, but this is long data only. If you want the short data, join us with the fibers and we'll share that with you. When the indicator actually triggers, when it fires and it works, you have a 78% chance of it winning. Like there's a little discrepancy here between the win rate and the target reach, but it's 1%. So basically 72% of your trades are going to survive. And when we have a no sweep day, which we didn't have today, we actually had a sweep. When we have a no sweep day and we continue, and I'm going to show you an example, well, 95% of the time it's a trend day and we just continue. And when it fires, well, let me just show you the example right away. When it fires, you could just take the trade and never look back. So this was an example from July 6th where we did not get a sweep. And by sweep, I mean we open, form the range, and then go retest the opening lows or the previous session's lows. So the lines you see here are previous session lows. Well, that tells you that it's going to be a trend day. Now you can see different icons here. We have B's and we have A pluses. The B's are for not so good trades. So we'll call them B quality trades. Why? Because the data has says that when you take these trades here before the open, they tend not to follow through, or you tend to get wicked out, et cetera, et cetera. So it's better to wait for these triggers to fire before you consider, and I insist on the word consider, entering your trade. It's not a guarantee. We have, of course, that's why I showed you the data there. It's not a guarantee that you're always gonna win, but with the win rate and with the great possibility of having great 2-to-1, 3-to-1 plus risk reward trades, well, it's how you end up profitable. So on that day, on July 6th, we had 3 triggers here. So 3 opportunities. Even if you were late to the game, you could have possibly entered and reach those higher profit targets, right? So just exit this really quickly. I want to touch really quickly on the Fivers. We have been around for over a decade funding prop traders. We've just launched our futures prop platform. We used to be a Forex only prop firm. We've evolved into Forex and stocks with Trade the Pool. And we exist to help people who want to trade and lack capital turn that into either their side gig or eventually their trading career, right? So right now at the futures, the Fivers Futures, we're offering different types of programs for different traders. We have 25K, 50K, 100K, and 150K accounts. So that is basically the buying power you get. You have to pass an evaluation, reach a profit target, and once you're able to reach that profit target, you're given an account where you could profit from. So the first account you're going to get is going to be a simulated account, but we use a platform called Black Arrow, which simulates the actual markets. The fills happen as close as possible as how they would happen in the open market. And with just $170 for a 100K account, you're able to trade that amount of capital within, of course, our risk rules. So this is a day trade account. This is for people like me who like to be actively trading the market for a couple hours a day. But we also have swing accounts. Sorry. I think I missed the slide, but we have swing trading accounts where you can hold trades overnight, and unfortunately not over the weekend, but from the futures markets are open from, well, I'm in the Eastern time zone, so 6 p.m. Eastern on Sunday all the way till 5 p.m. On Friday, with only that's end of Friday, Saturday, and then Sunday morning close. So basically, futures trade 23 hours a day. There's just that 1 hour close, but you can use our swing programs if you swing trade and prefer to hold trades overnight. Now, these days we have a few specials. Competitors use activation fees. So once you pass, you have to pay an extra fee. These are gone. We don't have that at all. And then let's say you start with 100K account. So basically you're getting 100K in buying power. Well, you could scale your account gradually up to 500K in buying power. Now, a lot of competitors have restrictions when it comes to trading during news events. So CPI, Fed talks, etc. You don't have that issue with us. You can trade 5 accounts simultaneously. So, for example, if you have different types of strategies and you could have up to 5 accounts. So, for example, you can run a swing trading strategy on one account, a day trading strategy on one account, a fast scalping strategy on one, and maybe a longer term intraday one on another one. And if you're really good, you could pass the evaluation in as little as a day, right? So go ahead. I think David is going to put the link in the description in order for you to go and sign up. That's a special link we've gotten for you, all you guys watching today. And you can head over to the futures. Make sure once you sign up for your account, you go to our Discord, because we have up to, I think, 3,000 members right now and counting. A lot of people with knowledge where you could exchange your ideas, etc. We do a lot of webinars there. We do pre-market prep every day at around 8:30 Eastern, where everybody gets to talk freely about their ideas and discuss what makes sense in the markets. And also, that's where I share the indicator I just showed. So you're welcome to join us there in the Discord. So somebody said, can I touch more on the swing performance? Are you talking about the indicator, or are you talking about the Sorry, the swing program, or are you talking about the indicator? Let me know in the chat, because I saw the question, can I touch more on the swing program results? Still not following. So since I didn't have a screenshot of the swing program, I'm just gonna pull it up right now and share it with you. Just bear with me a second. All right, so I'm bringing our website right here. Let me just erase these annotations. And then you would go to the futures, scroll down, and these are the programs. So we have the swing program here. We have two types of accounts, so the 25K and the 50K. You have an evaluation phase, which you need to pass, and the funded stage. So, for example, for a 25K account, so you get 25K in buying power, you have to reach a target of 6%. So basically $1,500, and you have a maximum loss of 4%. So basically, if you hit that drawdown, you lose the account and you have to try to pass the evaluation again. You're allowed to purchase up to 20 minis if you're trading, for example, the NQ, or 20 micros, and the cost is just a one-time fee of $120. If you're trading the 50K, the rules are similar. You get bigger contract sizes, and it's $240. Now, once you're in the funded stage, you have targets to reach in order to be able to get a payout. It's an 80-20 split. So you get 80% of your profits and we keep 20. And then the good thing, and we've just started that, you get refunded on your third payout. So you're basically getting an account for free if you think about it. So for 50K, you would pay $240. Say you pass your evaluation. There's no deadline to pass. There's a lot of prop firms that used to use a deadline, but you could take a week, a month, 6 weeks, whatever, 6 months if you want to pass your evaluation. All you have to make sure is that you actively traded. You have to take at least one trade every 2 weeks. So this is the swing program. We also have the FAQs here if you want to, if you have questions. And of course, you can always write us directly and contact us on Discord. And like I said, we're live every day on YouTube, so you could talk to us there. Now, I don't know if there are any questions. I realize I went really fast with the presentation. I'm probably going to go back and review a few things. But if anybody has more questions, I would be happy to take them. Questions about the fibers, questions about how I use the indicators, et cetera, et cetera. But I'm going to touch a little bit on our trading platform right now. All right. I don't see any questions just yet. So since we're talking about indicators, the indicator that I use, the reversal indicator I was just talking about, we use it in TradingView. So this is the indicator right here, and we could see that this is today's market. The ES reached the profit target. We could see the trigger here. So you would get it to be able to use it directly in TradingView for free. And you can play around with all the settings and see what works for you. You can also convert that into a strategy in order to be able to backtest it. The good thing about it also is that you get a screen that shows you all the other indices and the dollar index and oil in order for you to have even more layers of confluence to take your trades. So back in the day, what I used to do, And how I developed that indicator was I used to wait for the range to develop, used to measure the range and kind of determine my levels over there, right? And of course, as I touched on VWAP, let's just turn on the yeah, I used to use the volume profile and stuff like that to be able to take the trades, but now this indicator allows me to, you know, remove a lot of the guesswork. And yeah, that's what I wanted to show. You can see here, if you took this trade, so let me just take these out of the way. If you took this trade with the indicator, let me turn it back on around here. Right now, at the time of this presentation, your risk reward ratio would be 3.38. So basically, for every $100 you would be risking, you would be making $338. So I think this is a great trade. So John saying, how can you pass in one day with a 40% consistency rule? All right, so let me touch on the consistency just a second. Basically, you have to make a let's take the 25K account. Let's just go back to that. The consistency rule is per day, right? It's per position. It is not per, it's per position. It's not per day. Sorry. So a lot of other firms, a lot of competitors have a consistency rule per day where you're not able to pass in a single day. You have to continue trading. But for us, the amount is based on your total profits. So for example, if you have to make 1,500, or let's take the $50,000 account, right? That's probably more straightforward. So 4% of $50,000 is 3,000, and 40% of that is 40% of that is $1,200, right? So basically, your biggest trade, if you reach $3,000, your biggest trade has to be under that $1,200, right? So you need at least 3 trades. I recommend taking 4 trades and you know, staying this way. You're clearly staying under that total. But that doesn't mean that if you generate more profits, you can't pass, right? It's just that your biggest trade has to be 40% or less of your total. So the easiest way to go about it, if you have to make that $3,000 in total capital divided by 4, you know, your biggest trade has to be under $1,000, and you would be able to pass the account, and then you get your funded account. I hope that that explains it. So again, the consistency rule is per trade, not per day. And quickly, I want to show the platform we use. I know a lot of prop firm traders are used to NinjaTrader or Tradeovate, but we use the Black Arrow platform that has all the indicators I just talked about. So we have our volume profile here. We have the cumulative delta here. We have VWAP. Of course, there's 3 tiers to the platform. I'm using the highest tier here, the Ultra version, but I think it's a great platform. Also, you can set your order brackets. So, you know, let's say you have your 1-to-1 bracket that determines how much you want to risk, where you want to buy, etc. It's a very fast platform. And for my traders who like order flow, let's switch over to the NASDAQ, go to tools, flow map. I know a lot of people like to use Bookmap. Well, this is an indicator very similar to Bookmap, where you could see the order flow, and you could see, for people who like to use volume like me, you can see the live volume bars going up and down right now, and the volume bubbles that's showing you the aggressive sellers or buyers if you use that in your trading. You could also go in and modify the color, and the size of the orders and make it your own. So, looking at this right now for somebody who uses order flow, and maybe that's something I want to touch on in the future, we could see sitting orders. So your orders in your bars in red are where limit orders are being placed. So basically, if the price moves up and goes to, for example, 29,965 right now, we would expect the price to push down a little bit, or through to just if all orders get absorbed and it matches with cumulative delta, we would explode through that. So yeah, very good. Okay, so I see another question. Does Black Arrow integrate with TradingView? So we've just implemented TradingView for our Forex side. We don't have it yet for the futures, but we will. We're definitely working on that. We're working on offering additional platforms. Not just yet, but I will tell you, I use TradingView a lot, and if you're used to TradingView, it's going to be very easy for you to use Black Arrow, because there's a lot of similarities. The drawing tools are pretty much the same. You have your anchored VWAP right here. You have your analysis tools here to draw, etc. The order box is similar. We've had a lot of traders ask us, how to calculate their risk, and I'll just show it right now. You can go into the order terminal, enter here, and enter your bracket. So, for example, let's just create one. We're gonna call it. What are we gonna call it? Let's just make a new one. Let's call it, you know what? Let's call it Cosmeter for David. Say okay. All right. And then you can decide how much you want to risk per trade. So for example, say you want to risk in cash in dollars, and you want to risk 1,000 to make, you want to make 2,000 and risk 1,000, right? Your bracket would be set. You go, okay, yes. And then our bracket is set right there. So for example, if I'm trading the NASDAQ right now, I can hover over the chart. I just have one contract here. Well, I'm not saying it. So I would put more contracts, and there we could see it. This would allow me to size my position accurately. So for example, if I want to buy at say 29.40, my stop would go automatically at 29,840, right? Or if I want to sell at 29,983, my stop would be much higher there. And then if you could size there, so if you want a tight stop on a short, you want to short 10 micros, that's where your stop would be right now. So there you go. I hope that answers the question. I don't know if there are more, but I would be happy to answer them for you. Just a quick reminder, we are live every day on YouTube. Everything is for free. The indicator I just showed you is free. The watching us on YouTube is free. Being a part of our Discord is technically free. All you have to do is sign up for an account. And if you're able to get an account past the evaluation, we refund you by the time you get to your third payout. So you're basically getting to trade for free. Now, I know a lot of people watching might not trade prop firms. They might be using their brokerage account. I do that. I use a combination of both. So the great thing about prop firms is you're risking very little capital to have a decent amount of buying power. And what you could do is use that as a way to fund your brokerage account. Or if you're a more experienced trader, it's an easy way to test your ideas and actually get paid for them, right? Instead of risking your brokerage capital, and let's say you want to back test, you want to run a strategy. Well, it's a very cost effective way of testing out your strategies in the market without having to use actual capital. Our brokerage simulates, our platform simulates the live market as close as possible. So things you would run into, maybe execution issues or timing issues, etc., you're going to get that in our simulated environment. My indicator is for TradingView, yes, but in order for you to get it, you have to, become part of our Discord, and I will be doing a webinar on very soon by the end of the month on how to use it, and I will be giving it away for free to everyone. And I only showed you the long version of the indicator, so how you use it to take longs, but I will also show the how to use it to take shorts, because we know markets move up and down, and also sideways. So yes, you can, if you become part of our community, I will share that with you. So great. I'm getting a lot of questions. I like that. Do you have any more questions for me? Any questions on what we discussed? So since I have the platform open right now, Black Arrow, like I said, we touched on the volume profile. So we have a very interesting profile today with price. We could see the spikes there where price spent a little bit of time. So here, this became our point of control. So that's going to be a level to watch in the next few days. 29, let's call it 29,905 more or less. So the 29,900s. We have a few volume spikes here. And if we zoom in, and that's where we got into the trade today, you can see how we got the volume spike here at the lows. We got the volume spike at these price levels. So 29,700 and around 29,740s is where a lot of buying was piling in. And then you could see how we touched VWAP, then reverted back to VWAP, acted as a magnet. And this morning, the point of control was actually here. And then we saw the aggressiveness on the cumulative delta, which got us into the trade. And like I told you, you can go on YouTube on the Fivers Futures channel, and you'll be able to see us taking these trades live and managing them every day. So today was a good day in the markets for us. Oh, you're welcome, John. It's my pleasure. My pleasure. And by the way, we are one of the rare prop firms that allows you to trade, if not the only one, by the way, that allows you to trade futures, Forex, and stocks. You can trade stocks, US stocks, all the US stocks via Trade the Pool. If you short, if you like shorting small caps, for example, you don't have the hassle of borrowing shares. You could automatically short them with our platform. So I think overall, it's a great value. And the market is looking great. I hope tomorrow I'll have a nice day like that on the markets. I am a chart fanatic, so I like when the charts respond to our ideas. And yeah, overall, this is it. You said wow, John. I don't know if you're saying wow because I said it's going to be free, but yeah, we're not. If we're going to make profits, it's going to be extracting profit out of the markets. That's why I give away the indicator for free. I think the value is just sharing knowledge with the community. Having an indicator doesn't guarantee that you're going to be profitable. So that's why we don't sell it. We just give it away for free. Yes, we do stocks, futures, and Forex. So actually, let me just go back to the website. Just pull up the website right now. We have just about 5 or 6 minutes left. So we're going to get. All right. So this is our website, thefivers.com. You could use the link in the description. On the Fivers, you can trade both futures and Forex. So these are our CFD programs, and then these are our futures programs. But our sister company, and I think the link it should be down below. There we go. The Fivers group, you have Trade the Pool. So if you click here on Trade the Pool, it will take you to our sister company. And there you can trade. You could also day trade and swing trade stocks, right? These are a bunch of our funded traders. And these are our offices. I'm trying to see where the programs are. Oh, there we go. The program. So how much capital do you want? You could get a $5,000, $25,000, $50,000 account, etc. So head over to the Fivers, go to the bottom right, and you'll be able to head to Trade the Pool and trade US stocks. So yes, we do all three. And I think we're the only ones in the industry who do that. So everybody else specializes in one or two things, but you have a wide array of choices with us. So any market you want to trade. I don't know if there are any more questions. All right. So just a quick recap. Remember that when we're using VWAP, we are using it as a gauge. So who's winning in the markets, and basically where are the institutions playing. So we're using it as a bias. If we're trading above VWAP, we are bullish, quote unquote. If we're trading below VWAP, think of it like the sellers are winning. We use the volume profile to determine where is value. So at the point of control is where the price gets traded the most. That acts as a magnet. 70% of the transactions happen there. But if we are trading at a low volume node, that is your value area low where you could possibly buy or consider as a level in a future trade. If you're trading at the upper levels of the volume profile, you could consider this as your value area high. So targets to sell or potential resistance level. And then we use the cumulative delta to determine who is the aggressor. Are the buyers winning or are the sellers winning? So since a whole lot of participants are in the market, I call it the crowd. Think of the store analogy. Is everybody rushing in the store to go buy the shoes? Or did everybody already buy the shoes and they're running out to go sell it, right? That's kind of the way I approach the market. So I hope you enjoyed the presentation today. I hope I see you soon, either in our Discord or live on YouTube. David, thank you. This was fun as usual. I hope everybody learned a little bit. And
Yeah, that was great. Thank you, David.
Thank you very much, David.
All right.
All righty.
All right. Yeah, hit that link there and learn more about the Fivers and David's offer. So, all right. So we have two more live presentations to go for this event, and another first-time presenter here on Timing Research is up next. Chris Anthony of JTNC Group is with us. Chris, are you there?
I am, David. How are you?
I'm good. How are you?
I'm good, thanks.
Oh,
Thanks for having us. We appreciate it.
Got to turn your camera off when you first logged in, but you can turn it back on if you want to.
I did. I just turned it on here for you. And I'm going to share a screen here for you guys. Okay, let's make sure everybody's seeing what they should see.
Yeah, I see your slide now.
Okay. All right. Well, again, thanks for having us, David. Really appreciate it. My name is Chris Anthony, and I'm here with my partner, Marcus McConnell. I think he's probably running a little late, but he'll be on in a couple of minutes. And we're happy to present as part of the Synergy Traders number 64 series, the 30 favorite indicators. What do the pros actually use? So we're going to walk you through two of our favorite tools at JTNC. JTNC stands for Just Trade, No Compromises. We just trade. We don't sit back and
Oh,
do
hey,
nothing.
sorry, Chris and Marcus. Was Marcus going to present with you?
He is.
Okay, let me upgrade him.
He is. He's gonna take over after sort of a short
Okay.
intro.
Marcus,
So
you should be able to upgrade to a panelist now. Sorry, I didn't realize that.
no worries. Okay, so again, we're going to
Hey,
walk you
Marcus.
through two of our tools here. There's Marcus. Marcus is on mute, I think. So the first one is what we call the quantum market state indicator, and we'll get into all those details here in a minute. But it's basically a market state. It tells you what the market's doing in real time. And then we also are going to give you something called the quantum price action indicator. It tells you where it's safe to enter and exit the market. So the goal for this webinar, this hour, is pretty simple. By the end, you'll understand how the market state, the MSI we call it, maps market structure, and how the PAI, the price action indicator, helps you time your entries inside that market structure. So how the two work together to give you a cleaner trading process. It's not theory heavy here. We're keeping it practical, what the tools actually draw, what the colors and levels mean, and how we use these tools. These are proprietary tools developed by our firm. So before we get to the tools, a little bit about a little risk disclosure here, just because we've got to do this. Lawyers always want this stuff. So again, trading is this is educational, informational only, and trading involves substantial risk. I'm sure you guys have seen these kind of disclosures all the time. So we've got to do it just like everybody else. So for today, the roadmap for us is 5 minutes on who we are, about 30 minutes on the tools, 10 minutes of other things that we actually offer, and then some live kind of Q&A. Happy to take any questions. It really can be about anything you want to ask. We're happy to give you our knowledge here as we do this. So who are we? Who's JTNC and who are we? My role, I've been working in this industry for over 20 years as a manager of a hedge fund. I'm a investment advisor. So I have to be careful what I say here because nothing I'm telling you right now is investment advice, but I am a registered investment advisor. I needed that and I used that for the last 13 years or so because I managed a hedge fund for a large private equity firm. We typically had anywhere between $50 and $100 million in the market at all times. And it was client money that we primarily traded. And that's my background, my experience. Managing member, one of the owners of the fund as part of this larger private equity firm. So that's my background. Our engineering side is led by an ex-Amazon software engineer. So we've got some pretty smart people who are on our dev team, who have 7 developers. But the Amazon engineer leads our team, and he was with Amazon for over 3 years before he joined us. And again, we've got over 7 developers who actually help us build our tools and our strategies. So what's important here is it's not just that we have technology; it's actually how we use it. It's not a mysterious black box that you're going to throw on your chart and it's going to tell you how to make millions. Nobody has that; it doesn't exist. What we do, however, is we do have tools that position you properly in the market, and then we use an AI layer. We're very heavy into AI, machine learning, that actually validates what we're seeing on our charts or what we're seeing in our math that we're running constantly as we take trades. So again, just trade, no compromises, make it work. So why did we actually build these tools for the retail market? I'm retiring, basically. I've been doing this for a long time. I'm an old guy, and in October of 2024, we started this business. because I wanted to give my kids something in this space that they could manage. One of my sons is a veteran, and my other one is an engineer. So we wanted to give them some things that they could actually keep for their life. So I took some technology and some of the knowledge that we learned over the years at the hedge fund, and with a couple of very smart PMs who have been in the business for, I don't know, 40 years combined, and put those tools to work for JTNC. So JTNC doesn't just provide tools. That's one of the things we do. But we do many other things, which we'll talk about later, like fully automated trading strategies and things like that. But that's not the purpose of today. The purpose of today is to talk about these tools. So, again, we can skip to that a little bit later. But for now, we want to focus on what is the MSI, what does it do? And really what the MSI is, the market state indicator, it's kind of like a map at a mall. You go to the mall and you look at the map, and then you have the whole structure in front of you of the mall. You're here. And that's what the MSI tells you. It tells you where you are in the market and what the overall structure is, and which way it's likely to go. So this is what we actually are providing to you here today. The MSI's job is to draw the map. Once you have the map of the market, then the PAI, the price action, is to give you, price action indicator is to actually give you levels from where you can safely enter and exit trades. So this is really good for guys who trade every day, who want to click their mouse in and out. It works on every market. It doesn't matter what you trade. We'll show you that a little bit later in the presentation, where we've done literally tests on 37,000 tests on 4 different markets, and the accuracy level of each one of those. So, we use technology, we use math, we use AI, we use a lot of stuff to build the things that we have. And this is one part of it that we're going to show you. So with that, I'm going to hand it off to Marcus. And Marcus is going to explain to you more deeply into what exactly the MSI does and how it works. So Marcus, you want to take over and
Thanks,
keep
Chris.
going?
I'm happy to do so. And thanks for having me on there here, everyone. Look forward to kind of walking you through this fantastic product. So one of the things that's a differentiator from what we have here is the market state indicator has basically 3 jobs. It reads behavior, not just price. We're looking at the combination of not just what an indicator will give you. Most indicators are built on a single data input. Here's a case where we're using both price and volume and momentum together. So the market state indicator is doing all 3 of those. Secondly, it kind of draws out the kind of state we're in, whether we're in a bullish state, a bearish state, or we're kind of ranging. And I love the fact that it kind of defines those states for you. So that way it makes it easier, as Chris alluded to, being in the map at the mall, you kind of know where you are. It also provides you with targets. That's the other part of the indicator. So it'll give you support and resistance and kind of give you the information you need to know whether things can go higher or lower. And also the thing that I love the most is when you shouldn't be trading. So we'll get into more details there. So what it'll also do is you'll see that in the image here, it's colorful. So it's very easy to recognize. You'll see this in a bigger picture here in a second, how it draws all the colors. So what you see here in the definition of the colors it uses, it's very easy. So basically blue, you can think bullish. It's going to draw dotted lines for you, and you'll see the market state indicator give this for you. It'll show you the bullish state with the dotted lines. We'll show you live images here. Also, you can see it will do blue over orange. Okay, that's a ranging state. So I just talked about there's 3 states. There's the bullish state, there's the ranging state, there's the bearish state. And then if you get the kind of the orange over orange, that's bearish. So by looking at those things, it kind of gives you the structure. Then these other things that are very critically important for how it functions is it does what we call extended targets. So you see these, the olive green at the bottom here of the screen and the upper extended target. It'll be more like a, I guess I think teal, turquoise, whichever color you like to call it. Those are very critical because they're going to tell you, hey, guess what? The herd is participating. Okay, we can go to the next slide here. So now let's look at this example real quickly. All right, so the dotted levels mark support and resistance. Colors show the state as the range builds. So we see here orange over orange at the beginning of the chart here at the 9:30 hour. That's a bearish state, but we see as we go sideways, we start to climb higher and move into a ranging state. You got blue over gold. And then the good news about this, we've got statistical probabilities on our side. We know how often it will go from one level to the next. Oh, moved pretty quickly there. So you can see how we went from the ranging state where we kind of chopped around a little bit, but then we got above the top of the range and now we're in a bullish state. And see what happened when we crossed over there? We made a nice pop up. Then we came back down to that level and didn't hold it and came a little bit underneath it. So then you could see the gold dots, or I'm sorry, the orange dots at the bottom start drawing. And then we pop back above it. And you can see here how we climb back towards the top. So you got support, you got resistance here with the blue dots. Okay. But on this chart now, we don't see any, well, I guess there was some extended targets way in the lower left-hand corner before the market opened. But you can see how we changed the states. And by understanding these states on a 2-minute chart, that's what this runs on, it's very, very helpful to know where you are in the market structure by having this information tell you, and it builds minute by minute. So it's live. It can tell when the herd's in, when the herd's out, when you should be in, what kind of trade you should be taking. So now a bigger screen example of this, right? So you can see here kind of the example where we started out bullish and then we ended up flipping back to bearish, right? That kind of structure changed quickly. And then what's cool about this is you can see, okay, we were starting with a strong uptrend, but all of a sudden the market tenor changed and we went to a bearish state and it started drawing things below. So then you see the olive green down here around noon. Well, what's really good about that is when you see extended targets start drawing, you don't try and do some mean regression. Okay, I think I'm going to buy the dip now. That tells you it's probably going to go lower. So ride it. You can either ride it down or you don't try and buy the dip in that case. Let those things keep printing, and they kept printing all the way up to 2 o'clock. Once it stopped printing, then we could see maybe you can think about it. But the overall state had moved from bullish to bearish, and technically went from bullish to ranging to bearish, and then started to go down and started spreading into extended targets. But the other factor that I love about this tool is that how it draws the levels for you to target, right? Okay, it hit this level, then drew another level below, hit that one, drew another one below, hit that one. So we know this tool is not 100%. I wouldn't tell you that it is, but it's 70% darn good, right? And if you do the math, right, if 7 out of 10 of your trades are profitable and you at least, you make $100 on those and you lose 50 on the 3 that aren't, you're a profitable trader. And that's the goal, right? To be a consistently profitable trader. So you can see how this thing builds for you. So yes, we talk about the herd is the crowd. Are they in the mood or not? Are they in the move or not? Specifically, you can see here the extended targets. That tells us the herd is participating, and it gives me 2 loud messages. Loud message number 1, don't go against the herd, right? So if it's going up higher, then I should ride it higher while it's printing extended targets. That is not the time for me to short. Okay, I know a lot of people like to pick the tops or pick the bottoms. That's not ideal, right? But at least here it tells me ride it higher, but definitely don't try and go short yet. Okay, extended targets to the downside. Okay, same thing as we talked about earlier. Not the time to go long. Message 1. Message 2 is you can probably ride it lower, right? So you can see how these extended targets give us something that the herd's participating. Because again, most indicators don't have anything of that sort. They're really driven by a statistical calculation. And I could talk about indicators till the cow comes home. But this is different because this is using the live data, is built on AI and machine learning, and is built by a proprietary hedge fund company. So they know a little bit about trading, right? As my business partner has done that for years of success. So here we see the bullish trend, and you can see these extended targets here. You can see them again here and here. So when you saw this switch from this ranging state, okay, and it gets above this blue line here around 10 a.m., watch the extended targets start printing. Well, that's telling you it's probably going to go higher. Even with the little pullback, it pulled back to support and then took off even higher. And you can see how the targets paused, but then they started printing again. Then they started printing again higher. Then these extended targets, we don't mean that it's going to get that high, but it's telling you the herd is in. That just gives you more confidence in the trade to go in that direction, right? Then we also see when the herd stops, right? So again, another example of the herd participating in a bearish model, you can see here where the extended targets are down below, starting around 12 o'clock, and they continue to print, and no, not a straight line until you get down to when it got really ugly around what 1:30. You can see it just kept printing lower and lower and lower until it finally hit the bottom. And then yes, at some point it stops printing, and then look what happened. The herd had probably cashed in all their profits from the big downtrend. And so then you get a little bit of a reversal at that point. So the other cool thing about it, it tells you, okay, I probably maximized my trade here. Time to get out, right? I don't need to do any more. The herd has gotten out, so to speak. So you can see how this structure can really guide your thought process. So you don't have to think about, am I in a bullish market? Am I bearish? Or what's the trend? This is telling you bullish state, bearish state. Really, the herd has jumped in on the bearish state. Really, the herd has jumped in on the bullish state. So I think, the cool thing about this is the logic is simple, right? That we make it easy visually to see, hey, if it's bullish, then you want to buy at the support levels and rise it to the next level. Because once it crosses the blue dots, what Chris informed me when we first met is that you got like a 7 out of 10% chance it's going to go to that resistance level. That's a really good probability, right? Not every time, but again, 7 out of 10, you're going to make money trading with an indicator that does that well for you. We certainly have. So you want to target at upper level. So it's giving you the target. So simply stated, it gives you your profit target for the bullish ones. It gives you your profit target for the bearish trades. You have a long state and a short state, and you have a ranging state. The ranging state, if it's in the middle, that's the chop zone. And we're going to show you metrics on that. Chris will walk you through the math, but you can really see the difference by using these states on each way you trade, right? It makes it very simple to follow what you see on the screen. All right. I think I'm passing this back to you at this point, Chris, right?
I think you are, Marcus. I think I'm taking over here for you. So certainly, thank you, Marcus. A good job explaining what the MSI does and what the PI.
I don't hear any audio. Do you hear any audio?
Chris, are you still there?
Did his audio go out? That's interesting. All right, let me keep going. I'll ping him to see what's going on.
Hey,
So
we just put something in the chat. Chris, you were talking and then we're not hearing anything from you. No.
and he's not muted either. It's weird. All right, let me keep going while we figure out his audio. So
Okay.
So this is the math that we've done over, I don't know how many tons and thousands of back tests and real live data tests, actually. So as you see, we did this across the SPY, the triple Qs, Bitcoin, and Ethereum. So obviously the results with the SPY and Qs were better than with cryptocurrency, but the point is the same, that with the trend, it wins, in the chop, it doesn't. And so what we found is that the best setups reach about 70% of the time on SPY and QQQ, they make you money. So when I talk about the blue stake going from one to the other, you'll see those results be, like I said, 7 out of 10, pretty close to that consistently. And then when it's in the ranging state, particularly if it's in the middle, it's really in an indecision state, is what I call it. And so we don't see a clear advantage other than the fact it's telling you not to be in. I find that to be an advantage because I tell everyone all the time, cash is a position in the stock market. And so sometimes you need to sit in your cash while you wait for the market to make a decision whether it wants to go bullish or bearish. If it just wants to chop and go sideways, it's probably not ideal for you to try and if you're a trend-based trader. So these numbers are very good. But again, I love the fact it tells you when to chop, just stay out. All right, you can go to the next slide. Can he? All right, cool. So yeah, we did 37,000 trades as we tested across the four markets and the profit target settings we tested, right? So we measure the success of this. And we have clients that are using these indicators and we know it works really well for them. That again, the going from state to state. So it's kind of a level to level trading or state to state. If you want to say price level to price level, that's another way to describe it. But we know from the not only the back test, but also from live trading how successful this works. Okay. And the cool thing is it draws support and resistance for you all the time. And it's live drawing it. So it's not, a lot of people are worried about indicators being lagging. This is not a lagging indicator. It's building the structure so it knows definitively when the market structures change. If anything, the lag is on because it runs in TradingView. Our algorithms run faster than TradingView can do sometimes. So I've seen it like pause to paint the screen. That's the only thing I see from a delay. All right, go next slide. Um, Now, the other part of this software we have is what we call the price action indicator. The price action indicator is another component that works with the market state indicator. So we got the market state. So market state is bullish, bearish, ranging. It draws extended targets. The price action indicator says this is a zone where you can buy to go long or buy to go or short, or you could be buying a put, if you will, buy a call or buy a put. I'm make it simple, or a bullish spread or bearish spread. So there's two types of zones here for the price action indicator. There's a blue zone, okay, that's a buy zone for going higher, and there's an orange zone, that's a zone for going shorter. So the good news is, the downtrend is orange or orange over orange, as well as the short zone. So it's the same color scheme. So your mind visually knows, oh yeah, after I look at this day after day, I know I got a zone to short in. I know I got a zone to buy in. I think we have a bigger picture. Do we have a bigger picture? Okay, all right. So here you can see now by adding these zones on top of what we had with the market state indicator, it gets even more powerful. Because, okay, I see support, I see resistance, I see extended targets, I'm bullish, I'm bearish, I'm ranging. But how about we give you something that says here's probably a safe entry zone? So that's what the price action indicator does. It says, okay, so you can see here when we open up the market, we were in a ranging state, but eventually it crossed up and then it drew a shaded blue zone to buy. And it held that there. And then if you got in at that time, and although we moved a little sideways for a minute, you can see we started climbing higher. It gave you another buy zone. Along with the extended targets, it's not only telling you that you're in an uptrend, but when you should get in. So this is what the price action indicator does, right? And then you can see as we got to the top, okay, and then it starts to pull down, you can see where we have some short zones. So now it's saying, okay, now we're moved out of that. And so I also will see cases where the price action indicator may have a blue zone over an orange zone. And I say, well, I call that the indecision zone. That's another case where I just wait, right? I don't need to force a trade if it's indecision in the market. So I love when these zones are there, but I always use the market state indicator as the first cornerstone to tell me what state we're in. Because you can obviously get a short zone for a quick pullback. But if I see extended targets, you typically ain't going to get that at all. Right. So this is a case where now we move to a ranging state. So here's a good bullish trending PA zone step up with the MSI. This is one of my favorite charts that we see. I think that's what we had today. So you can see here that we have a nice bullish day period. Okay. And so as the market climbs, it draws new places for you to get in, right? So it draws those opportunities to get in as it was climbing and climbing and climbing. In some cases, it may not pull back to that zone. So you can make a decision, well, maybe I don't get in because I didn't have that opportunity. I need to wait till it gets closer to that zone. That's the other thing. It can be a value there, right? So it will draw as this goes on upward. So this is a good combination here. We got a nice bullish day. It's giving you entry prices from the price action zone. Very clear how you can leverage the tool to get your money in the bank. All right. So yeah, I love how we kind of derive. So when you add them together, MSI is where? Where are we in terms of the market's behavior, bullish, bearish, ranging? What are the levels we need to look at? What are the targets it's drawing, the support, the resistance is doing that. Then the PAI is like, when should I get in? That's kind of saying, okay, where's some safe areas to go in? And then the other thing we tell everybody, look, we understand a lot of you are traders and good traders. So you can also look at your bias, right? Layer in what you know. What other things have you used, right? I'll pick on myself for a moment. Like I always look at the market. I look at the futures market. I see what's going on. I look at news feeds and news catalysts. So there's a lot of information I'm taking in. How does that sync with what the market state indicator and PAI are saying? Right? In a lot of cases, you can see, like, for example, maybe the news was being ignored, right? I think you could make that case for today, right? Last night there was more bombing, and today the market's climbing, right? Had a nice bullish move today. So again, you can use your bias and what you understand as information to help you ascertain what's the best way to trade. All right. Today's special offer. Got to have an offer if we come on the show, right? So what we're talking about is basically a steal of a deal that you can try it for 30 days for free, 30 days, a month of the tool that you can, do some paper trading with the tool, check it out, interpret it, got videos on how to use it in addition to what I've shared here. So you can make sure you're very clear on how to use this on a daily basis. And if you like it after 30 days, you can get in for $47 a month. You want to lower than that, you pay 6 months for $247, that's $41 a month. Or you can pay for the year for less than 400 bucks. Someone may say, well, is that a deal? Well, yeah, because our regular price is closer to 1,100 a year. And people love the tool for that price. So this is a superstar deal where you can get it for less than over 50% off of that. And if that ain't enough for you, we're also going to include, we have this report we run every day. The AI model generates the entirety of the report, but it has information you're not going to get in other reports. I guarantee it. Because it talks about broker dealers, what they're doing, what they're buying, what they're selling, if they're bullish, if they're bearish. And then every morning around 8 a.m., we run an analysis on the SPY. And that analysis gives the price levels for the day. Whether it's call dominated, put dominated, the target levels, it gives you that every single day. And those numbers are fantastic. And it gives you detailed information like if the price level can hold 748 on the SPY, is likely to go to 750. Then the next price target after that is 751, where there's a heavy wall. It gives you that kind of specific detail so you know exactly what to look for that day on the SPY. We just do it on the SPY, but that thing is worth its weight in gold. It is very, very good. Not perfect. Anyone tells you got a perfect thing and a perfect ending, all that stuff, they're not telling you the truth. That's just nonsense. But it is very, very good. And all we want to do is find the tools that help equip us with the right information at the right time to help us trade to become a consistently profitable trader. That's the objective. All right. So again, the reports in your inbox, right, are just gold. I think we also are talking about giving you access to our Echo program, Quantum Echo, which will be a signal service. I think that was included in here. Let me see here. Oh, yeah. 14 days free of Echo trades and the Quantum Superstar signals. So we send out 2 to 3 signals a week on stocks. They're either single leg or it's mostly spread trades, where we tell you what stock to get in, what price to get in, what price to get out. We're going to include that as well. So there you have all this packaged into this price. The value of this is worth way more than we're charging. It's not even close. So again, it's an introduction so you can see the value of these tools and see why they can be a key differentiator in your trading. All right.
And Echo.
Yes, Quantum Echo. I did mention that as well. All right, I'm looking at the chat. All right, so I'm looking at some of the questions come in here, and I meant to mention I have a hard stop. I have to leave in about 6, 7 minutes or so. And then Chris will take over. Hopefully, he can get his audio back on. But let me hit these questions real quick. Okay. Oh yeah, and this was a nice thing. I forgot about the roadmap we put together. So we say to get access to the tool, you get it, okay, because we have to grant you access to these indicators. That's why they're in TradingView, and they're only in TradingView. If someone asks me that question, that's where because like other products like Thinkorswim, I use that, but it doesn't have any security whatsoever. So we use TradingView to give you access to the indicators. We just need your user ID, and then we get you all added in with your email address, etc. So we add it in, watch a session, paper trade it, then add PAI, and then bring your own other tools you like. Like for example, you want to add a moving average in TradingView, simple. All right, so let me go through these questions real quick. Where can we get the links to these indicators? Discord. It would be fun to mess around with them. Yep. So Ben, we get your email address, your TradingView user ID, and then we'll get you signed up and you can get access to it. There's Chris. Chris, you got your audio now?
I'm testing it. Can you hear me?
Yes, you're
Yeah,
back.
I can hear you.
You're
Okay,
back.
there you go.
Well,
So I'm back. I know you got a hard stop, Marcus. So I can take over anytime you need to go.
okay. All right. Yep. I'm gonna get a couple more questions and I'm gonna let you rock and roll it here in case I missed anything. As I covered your slides. Great presentation. However, not sure if you used your pointer. It cannot be seen on the chart. Oh, that's funny.
Yeah, that's my bad because I don't
It was
usually do
your,
these
it was your
things.
chart. It was you.
And I don't know how to use the pointers,
Oh
so that's
yeah.
why
So I don't know what happened, David. I don't know how
I'll
you
figure that out for the next one. I
Sorry about
apologize,
that,
guys.
Al. Okay. Okay. Book a call. There's my calendar. Book a call. Okay. I think I got through the questions. All right. I'm going to turn it over to you, Chris.
Yep.
And I'm going to be on another 5 minutes and I'm going to be gone.
Okay. So basically, we talked, Marcus did a great job. Thank you, Marcus, talking about what the MSI does, the PI does. We call everything quantum. It's just something that we've done for the last couple of years. But basically what we do at JTNC is, again, we have these tools that is really how we started, as kind of like a lot of firms start, with tools and a signal service. The signal service is what Marcus talked about, is that superstars, quantum superstars, and you're going to get that for free in the free trial. And if you continue, you'll get that for free. Quantum Superstars has taken over 350 trades, I think, since October of 24. Has won over 76% of the trades and has generated over 2,300% returns on the signals. So that's a pretty good track record. We take all these signals in cash. We don't mess around with back tests. We do everything in cash. We trade in cash every single day. I have 7 accounts that we trade every single day, and we don't use prop accounts. We use our own money. So we put our money where our mouth is because we know this stuff works because we've been doing it for forever. So what is JTNC? More than just indicators, more than just a signal service. We offer fully automated trading strategies, 100% automated. You don't have to do anything. You just got to sign up, take a subscription, and we will connect to your brokerage account at Tradier. We are a partner of Tradiers. They are a preferred broker. They are one of the only brokers that we work with because of a lot of reasons I can get into, but basically they offer the best fills. They offer 0 commissions. They give incentives if you open an account with them. And they use the largest clearinghouse in the world for options. They've become the #1 options clearing firm in the U.S. in the world. Excuse me, not the country. And as a result, their fills are great because they're trading, amongst themselves. They don't even go out to market. They're trading with other brokers that they're connected to. So their fills are great. We typically will put in the market at any one time $200,000 between all of our clients' accounts right now. And we're an asynchronous, so we send everything all at the same time. All the trades go out at the exact same time. This is not a copy trade service. And I can tell you for a lot of reasons why copy trade's no good, but this is not a copy trade. This is we take an order and take a trade and decide to buy, you get a buy at the exact same time. Our fills are within a penny of each other. And we're trading primarily SPY, QQQ, and SPX. And almost all spreads. We do some single leg stuff. And that's one of our automated. That's our quantum series, quantum flow, actually, which you see on the left side here. That's our flagship, actually, product. It's an expensive product. I'm not going to kid you, but we generate our goal is always 2 to 5x whatever the subscription costs our clients to generate for them in a year. So it's a fabulous product. We traded it today. It was live, took 3 trades, had 3 winners. I think one was in QQ. Yeah, one was in the Qs and one was in SPY. And we've actually adding more strategies to it, so it'll even be more active. But it's got a very high win rate in the 70+% rates is where we are pretty much with all of our strategies. And that's our quantum flow or quantum flow auto algo, QFAA. Then we have something we call quantum echo. Echo is a mirror image of quantum flow. Quantum flow trades 0 DTE options, whereas Echo trades 1 DTE. We push it out a day for a bunch of reasons. It is really a starter service that we offer, again, fully automated with Tradier. And really what it is to let you get in for a relatively low cost monthly to test whether or not what we're telling you is true or not true. And again, we connect to your account and we trade your account for you. And we're going to offer you that for free for 14 days. We can't let you have it for more than that because our QFA clients pay a lot of money every year to be for their subscriptions. So we can't give it to you for more than a couple of weeks, but we will give it to you for free for a couple of weeks, and we'll make you money over those couple of weeks. And you'll be okay. Well, they made us some money. We don't take as many trades as QFA. We take a couple of trades typically a day. Again, it's limited because of the price point. But again, the goal is that 2x to 5x return that we try to generate for all of our clients. Whatever you pay us, we want to get to at least double, and as much as 5 times. And we do hit 5 times pretty often. And then we have something called Quantum Superstars. Quantum Superstars, you're going to get the signal service for free, meaning we're going to send you via email and on Discord a trade. Buy Apple today at this price, and we'll let you know when to get out. It's a signal service. We're going to give you that. That's for free. You get to keep that for the 30 days, and if you sign up, you get to keep that for the whole year. We normally sell these things each for like $1,000 for the signal service. But we're not doing that. It's literally $47, like Mark said a month, because we want to get you into our ecosystem. Honestly, that's what we're really doing. We want you in our ecosystem because we believe if we get you into our system, you'll be happy with the results and maybe you'll buy more stuff from us. And then we have Quantum Superstars that is fully automated. That is another service that we're offering. So again, if you don't want to spend time looking at your phone or Discord or email to take a trade, we actually have an automated version of Superstars as well. And we also consider a starter program for clients who again don't want to commit to the big flagship item, the Quantum Flow Auto Algo. So that's JTNC. We have indicators, we have signal service, we have fully automated trading strategies, we have a morning newsletter that tells you exactly what we think the market's going to do today, from what level to what level. We're a level-to-level trader. You notice the lines on the chart? Well, the lines on the chart is because we believe you want to buy here and sell there. We don't want to just buy randomly and not know. We're like firemen. We don't go in a fire unless we know how to get out. So we want to get in at a certain price and we want to get out at a certain price because that's where the probability of 70% comes in. It's overall about 67 on the broader markets, but it's more than 70 on the long side, and it's a little lower on the short side, only because markets go up more than they go down. And you saw those numbers earlier. So we do know that this works because, again, 37,000 trades tell us that it works, the MSI and the PAI. Okay, so how do you get your free trial? We have quantum.jtncgroup.com. you'll scroll down the page and you'll see a link to a free trial. It's free. We don't want your credit card. We don't want anything from you at all whatsoever. We just want your name and your email address. And then you'll get a series of emails from us. You get 3. Unfortunately, it's just the way the process is. One is to confirm your subscription. Another one is to give you a login to our site. And then the third one is to explain how everything works. So you can go to quantum.jtncgroup.com and sign up for the free trial right now. Again, we don't take a credit card. So after 30 days, if you don't want to do it anymore, you just let it expire. No one's going to press you to buy any of our stuff. If you have questions, feel free to email us at info@jtncgroup.com, or you can call and ask questions. Or if you want to book a call with Marcus as a coach, we do that for free for the first 30 minutes. So anybody who wants to talk about anything can book a call on Calendly. Again, it's on our website. You go to Quantum, it's right there on the first page, and you'll be able to see Marcus's schedule and book a call with him. Marcus was a trainer for several years. I didn't say much about his background, but Marcus spent 17 years at Nielsen Ratings as the vice president of technology. He is a techie guy. I am a tech guy. I spent in my degree from college a million years ago is in computer science and physics. So I'm a tech and math guy. So when I saw the hedge fund business, when I decided to go into that business, I learned all about what actually real institutional traders do and how hedge funds actually make money. And it's, without getting into a lot of that, it's perhaps very different from what you may know or have been told at this point. I'm happy to answer questions about that. If anyone has any questions, I'm happy to answer those. But again, the goal here today is to get you involved in what it is we do and get you into our ecosystem with some free tools that you might find useful and interesting in your daily trading, and hopefully let you make some money. And then let us know how we can help you. That's what we're here for. So I'm going to open it up to questions. If anyone has questions, I'll be looking at the chat box. Feel free to type some questions, and I'm happy to answer. And it can be about anything. Signals. Okay. Yeah, there's one here that you need signals on gold and NASDAQ. Yes, absolutely. NASDAQ futures is one of the 37,000 that we tested. So that is, in fact, one of those very high probability setups for you. So the way that I use the MSI, if it's intraday, I use the MSI personally on a 2-minute chart. But you can also swing with it and put it on a 5-minute chart, and you can get a 1 to 3 day swing on it as well. So it'll work on anything. It'll work on gold. It'll work on futures. It'll work on really anything. The Ethereum and Bitcoin that we showed you that we tested were futures. So this is a product that you can put on any market. You can put it on individual stocks. So that is, if you're a stock trader and you want to get in and out of the market every day, it's just great. We lean a lot on. We do 3 things just to put sort of our secret sauce out there as to what we actually do as a firm and how we trade. And again, this is not something I invented. I saw this from the portfolio managers who worked for me for 15 years as to what they do and what they did when they were managing $200 million books. I learned about how this stuff works. So I'm fortunate because I was in that environment such a long time. And what we learned is, you can use technicals, indicators, as a trigger to get into a trade. And that's okay. Even a simple trigger like a stochastic RSI or something that crosses. Okay, that's okay. But you have to have the roadmap first of when to actually apply that trigger. Because if you don't, you're going to have all these signals all over your charts all day long, and you're never going to know which one to use. So you need, or when to use it. So the goal of the MSI and what we do internally is we create a roadmap. And how do we create that roadmap? We don't look at just volume or things like that. We do look at volume. But what we use is primarily optionality. We lean very heavily in the options market to look and see where the dealers or market makers are actually have no choice but to support the market or sell the market or hedge the market. And if you understand how that works, which we do because we've done it for forever, it's actionable information. So we internally generate our own option Greeks, all of them. We do that with internal data. And then we have, I believe it's 61 rules that we put into AI that tells us what the market structure is going to be today. And then we port that to the MSI. We also use it internally for all of our automated strategies. So today was clearly going to be a long day, a call day. That's what we know. And we knew what levels it was going to trade at. We knew that 750, for example, before the market even opened on SPY, was going to be a wall of resistance. So it's a good target, but we knew it wouldn't go much further. And I think SPY today got to 751 and then fell. So we know these things well in advance. And then what we do is we generate this information and we run it through our AI literally every 30 minutes. So we spend a lot of money on AI because we're cranking through all this data every 30 minutes to determine, what is the market state? What is the state of the market today? And that's how that works. We create a market state. Then we look at the technicals. And again, it can be it can be anything almost. Technically, should we buy at this level and sell at that level? Well, the MSI will do that for you. The MSI blue means buy the bottom line, sell the top line. Bottom is support, top is resistance. Orange, sell the top, buy the bottom. Sell resistance, buy support. It's very, very clear and happens in real time. So this is a simple product to use, and we do the exact same thing with our fully automated strategies. We know that it hits a level, we want to get in, and we want to stay in until we get to the target level. And then the third thing that we do is we use AI again. Again, we use a lot of AI. Every minute, every time a trade fires, we run the actual trade through an AI signal generator that will actually tell us the probability of success of the trade. And if the probability of success for the trade isn't at least 70%, we pass the trade. There's a lot of stuff that goes into that. Every single trade that is analyzed is a lot of stuff. But a lot of it has to do with things that we've created internally, like gamma levels and things, Gex ratios, things like that, that go into our decision-making process. Again, we're always trying to trade with the trend, with the herd. We love it when the institutional guys have no choice but to buy or sell. And we love to hop on the trend with them. We do not do a lot of mean reversion stuff because it's a lower probability. And for us and for our clients, they like stuff that wins 70% of the time. This week, I think we had one losing trade all week. And that was yesterday, I think. Actually, we had two losing trades yesterday, excuse me. But we had everything else was a winner. I mean, we're over 80% this week, for example, in winning trades with our automated strategies. Yeah, trading reversal. So everybody loves to trade a reversal. That's one of the chats here is, that's my problem. My trade reversal is aggression. Everybody loves to trade a reversal because it's fun, right? Markets go up, like stairs and down like an elevator. So, selling something is a lot of fun. I'm the same. Honestly, I'm the same. I prefer to trade a reversal, but I have learned over the years that is unfortunately a very difficult thing to do for most retail traders. If you have a big enough bankroll, you can do it. But it's you've got to be prepared for about a 35% win rate, and you better make yourself 3, 4, 5x on those trades every single time. Otherwise, you can't make any money. It's very hard. I had a friend who had a 35% strategy, who took 500,000 and turned it into 5 million. So it is possible, but he sat through an awful lot of losses before he actually got that big pop. It's a difficult strategy. So we don't tend to do a lot of that, honestly. But I will tell you what does work well is having the MSI in front of you and if you do want to trade a reversal at a level, and then maybe I can find a slide here that'll show that to you. If you do want to find a spot, if you look at just at this chart, for example, at the very, very top, you'll see these these teal colored dots to the very, very top, right in the middle of the chart, right around 12 o'clock, that are printed. That tells us under no circumstances should we try to fade that trend. Just do not do it. Once they stop printing, you can now start saying, you know what, maybe there's a fade here. Maybe I can actually sell this. And then even the PAI even printed an orange, an orange thing at around 1 o'clock. So, and you can see that it worked. It went right back down to support. So again, you would trade it the same way. You can use the MSI to do mean reversion trades. You can, but never against an extended target, and always either above a target, above resistance, or quote below support on the short side. So that's why I love this tool. Actually, let's see if I can find you a bigger picture, because again, if you see all these dots printing, all these below price, all these olive dots on the downside, don't think about buying any of that stuff. Just wait, because you'll get a chance. And this is, by the way, this is this week. Marcus is right. It wasn't today, but this is yesterday, I think Monday, Friday. These are the last 3 days. This is not, weeks ago. This is a current chart. Okay, what other questions do we have? You indicated there'll be email. Yes, somebody just signed up for the free trial. Thank you, AC. AC, do me a favor, check your spam folder just in case, because sometimes these emails go to spam or the junk folders. You should get an email that says, thank you for subscribing, and then a couple of more emails after that. But please check your spam folders. And if you have any issues, info@jtncgroup.com, email us, and we will get this taken care of for you. So no worries. We do suggest everybody sign up for the free trial. It's free. You have nothing to lose. There's really, you might as well try it and see if we can't help you out, help you make money. That's our job. We really do make our clients money. We have a 94% client retention rate. So once they get into our ecosystem, they don't leave because they make money. Why would they? And I have clients right now who have every single one of our products. I have clients that have 4 of our flagship product, the Quantum Flow. And the Quantum Flow is, as I said, it's very expensive. It's over $10,000 a year. It's an expensive product. And I have clients that have 4 and 5 of those, but they're trading $2,000 on every trade. They have big trading accounts. So just real quick, by the way, they're in the emails I think you're going to get, for the Echo, to sign up for Echo, there are a bunch of promotions for opening an account at Tradier. Tradier, again, is our preferred broker. We work with all of them, Tasty, Schwab, all the big brokers, and we have found Tradier to be the absolute best in terms of fills and cost, with very, very little slip. Tasty, I like the people at Tasty. There's a little too much slip in the trades with their API, so not a huge Tasty fan, but I do like the people there. But again, Tradier, this is all about making money. So we want the best fills, and we want free commissions if possible. So there will be a couple of links to open an account at Tradier, with a couple of links that we'll send you. Use our links. You'll get $100, I think, if you put a $5,000 account in there. You'll get a couple $100 if it's a $35,000 account. You'll get free commissions. You'll get all kinds of bennies. So make sure you use one of our links to receive those benefits and be part of our affiliate program with Tradier. Okay, any other questions? I think I've got 5 minutes left, and I'm happy to answer any other questions. Okay, David, I think that's everybody. I think we've answered all the questions. I don't see any more. So thank you, David. I appreciate it. Marcus and I thank you, and we look forward to doing the next one.
Yeah, thank you for being here. So yeah, let me just put your links in there again for everyone. So be sure to hit those links.
Brian says hi, by the way. Talked to Brian this week. Brian Mike says hi.
Oh, okay. Great. Yeah, tell him I said I yeah, I need to catch up with him. And I'm gonna put your info in there again. So yeah, thank you guys. So Chris and Marcus were first time guests here on Timing Research. So always happy to have new people join us. So
We appreciate
great
the time,
presentation.
appreciate the invite. Thank you all
Yeah,
for coming and sitting
thank you
with
for
us,
being here.
being patient. Thank you so much.
All right.
Take
Thanks,
care.
Chris.
Thank
Yeah.
you. Bye.
Okay, so a couple of people were asking about the recordings during while Chris and Marcus were talking. I'm just going to give you a quick reminder here. If you are subscribed to Timing Research, you'll get the archive notifications that way, but also you can simply bookmark that link. That's the live, unedited stream to YouTube from today. And then also this page is the archive in progress for the full event. So day 1 and day 2, everything is there. And then that page will be updated with all the today's day 3 presentations as well. All right, so all right, here to close out the event for us is David Wise of RightLineTrading.com. David, are you there?
I am. Let me share my
All
screen
right,
here.
great. Thank you for being here to
Thank you. Appreciate
close
it.
out the day for us.
Let me get to make sure I get the right screen up here. I think that's it.
It's loading, and yes, looks good.
Yep, Spy Super System software, great. And you can hear me okay.
Yeah, sounds good.
All right, appreciate it. All right, so I'm gonna get started here. Again, my name is Dave Wise. I'm with the Options Rightline Trading Options Live Trading Room, and I have a text alert service trading room that I'm in all day long. And before we get started, I want to say that I appreciate everybody being here. In the session I'm going to do today, I'm going to talk about. I know this it's basically my favorite indicator, and I'm going to show you the one thing that consistently gives me an edge in options trading, and that is using what's called the current time frame momentum. And that doesn't mean momentum is a vague concept, but momentum you can see and measure in real time, candle by candle, inside the SPY super system that I'm going to show you. All right, so let's get started and we'll delve right into this. Again, name is Dave, and again with down here in Charleston, South Carolina, where I live and work, and I've been trading for about full time for about 17 years, and mostly options trading. And first thing I got to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. What we're going to talk about here is the must-have indicator. Now, indicators are they're very helpful in making trades. And I typically end up taking a lot of them together in what's called in concert. And I call them, there's a must-have indicator here, which is the SPY super system indicators, especially the current and multiple time frame momentum. That's what I use for everything. And I have to have these indicators, the SPY super system indicators must be aligned before I'll take a trade. But what I call this is the market in concert and profits in harmony. And what this means is we take a trade, an indicator that we have to have, which is the SPY super system indicator, and then we add the other nice indicators till we can get a group of them together that are working together, and that becomes basically a market in harmony. So that's what we're going to look at here, SPY super system indicators, and using them for intraday and swing trading. These can be used for intraday and for swing trading. Okay. First thing I do want to just cover real quickly what moves markets. I think you probably heard a lot about that today, but I'd like to just reiterate that markets are moved by institutions. Institutions being hedge funds, mutual funds, investment banks, Goldman Sachs, J.P. Morgan Chase, that type, and also mutual funds. I think said mutual funds already, and pension funds. Those are the 4 big ones. And they typically use algos to trade with. They use computer programs that look for specific levels of specific news. They read news and they trade off of that. And that's what's going to move the market. When the institutions are always trading, there's always institutions in the market. But what we identify is when the institutions, multiple institutions, are pushing a trade in one direction. They're both buying, everybody's buying Microsoft, not some people buying, some people selling. That's what we're looking for. And so you have institutional trading, and then you have retail traders, such as myself and suspect everybody else that's here. We have retail traders, and we as retail traders, we don't move the market. If the institutions aren't in there in any kind of force, all we're going to do is cause chaos and chop, and we don't want to be in there when retail traders are basically the major traders in the market. We want to follow the institutions, and that's what we do with the SPY super system, which we're going to cover. Okay, SPY super system. These are the intraday strategies that we use. I call them the SPY super system is the software package, and SPY super system itself is for very high probability trades. We catch moves in the SPY, the Q, the IWM futures, and even stocks. And these would be typically option trades. Then I have another strategy that I added in November. I'll show you what some results are. Now this is one that's very quick trades. It's called UMCAT. UMCAT stands for out of the money catalyst. We're looking for stocks that have a catalyst. Usually that includes a lot of volume. And we take out of the money puts and calls for very quick trades. These trades are typically 5 minutes to 25 minutes. Very quick trades, and we can use out of the money options on those, but that's the only time we can use out of the money options are on those kind of trades. Any kind of option trades that you take, whether it's a swing trade or a day trade that's only going to last all day, you should always be taking in the money puts, in the money calls. You don't use out of the money except for this. And the reason I set this up was because of the PDT rule changing. The pattern day trader rule of requiring $25,000 in an account has gone away. Everybody's down now to 2,000 to 2,500. So now everybody can make intraday trades as many times as they want during the week. It used to be just 3 trades within a 5-day rolling period. Now it's as many trades as you want, or as long as your money holds out. Okay, so those are our intraday strategies. Swing strategy in the room and on the alert service. We have calls and puts, straight calls and puts, obviously. We do straddles and strangles, which is a non-directional trade. I use debit spreads, put debit spreads and call debit spreads, using mostly weekly options expiration on these. These are fairly quick moves. And then I do time spreads over earnings. These are non-directional again to capture what's called volatility crush. When earnings comes out, just before earnings come out, the market makers increase the premiums on the puts and calls to protect themselves, since they don't know which way the stock's going to go and they don't know how big a move it's going to make. That's called adding volatility. As soon as the earnings come out, you get volatility crush, which is when the actual earnings come out. The market makers now know which way it's going and about how much, so they reduce the premiums, which is called volatility crush. And this is a methodology to capture that volatility crush. Okay. We also have a weekly ATM strategy. This is a longer term trade where we take neutral to bullish stocks and we sell puts against them every week. They have to have weekly options. We sell them every week, and we keep a long term further out in time, long put at a lower price to protect ourselves and reduce our margin. And we do credit spreads, of course, to capture premium over a few weeks. These are basically most of the option strategies we use. I don't really get into too many more complex one. I don't do a lot of butterflies in the room or on the alert service. I know a lot of people do those, but I pretty much stick to these. All right. Now, momentum as a catalyst for options trading. Let's talk about this momentum. I know every trader has like one indicator they feel is like a secret weapon, and the one that turns the noise into clarity. And for me, it's momentum. But not just momentum in theory. All right, momentum, but the current time frame momentum that I'm going to show you on the SPY super system that reveals where institutional money is flowing right now. This is important. Where is the institutional money going right now? Because we want to follow them. We're not going to beat them. We want to follow them and take our money from other retail traders. And momentum isn't a prediction. Okay, it's a confirmation. It's the moment the market tells you, I'm moving. Are you ready to move with me? This is basically what we're looking for. Okay, and this is what we attempt to identify every day. We have extremely good luck, but we have good results with this. Win rate is about between 85 and 90% in the room. In the room and on the alert services, 85 to 90% is the percentage of our win rate, which is pretty high. So the critical indicators that we're going to be looking at here in the SPY super system is the current time frame momentum and the multi-time frame momentum. Notice these are momentum. Current time frame is if you were looking at a 5-minute chart, that would be 5 minutes. That's the momentum on the 5 minutes. Multi-time frame is going to be on a 5, 15, and 45. It's going to be 3 different time frames, right? On a daily chart, the current time frame would be 1 day. The multiple time frame would be 1 day, 3 day, 9 day. Right, so that's how we're looking at the momentum. And the momentum indicator, I'll show you in a bit, is a little different than what you might think it is. Now, in addition to these critical indicators, and any trade that I take that is going to be a long is going to have the current time frame momentum, especially on a 5 minute. It's got to have a bullish momentum indicator. I won't take a trade if it doesn't have a bullish momentum indicator. Any short has to have a bearish momentum indicator. I'm only going to trade with the institutional direction. That's what this is meant to keep everybody on the right side of the trade. Now, when you use these with high volume candles, it's going to cover institutional activity in the stock. So if you've got the current time frame momentum indicating that the institutions are in it, right, and that you've got high volume candles, then you know that they're in it and they're in it with force, and that's what we're looking for. Okay. All right. Now, I kind of want to do just a quick little take on what momentum is. I think a lot of folks don't understand what momentum is or how it should be measured. You know, if you look at a stock and you see the stock's moving up and you've got green candle, green candle, green candle, you automatically think that that's momentum. There's momentum going on right now, but that's not true. These are, for example, 5-minute candles. They can be any time frame, but these are 5-minute candles. And the stock is moving up. You can see it's moving up. But what determines whether you've actually got momentum here or not is where the close of the candle is, how close it is to the high of the candle. So here we have the high of the candle here, and the close was here, right? Next candle, we have the high of the candle here, the close is here. Notice it's getting closer to the top. Next one, high of the candle here, close of the candle here, getting closer to the top. So this is what momentum looks like. As the stock moves up, you get closer and closer to the high of the candle, right? And when it's coming down, it's exactly the opposite. As the stock is decelerating or accelerating to the downside, the close of the candle is going to be closer and closer to the low of the candle. So this is, when we talk about momentum, I just want you to understand what we mean by momentum. People sometimes, I think, misunderstand exactly what momentum is. But when we talk about momentum, this is what we're measuring. Okay. All right. Let me just get a sip of water here. I've been trading all day, so. Okay, so in the room and on the alert service, I have a couple of easy rules to trade by. First one is trade the best and skip the rest. This is very simple sounding. We're only going to take the very best trades and skip the rest. The reason that I really emphasize this is I'm trying to keep retail traders from taking too many trades. You can get bored very easily when you're trading. You always want to be in trades. You don't need to always be in trades. Many times, especially on choppy days, no trade is the best trade. So this is just meant to indicate that we're only going to trade the best and we're going to skip the rest. That's what we're trying to do here. And the second thing I tell them, and this is basically something that goes along with that, our objective is not to make trades. Our objective is to make money. If you think about when you're going to take a trade, am I taking this just because I want to trade, or am I taking this because I want to make money? I think most everybody who's trading, their intent is to make money, not necessarily to make a lot of trades. And you know, there's a big problem if you just are trying to take 50 or 60 trades a day when you only need to take 3 or 4. So this just tried to keep folks out of trading too much. Okay, that's the rules of trading. Maintain discipline. Learn to follow the process. This is basically making sure you follow your indicators, like the SPY super system indicators. Make sure you know what the market's doing. Am I trying to trade bullish on a market that's moving down, and vice versa? So learn and follow the discipline, which I'll talk about in a bit. All right, and remain patient. Again, focusing on not jumping into trades. Wait for the trades to come to you. Remain patient. Okay. Okay. So profitable traders, we need an edge over the other retail traders. These are our edges. I have the SPY Super System software that I'm going to show you here in just a second. We trade that. And this is what we use to get the current time frame, multiple time frame momentum. We trade relative strength and relative weakness. This is how a stock is trading versus a SPY. This is an RSI. This is if the stock is moving up and the SPY is moving sideways and down, you've got relative strength, and vice versa. They're going to give you an edge by taking a stock like that. We obviously try to trade with the market trend if there is one. A lot of days there isn't. Then try to buy near support and sell near resistance. And I'm going to show these. I'll show you all these on the chart so that you can see that clearly and how we use them. All right, and in the SPY Super System, there's just 4 colors. You're going to see green, bullish is strong bullish move. Blue is a bullish trend. Red is a strong bearish move, and yellow is a bearish trend. Everything's going to be identified like this, so you can easily identify what is bullish and what's bearish, and whether the institutions are in the trade or not. All right, so this is the SPY Super System indicator on Thinkorswim. I run this on Thinkorswim. Now, it's important to understand that you don't have to trade on Thinkorswim. I don't. I trade on Tradier. The last presenter was just talking about Tradier. I think Tradier is a tremendous platform to trade on. The commissions are really cheap and inexpensive. I don't pay anything for Tradier except a flat fee each month. I don't pay any commissions on options or stocks. So for me, it's a big deal. And I think Tradier is an excellent one. So that's where I trade. But you can trade on any platform you want. But the critical thing here is to understand that this is on Thinkorswim. The software would be loaded on Thinkorswim. This is where you're going to identify your indicators and see if they're if the indicators line up. Right. So let's just go over the indicators on here kind of briefly. Here's the current time for momentum that I was talking about. Now, this is a 5-minute chart on the SPY. It doesn't really matter what it is, but it's a 5-minute chart on the SPY. Here's your current time frame momentum right here. Notice that it's green. It could be green or blue and red or yellow. Those are our colors, right, for bullish and bearish. Green and blue is bullish. Red and yellow is bearish. This is telling me what's going on across the current time frame, the current 5-minute time frame, based on that momentum, those momentum candles that I showed you just a little while ago. So current time frame momentum, here's multi-time frame momentum. This is across 3 different time frames, right? In this case, it would be the 5-minute, the 15-minute, and the 45-minute. And this is the long-term trend. This is typically what I use in swing trading. I don't use this so much on intraday trades. This is the most important candle for 5-minute candlesticks for intraday trading. I use this almost exclusively for intraday trading. When I go to a swing trade, I've got to have my multi-time frame and my current time frame lined up. And I'm going to go over these when we get to the actual, some of the trades I'll show you. And here's the trend. Now, up here on a 5-minute chart, these would be for intraday trades, okay, for intraday trades. P level right here, the VWAP, the volume weighted average price. This is all the institutions have this on their 5-minute chart. You don't use it on your daily chart, but you use it on a 5-minute chart. Basically, the midpoint. This is where the institutions are getting in and getting out. The volume weighted average price. It's a support and resistance level that we use. The next one up here is this green line. This is the 15 EMA, 15 exponential moving average. Okay, and one above that, this white line is the 8 exponential moving average. Those are the moving averages that I have on all my charts. I don't have the VWAP on the daily chart, but I have the 8 and the 15 on the daily chart. And I use them in conjunction with each other, which I'm going to cover in a little bit. But these are really important because if you're going to enter a trade, you want to be entering in close to one of these levels because you're getting into support. You buy at support. It gives you very limited downside to lose if the trade doesn't work for you. And some trades don't work, of course. Right. So those are the key levels: VWAP, 15 EMA, and 8 EMA, exponential moving averages. Now, on the candlesticks, this is really pretty critical. Remember, I talked about we use the current time frame momentum. We use it along with volume. Well, these candlesticks here, if you have a white candle, that's basically a green candle that has high volume. And I mean high volume, like 120, 150% of the average volume on that candle. So a white candle is a bullish high volume candle. A yellow candle is a bearish high volume candle. This tells you when something like this is happening that the institutions are coming in and they're coming in with some force, right? So this gives you a really good level to get in. Very good level to get in. And this is where the UMCAT trades we will be using. These out of the money catalyst trades will require high volume candlesticks. Right. So those are the major ones here. I do have what's called the vol here. This is the market internals. This is looking at what the entire market is doing right now. Those whole 6,000 stocks based on how much volume is coming to the upside, how much volume is coming to the downside. And this will tell you based on the color whether it's bullish or bearish. And it gives you a good idea of what the trend is on the whole market at that point in time. Right. So that's the SPY super system right there. That's what it looks like. And I'm going to talk to you about it. And I'm going to show some live SPY super system setups on my platform. And I'm going to, if I can get questions here, I'll be able to see if anybody wants to actually have me look at any particular setups for them. But I got to see if I can find my candles first, my questions first. Okay. Now here's the high volume candles that we just talked about here. I just made another slide just to show you. You've got bullish high volume candles are white. Okay, and your bearish high volume candles are yellow. So this is, if you look at this move right here, by the way, just to see the high volume candles, you see what's going on down here. You see how we go from selling, which is red, to buying, which is blue. And you see you got a high volume candle. That's a big stick out. That's a big stick out to us that the institutions are coming in, right? Because we're looking at the current time frame momentum, and we're looking at high volume. And there's the high volume right there, right? So that tells me that's a good trade to get into, and we can ride this thing right up. You notice it's right on the 8 exponential moving average, which is where we take the trade, right? But that's a sample. And these, by the way, I'm going to get into later. These are actually, we have scanners built into the software looking for relative strength, relative weakness, and swing trades. All right, and here's your bearish candles right here. High volume bearish candles. This is one on Futu. This is a trade I did take on Futu back at the end of June. As you can see how we're red down here, right? Current time frame momentum red. That's bearish. Here's your high volume candlestick right here, the yellow candlestick, high volume bearish. So this would be an entry for you as it breaks below the 8, the 15, and the VWAP. All right there. Right there. This is very, very obvious to see. And you can just follow this trade exactly right down. The 8 would become your stop. You just ride it down and just let it go down as far as you want. Most of these trades don't last too long, but this was actually a pretty good one. Okay. Now I'm going to show you a few of the UMCAT trades that I took. Now, UMCAT trades, I must tell you, these are the ones that I took in the room. I do have videos on how to find these, etc., but I can't post them. They're very quick. I do post a lot of trades for longer term day trades and swing trades, but these occur very quickly. So I try to teach people how to find these themselves. And these are some UMCAT trades right here. But I want you to see we're taking this short. We got red current time frame momentum right here, right? So we get red time frame momentum, and up here is the 8 exponential moving average, the white line. And by the way, when the 8 is below the red line, which is a 15 in this case, it's red. When the 8's below the 15, that's a trend. That's a bearish trend. And when it's above it, it's a bullish trend. So this is a bearish trend. It's a high volume candle, and it's red down here, which means I've got institutions selling, and now they're coming in and they're selling with this with quite a bit of force. And this SPY super system also produces these little arrows here. These are compression break arrows. We call them pops, pop arrows. And there's a break out of the boxes, and it's breaking out of a compression break. So this is where I took the trade right here. It was on a 5-minute candlestick. It was an Oracle. I get in for $72 because they were out of the money pretty cheap. $72 a contract, out for $125 a contract. 1, 2, 3, 4, 5, 6 candles later, about 30 minutes on that trade right there. And this is where I get out as it started to flatten out a little bit. All right, and I'll show you one more here. This was a big one. This was frog. This is a little unusual. You don't get this kind of a move most of the time, but you can see the setup here. Notice how we went from buying, blue, institutions buying, to institutions selling right there. This is where it switched, and we had a high volume candle to the downside right there, and it was breaking down below the 8. So I had breaking below resistance, right, and a high volume candle, and I'm right on the 8. I just wrote it down to here, about 40 minutes or so, in for $30. This was out for $200 a contract. This is a 566% gain. Now the UMCAT trades will produce really high profits, but this is pretty extreme. Most of the time, it's going to be somewhere between probably 50 and 150% when you catch these. But that was a really, really good trade. But I'm really kind of here I wanted to be here to show you the setup so you can actually see that. Okay. All right. Next, we got another one here. This was an UMCAT trade on Netflix. I get in here, I get out here. So just so you can see when you have this software. Now, I'm calling these out in the room. I'm letting people know that I'm getting in when I see a trade like this. But I got a lot of folks in the room that are taking them themselves. But this was on Netflix. See here, it's bullish, right? It's blue. You're getting a pop out of the box symbol. You're getting a high volume candle. This is really important. High volume candles are critical to show you that the institutions are coming in here and buying in force. And just rode this thing right up here, in for 35 cents, $35 a contract, out for 70, 100% profit in what, 7, 8 candles, about 35 minutes. Right, we get in here and I get out right here as it put in this yellow candle at the very top. So that was a pretty nice trade as well. Another one here was on Intel, right? Intel is right here. We bought it right there, green. Institutions buying, right? Breaking out with a high volume candle right above the 8 exponential moving average right there, right? Take it right there and get out right here. So that one, I didn't make a lot on this one. Get in for 247, out for 277, 13% profit. But I want to show you, obviously some trades are going to be much bigger than others, but the setup was perfect for me. Okay. You notice as soon as it's headed down, it went from green back to yellow to bearish again. All right. And this is the frog one again. I just mentioned this one. I didn't want to repeat that. This was Meta. This was one on Meta, just so we can see these. Red right here. Now, I didn't show where I took this trade. I just showed you that it was selling. But where I would take it is right here on a breakdown below the 8 with a high volume candle. Anywhere in here, but this is where I took it. Okay, and you write it down, and right here you get back out. That was in for $595 and out for $945. On that. Pretty nice game, pretty nice trade. These out of the monies produce quite a bit of profit if you can catch them correctly. But again, you've got to have the setup. You've got to have the high volume candles to do this. Right? This is what these current time frame momentum will do for you. All right, and Verizon. This was one I just took a couple days ago on Verizon right here. Must be bearish for short trade, right? Must be bearish for short trade. It's red. It's breaking down below the 8 exponential moving average right here with a high volume candle, right? So here comes the institutions. They're selling. We can see they're selling, but now they're really selling. They're selling with tremendous force here. I took it here and I get out right there. In at 17 cents, $17 a contract, really cheap because Verizon has really tight options and they don't move a lot. In at 17, out at 34. So something like this, 100% profit in 15 minutes on that trade right there. All right. Okay, now on Tesla, this was another nice trade in Tesla here. This is where I get in, this is where I get out. Again, you can see it switched from bearish to bullish right there on that candlestick. Right there in that candlestick, breaking above the 8 with a high volume candle. There's those high volume candles again. Very critical to tell you that the institutions are in here. Right? A lot of times these high volumes will actually precede price moves. So it gets in right here and then it moves up, kind of compresses. And then it stays above the 8. That's your support level. Stays above the 8 until I get out right here. All right. So in for 380, out for 580. That's 68% return in an hour. Pretty good. All right. So this is just the what we've got for icon for the SPY super system, and this is the icon for the UMCAT trades. And these are out of the money catalysts. These are for these can be for futures, for SPY, the SPY, the Qs, the IWM, or any stocks. But these you'd be using in the money puts and in the money calls for these. All right, there's the UMCAT trade right there. All right, and this, by the way, is just a good graphic of the UMCAT trades that I've done. This is what I've done since November 17th. Now these are my trades on UMCAT. All right, but this is the results I had following the criteria. This is from November 17th when I started it because I just was doing it because the PDT rules were going to change. This is November 17th to July 8th. I've done 566 trades, 486 winning UMCAT trades, 80 losing UMCAT trades, win rate of 86%, and a profit factor of 5.11. That is a very high profit factor. If you don't know what profit factor is, you probably want to look it up. Put it into Copilot or Gemini or even Google and find out for trading options what's a 5.1 or even just a 5 profit factor mean. A 1-for-1 profit factor is your break even. A 2-for-1 is twice as good as you get making twice as much as you're losing. This is a big profit factor. And if you invested 500 in each one of the trades, these 566 trades, and these are again trades that I took because I can't post them. I can mention them when I'm taking them, but I can't post them. They're too quick. A little over 46, almost 47,000. Pretty good for this UMCAT strategy. All right, and that's basically the graphic of it. Just shows exactly the same information. Just risking 500 per trade, right? 500 per trade. Very nice, right? Very nice graph there. Okay, and I'm going to show you some of the results. And now these results that I'm going to show you now. These are the room trades. These are the trades that I took in the room or or on the alert service. In other words, I posted these. So if you followed my trades, you followed the trades I posted, your results would have been approximately the same as what I did because everybody can see these. They go out on alerts, because they're not really quick trades. Most of them are swing type trades. They're going to last a day or two at least, right? But this was April 2026. I just done the recent ones, April 2026. You can see the percentage gains that we get on most of our trades. 14, 49, 16, 17, 30. So, they fall in between usually about 15 and 50% profits on the trades we take. And we do have some losers. Here we had Restoration Hardware. We had a loser here. But we had a nice one in this OGN. That was an unusual option trade, but 105%. But some small ones, and SPY was 64%. So this was for April of 2026, just gone by. On the alerted trades, we just had 6 alerts. Don't have a lot of alerted trades on the alert service. 5 wins, 1 loss, $3,220 profit. But in the trading room, we had 17 wins and 2 losses, 89% win rate, which is pretty high. And that netted out about 88.33 on the April. So those are the April trades we took. It was the May trades we took. I just did the room ones here. 12 wins and 1 loss, 13 trades, 5,000, a little over 5,000 profits. And again, you can see the percentage gains on these, right? And a lot of the profits you get are very dependent on what the market's doing. Trending market's going to give you a lot higher profits than choppy markets. But these are the ones we had. Again, we did have this one lose here, 1 loss on Alcoa. But again, 25, 24, 53, you can see that these stay pretty much the same. All right, that was in May. Now, I do want to go back and just kind of recap. So we've been trading, this room has been open since 2022. I've been trading for about 17 years. This was open since 2022, but I looked at I didn't go back and get the results in 2022. They're about the same, I'm assuming, but I didn't look. It was a profitable year. But 2023, we did about 60,000 this is 2,000 per trade, by the way, not 500. This is 2,000 per trade. I use the 500 per trade on the UMCAT trades because they're low price stocks, low price options. You can actually take some, big size and still not put very much money into it. But this is just based on using 2,000 per trade. I have to use something for a baseline. So that was about 60,000 in 2023, about 55,000 in 2024, right? And in 2025, about 55,000 as well. And we're on tap for basically exactly the same this year. And when you get the same percentage gains, that's going to pretty much go through from month to month, year to year. Okay. What I want to do here is I want to look at some live trades. Now, I don't know if I can see questions here or not. I'm not sure. I don't see a place for them, but
there's a chat button in the Zoom menu.
Okay, let me get to the Zoom menu because I can't see it right now. Let's see. Because what I see right now is thank you for joining this event. So let's see if I can find Zoom.
The Zoom menu will be either at the top or the bottom of your screen? Do you have multiple monitors?
Yeah. Yep. Let me see if I can. I'll
So
just give me a sec. I think I can find it here. Let's see. I don't see the Zoom menu right this second. Is that Zoom? Yeah, I don't see it right here. I'm going to go ahead and bring up my platform so we can see the charts, but I don't see the Zoom menu.
it's at the top of one of your screens.
Click on that. Or
You
is
just
that
have to move your cursor to the top of one of your screens, and it'll.
Okay. Oh yeah, here
slide
I
down.
get you right here. All right, it's over here in the one that it's on. Thank you very much. I'm sorry about that. All right, so let me see. Questions, chats. Chat would be the questions, is that right? Yeah. Okay. I think that's it right there. Okay, I think, yeah, those are the questions. Okay, let me go ahead and bring up, what I'm going to do is I'm going to bring up my actual Thinkorswim platform on my SPY Super System right here. I'm going to bring it up on the screen. So here we are right here with this is the SPY Super System. This is this is the system that I trade every day. Now in the trading room, when I have the trading room open, this is what you see every day. Is I keep this up. Usually I keep it on the SPY. You know, if we're not looking at a particular stop, I'll keep it on the SPY so we can see what the SPY is doing all day long. But here's your indicators right down here. So let me just show you a couple ones. I traded Fortinet today on a 5-minute chart. Let me look at Fortinet. Right, so here's Fortinet. So this is the close right here. When we go back and look at Fortinet this morning, this is where I took it. And if you see remember we were talking about high volume candles. See the high volume candles right in here? I took it right about 9:45 because it comes off the 8 right here. I took it long with Fortinet and I just wrote it.
Oh,
yeah. What?
David, we're still seeing text.
Oh, really?
The slide. Yeah.
Uh-oh. Let me see. I guess maybe I have to share this screen. I thought if I just pulled the screen over, you'd see it, but I guess not. Let me see. Usually I'm on GoToWebinar, I just move it over and it shows it, but I think I might have to do a different
Yeah,
share.
you'll have to here, let me stop
Okay.
the share for you, and now you can reshare.
Yep, that's what I'll have to do. Let me take that out of here. I think I can do it this way. All right, sorry for this. I was hoping to be able to just share this with no problem, but stop that share and I'll start another share. Sorry for the problem here.
Okay, no problem. What's happening?
Well, I'm trying to get trying to move my Thinkorswim platform to another screen, and then I can share that screen, change the share from this screen to that screen. So what it's doing is just overlaying my screen right now. So
Oh.
that's go to Zoom and right now, and I can't really move it. Yeah, share your screen on C. Okay, well, I'm gonna have to bypass that and just move ahead because I don't want to tie everybody up. I know it's been a long day, I'm sure. All right, so what I'm going to do, I'm going to go ahead and just look at some other charts here, but I want to talk about a little bit about how we find these trades, and what we're looking for when we see them. I was looking to show them on live chat site. But
David,
go
you're
ahead.
not
Yeah.
you're not sharing anything now.
Oh, I'm not sharing anything now. Oh boy.
Yeah.
Well,
Screen that has.
hold on just a second. Back to at least sharing the screen now, I think.
No, you're still not sharing anything.
Really? Okay, now I should.
No, okay, it's loading.
Sorry about that.
Now I see market overview.
Yeah, I don't know. I'm not sure how I can bring a different screen over here. I gotta just.
I don't.
I'm
You
just
don't
gonna
need to bring. You don't need to bring it anywhere. Just share it where it is.
Well, yeah, it's under here.
Then just minimize that and
Yeah, that's what I tried to do and bring it over to a different screen, but I wasn't able to bring it up here. See, it comes. Now I'm sharing it.
okay. Now I see a chart FTNT.
Yeah, isn't that interesting? Okay, I'm back to where I wanted to be. Sorry, Anthony, for the delay here. So anyway, I was just going to show some trades. So here's Fortinet. This is one that I took today, a high probability trade set up off of high volume candles this morning as a bullish trade. You notice that we went from yellow to blue here, from bearish to bullish, right here in this candle, which is where I took this Fortinet trade. So this is where I get in, and I rode this up. Notice it was riding right along the 8, and then I took it off right on here. This is where I took Fortinet. That's one of the trades that I had today. Didn't have an awful lot of trades today, but it had a few. HPE, which was Hewlett Packard. Was a pretty good one today. It moved up nicely here. But my trade was this afternoon. I did not take out of the money on this. I took in the money. Notice it went to buying for blue, and I bought it right here on a green candle as it broke above the 8. That was a nice trade for HPE. But again, this was not UMCAT because I don't see no white candles, just green candles. Right. So that's how I traded that one on HPE. And again, if we had any questions, I was going to see if anybody wanted to ask me to look at any particular chart. Sometimes folks would like to see the particular charts that they have would like me to look at for them. Let's see, chats right there. Yeah.
Oh, there was a question about NQ and gold. If you want to look at those.
Okay, system on NQ and gold 5-minute chat today would be nice. Okay. All right, so we'll take a look at NQ here. I'm just looking at it. Basically is just the Qs, but the NQ is the future. So this is the future on the NQs today. All right, so we just bring this over to the end of the day. Here's the end of the day on NQ. But here's the moves in NQ today, back from this morning. Opened up strongly this morning. White candles, high volume, and then reversed pretty hard right here. Now here's the VWAP right here, which is your volume weighted average price. It's pretty critical on that one. All right, that was and there was some good trades both ways in it today, but it was very bullish. The Qs are up 1.6% today, so pretty nice. All right, so there's NQs, and you also would like to see the gold. I think but just look at GLD, but can see what gold looks like. This is the gold ETF right here. Gold was down all day long today. Oops. So was silver, I think. Well, silver up, actually, silver ended up today, so. Right, so there was silver coming down this afternoon, but up this morning on silver. And again, you know what the key here is, whatever you're looking at, whether it's the futures here, which is NQ, or any of the stocks, you're using your current time frame momentum here to determine whether you want to do this as an intraday trade. And this is going to be your guide. The current time frame momentum right down here is going to be your guide as to whether you can go long or short. And then you've got your momentum indicators up here, or your momentum right here based on the volume. Right here, we don't have high volume in here, but we do have a nice move up, so you can take in the money calls on your futures here. If you were doing futures, you could go long right there. Okay. Oh, okay, sure. Yep, I can. Let me. Is there any particular time frame you want me to set that at so you can take a picture of it? I'd be happy to. On NQ. This is it for the end of the day. I can leave it there if that. Just 8 a.m. Okay. 8 a.m. Eastern. All right. Back to all right. It's 8 o'clock right there. 8 a.m. Eastern right now. That was this morning's. That's the most morning's futures on the Qs. Notice we were green here across the board, starting at about 7:25 or so. All right, let me know when you get that, and I'll move along in case anybody else wants to see some more. For you, it was a bear trap here at 8. Well, it moved up pretty nicely up until it got to here. I didn't see it afterwards. I wasn't trading futures today, but it moved back down a little bit. If you're trading futures, you're probably trading a much higher time frame, a much faster time frame than I am. You trade timestamps. Okay. Yeah, I mean, again, when I'm looking at this, I'm looking at 5 minutes. So I'm looking at these in 5-minute time frames. I'm not using Unirenko or ticks or anything like that. Yeah, likelihoods. Okay, well, this basically this SPY super system is telling you what's going on. I mean, at any point in time, if I look at this, I can tell. You notice the institutions going back and forth here. They're buying, the selling. They're buying, the selling. This was after hours, of course. All right, so that's the NQ. But most of the time, I'm trading stocks. In the room, I'm trading stocks, although you can trade futures off of that if you'd like to, for sure. Right, and as far as any kind of swing trades, et cetera, are concerned, I traded some NTNX today. If you look at the daily chart on NTNX right here, switch down to daily. This was a daily chart in NTNX. You can see this nice move in NTNX right here. I traded it intraday, but I didn't swing it. And I purposely didn't swing it because the multi-time frame momentum was yellow. So I just took it long enough to take made a nice little intraday trade out of it today on the 5-minute chart, as I think I showed you already on NTNX. All right. Okay, good. So you saw that. So again, you can see what I'm doing is when I'm running this during the day. Now, if I'm using these scans right here, these cascading up scans, this is where I'm going to find a lot of stocks to trade during the day for using a 5-minute candlesticks to take UMCAT trades or SPY super system trades. All I have to do is click on them, and this is of course at the end of the day, but it's going to bring up exactly what was going on. You can see this moving teams. You can see the movement FTNT right here, up and down. So you can get a good idea by looking at this. We're going to find some stocks for long or for short, right? Now, and I can also change this cascading scan. If you get the software, you get this scan. I can change this cascading down, cascading up to cascading up on the daily chart. This is going to be looking at the daily chart. All right, so if I switch this over to daily, right here, I can now look at these particular stocks on a daily basis and see what they look like. And you can see this very bullish on BBIO today, but that's a pretty big gap up. So it's kind of a chase, but as LRMR. So this is how you find the stocks for swing trades. You can use this one here, the cascading up for longs, HPE, which I traded late in the day, but again, I didn't take it overnight because of this yellow candle, right? This yellow color right here. All right, DFXT, this looks really nice. Beautiful trade up, high volume. No high volume here, but a nice breakout, and you would go in the money calls on that, right? Dell as well. Looks really, really good, except for that yellow. So that's what I stick with. Cascading down, if I wanted to see stocks go short, I go is EQT. Look at this breakdown on the 5-minute chart and see it's breaking down. VTRS breaking down, but still fairly bullish, so I wouldn't touch it. Right, so that's what you're looking for. You're looking for breakdowns on shorts that have red or yellow down here. And right now it was a very bullish day this afternoon, so most of these are going to have some green. You're not going to be playing very many shorts today. You're going to be sticking mostly with longs. Right, so that's how I would do that. Now, if I was looking for a short for a swing trade, I would go down here to cascading down daily and getting some potential stocks to the downside. Cheap stock right there. Nice short right there. Again, bearish, yellow candles, high volume candle to the downside. EQPT, not enough information on that one. Flow right there, nice one there, but still green, can't take it. All right, so that's what I look for. Bullish and bearish, high volume candles on the daily and on the 5-minute. Most of we use the current time frame momentum. Okay. Yeah, the quant is on the panel 1 here. This is actually, it's called quant. This is actually a long-term trend. This gives you a much better idea of what the stock looks like long-term on the daily basis. I only use it on the daily, right? So I'm gonna look at on the daily chart, and that's where I'm gonna want to see that you can see that on this particular stock, you see how long this has been red, always starting way back here. See, as soon as it started to go down, the long-term trend went bearish. And that's what, so if this is bearish and you're bearish and everything else, it gives you a higher confirmation that that trade's going to work. Okay, that's what that shows you right there. Right, and if anybody else want any, I'll be happy to do that. All right, so that's what I look for. And again, I can show you example after example of this stuff, of how these things work. You can see the high momentum into here again. Again, the momentum indicator is the key thing. And then I go to volume as the next most important thing to determine whether I'm going to go with long-term with in the money puts or in the money or out of the money puts, or in the money calls or out of the money calls. That's what I'm going to take a look at. All right. So that's that, and I wanted you to see what the actual platform looks like, because this is where we get the information that gives us an 85 to 90% win rate. Okay, and I wonder if I minimize this now, if I'm back up again. Okay, cool, that's good. All right, so that we looked at some live charts for some super system trades, for UMCAT trades. Again, all of these are high probability trades that use indicators and the high volume candles on the 5-minute chart to identify the setups. And then use the exact same thing for the swing trades, except you're using current time frame momentum and multi-time frame momentum. Okay, this combination, by the way, identifies not which institutions are buying or selling a stock, but when they are buying or selling with major volume. Okay, and both of these UMCAT trades and SPY super system trades have profit factors over 4 and win rates over 85%. Okay, all right. Now I kind of want to do a little bit of notes on markets, just to kind of. This is basically what I do in the room a lot with some education. Always be aware of market conditions for the day. All right. Trade the best stocks trending with the market. Obviously, if you get a nice bullish day, you want to trade long. You get a bearish day, you want to trade short. Trade the best relative strength and relative weakness stocks. Doesn't mean RSI. That means how are they moving in relationship to the SPY, the SPY. All right, if the SPY is moving sideways or going down, and your stock's going up, you got a relative strength stock. Most days they're going to be high volume candles early as well as near the close. This is meant to say that you want to be careful with high volume candles, because There's a lot of high volume that comes in the first 15 minutes of trading and the last 15 minutes of trading. Okay. Oh, somebody wanted to see HD on the 5 minute, and I missed that. Okay, well, I'll try to do it afterwards. Again, so you want to when the high volume candles show up after like 10 o'clock in the morning till about 3 o'clock in the afternoon, they're much more important because it's actually showing some really significant institutional buying coming into the or selling coming into the market. All right. And using these indicators for intraday and swing trading. Okay, so the indicators to use. We've talked about this already, right? The SPY super system current time frame momentum. We talked about my favorite indicator. This is what I use. This has got to be green. I would have to have this green. I'm sorry, I would have to have this green if I'm going to go long. Green or blue, or red or yellow for short. This is a deal breaker if I don't have it. If I'm going to go long, it's got to be bullish. If I'm going to go short, it's got to be bearish. All right. Then the VWAP. This is another key thing, right? Then the 8 EMA and the 15 EMA. These are your 3 support resistance levels. High volume candles. How much force is there coming in with this trade? High volume candles are critical. But it's also going to tell you whether you can do an UMCAT trade, an out of the money catalyst trade. And then you look at relative strength and relative weakness. Well, those are the indicators that I use for intraday trades. These are the indicators I use for swing trading. The SPY super system current time frame momentum is going to be bullish or bearish, and this multi-time frame is going to be bullish and bearish. They have to agree, right? They have to agree. All right. So, and then I use on the daily chart, I use the 50 SMA, the 100 SMA, and the 200 SMA. These should be all in your daily charts. Everybody should have these simple moving averages in the daily charts. Why? Because all the institutions use these. So I want to know how close I am to any of these. Is it going to interfere with my trade? Then I look at the 8 and the 15 on the daily chart and high volume candles again, and then market trend. For a daily chart, the market trend is important because if you're going to take a swing trade, you really want to be trading with the market trend. Okay. Using these indicators for intraday and swing trading. So I'm just kind of going to go into a little bit of detail here. Got a few more minutes, so I'm going to just run through some of these. SPY super system current time frame momentum must be green or blue for long, red or yellow for shorts, right? And that's going to be true no matter what. That's got to be in place. Then the VWAP, that's a key support resistance level. Price must be above the VWAP for longs and below the VWAP for shorts. This is generally speaking. Right? The 8 EMA is also a key support resistance levels. When the 8 is above the 15, the trend is bullish. When the 8 is below the 15, the trend is bearish. Right? And this is really just meant to help educate folks because everybody can put these on their charts. There's nothing secret here about this. And this is an important thing. This is something I use, and I don't know an awful lot of other traders that do. I use the 15 EMA as a secondary support resistance level. And the reason I say that is when the 15 is below the 8, right? And the trend is bullish because the 8's above the 15. When the 15 is below it. When the 15 EMA is above the 8, the trend is bearish, right? So when the price breaks below the 8 EMA in an uptrend, the stock's in an uptrend, it breaks below the 8, the 15 EMA often acts as support. And what that means is if you're in a trade and the stock breaks below the 8, you might think this is a good time to exit. Wait to see if the 15 holds because it does many, many times. Many, many times. And when the price breaks above the 8 to a downtrend, in other words, wait for that 15 to see if it gets tested because you're coming up through the 8 and you're going to run right into the 15. And a lot of times that'll act as resistance. Wait to see if that fails before you exit the trade. This is very important because a lot of times you'll find out you'll get out when the stock breaks the 8. And the next thing you know, you look at it the next day and it's right back above it again. Right. And the high volume candles again are white. And high volume bullish, a white, high volume bearish, a yellow. And they can indicate institutional buying and selling, strong institutional buying and selling, right? So it's critical to have high volume candles for UMCAT trades, must have high volume candles for UMCAT trades. Okay, and here's the entering intraday trades. This is where you're going to enter all these things. And I don't want to take up too much time here, but I enter my intraday trades when I get a break above the VWAP, the 8, if the trend is bullish, and I short if it breaks below the VWAP or the 8 if the trend is bearish. That's my entries. And the high volume candles on the break indicate strong institutional support. Right? Swing trades, several potential entries in swing trades, bouncing up, off, or down the 8, the 15, the 50, the 100, the 200. These are all support resistance levels, right? So this is where you would, if it bounces off of those, that's where you want to get into the trade, right? But it's basically typically if it's bouncing off of it, it's going to be reversal back up into the bullish trend, okay? And break out of it up or down from compression, break into a gap fill, and what's called a PBO, a pullback opportunity, where a stock is bullish, comes down, touches the 8, bounces off of it, and heads back up again. And this is just meant to be a little bit of education as far as training is concerned, right? On bullish swing trades, the current time frame momentum and multi-time frame momentum must both be bullish, which are green or blue, or bearish, red or yellow. Okay. Entering the shorts on a price bouncing down from the 8 to the 15. Again, we're just talking the support and resistance levels here, right? And one thing to note, when you're trying to enter a swing trade, make sure it's not too extended to the upside. That means it should not be more than 1.5 ATR, which is average true range, from the 8. If it is, you want to skip it. Wait, because it's more likely to come back to the 8 before it goes back up again. Okay. All right. For both swing trades and intraday trades, always be aware of where the closest support resistance levels are. For intraday, that's the 50, 100, and 200 on the daily. All right. And then the VWAP, the 8 and the 15. And for swing trades, you want to make sure that on the daily chart that you're not going to run into the 50, the 100, the 200. Those are support or resistance levels, and they'll stop you. You'll stop your trade because that's going to be resistance for those, or support for those. Okay. And I'm probably don't want to go into too much more of this because I'm running out of time here. So I just skip. This is just anticipatory trades versus confirmation trades. It's kind of a nice little thing where if you grab something before it gets confirmation of a breakout, it's an anticipatory trade. They don't work as frequently, but you make more money on them. All right. And this was Profits and Harmony. I wanted to cover this, but probably taking too much time here. So again, what I say here, and this I talked at the beginning about this, indicators taken alone don't make a trade entry. Only using all the key indicators taken as a unit predict a high probability trade. And this is meant to keep traders from just taking a trade off of one or two. And again, I use symphony orchestra as an example. No single instrument makes a symphony. Only all the instruments working in unison make a symphony. One signal is noise. All signals together are a symphony. And that's what you're looking for. All right. Again, great trade is not one loud instrument. It's the orchestra playing in perfect unison. Again, our system is not about prediction. It's about listening to the market's music and entering when the orchestra is in harmony. All right. And that's just a little thing I did on the trading symphony. All right. So that is it. And I want to go ahead and put the offers out there. I think there's something in the chat about that. I'll link to it. Yep, you got access to the super system right there. Rory just put that out. This is the trading room right here. And again, this is options in the room. Now I'm in the room every day from market open to market close. I do take some time for lunch, but I'm there all day with the charts up there, answering questions on all the traders. I try to analyze the trades. We'll take a look at it. I'll explain why it's a good trade, why it's a bad trade. We'll look at the daily chart. We'll look at the 5-minute chart. We make sure that the SPY super system indicators are there. But this is for the room and the live trading room and the alert service. All right. And you can have a quarterly membership, which comes with a 2-week trial. This fills up. You've got to be careful because we can only take so many free trials at a time because it adds quite a heavy toll to the room as far as time wise that we have to spend on that. So, but they do have a 2-week trial. After the 2-week trial, it goes to $396 a quarter. You can have an annual membership. This gets you into the room. By the way, access to the room and the alert service. Also, you get all my videos. I got 32 videos out there on all the different indicators that we use, all the strategies that we use. We go over all of those things. I've got one on the using the multiple indicators together as a symphony. I've got a whole video on that. And you also get in a Discord chat, and that's like $14.98 for the year. Or you can do a one-time payment on it, $19.98 forever. That's lifetime for the room and the alert service and the videos and any changes that we make, any modification we make, you get all of those as well. Okay, that's on the room. We also can buy the software. The software is really a tremendous piece of software. This thing, you saw what it does, and it's really the information in there is really pretty amazing. It actually helped me improve my win rate from about 80% to 88%, which is pretty big. It keeps me out of a lot of trades that I otherwise would get into. So annual on the SPY Super System. This is the software with the scanners. You get a month of options live trading room for free if you buy the software. You get the scanners that I showed you briefly, and you also get the all the option master classes, the training videos, and it's white glove installation. Rightline will take over your machine, install the software, get it set up. It's going to look exactly like mine, right? Or you can do a one-time payment for $29.98. Yeah, for the SPY Super System, $29.98. That gives it to you for life. You never have to sign up again. Really a tremendous piece of software, and really does excellent. And I don't know that that's actually listed in the chat when you hit that link. I think you'd have to give Rory a call, which he's at 786-732-4656, and you can talk to him, and he'll go over all that with you. I think that's it. I did want to show you that this is a return on subscription investment for the annual subscriptions. The most you could pay is about $1,600, which is on quarterly pricing, based on 2,000 per trade. If you take all the trades, the historical results have been 40 times the return on investment. In other words, you're getting 40 times your money back on that subscription or more every single year, and it's been like this every single year. That's on the description of how much is subscribed to that thing. So that's the return we're getting, which is pretty outstanding. All right, so that's what I wanted to cover. I'm sorry I had so much trouble getting the. I don't usually use Zoom, so usually I'm using GoToWebinar, which is a little bit different. So I kind of messed up what I was doing. Hopefully the next time I do it, it'll be better. But anyway, I appreciate everybody being here today. I hope you found this useful. I hope you found it helpful. Like to see some folks in the room. Please think about the SPY Super System indicators, because they're really important. I mean, it's really important to have something that you can tell that the institutions are trading. All right. So anyway, I appreciate everybody being here today. I appreciate it, and I'll wrap it up right there. Thank you, Anthony.
All right, thanks, David.
Okay, thank you. Sorry for the mess up.
No problem. Thank you for being here and for closing out this event for us. So that has been 3 days of favorite indicators, and let me get the archive links again. Okay. So yeah, be sure to hit that right line link there and learn more about their indicators. And then also this YouTube link is the full unedited, excuse me, unedited live stream archive from today. And then also here, you know, while been doing the event, I recorded each presentation individually. And you can find all the day 1 and day 2 individual links at that second link that I just put up there. So, and then also if you just bookmark that and come back later tonight or tomorrow, you'll see it'll be updated with the full final all 3 days archives there. So, and then if you're subscribed to Timing Research, you'll get a reminder in the morning that those archives are ready. And then all Timing Research events. Sorry, I'm trying to find one other link for you here. Okay, yeah, so everything from Timing Research for the full 12-year history of that I've been hosting events is permanently archived to YouTube for you to review or re-review or check out again at any time. You can go back into the archives and see other past events and everything. So just a few other ways to get notifications. You can subscribe to Time Research on Substack or on Telegram, or you can actually, I have a public Google Calendar. You can just add the Timing Research calendar to your Google Calendar, and you'll get listings on there. Of course, you can shut it off whenever you want if you don't decide you don't want it anymore. But if you add it, then the events will show up automatically on your calendar, and you'll be able to have the links directly into the room right there on your calendar. Subscribe to Timing Research on YouTube if you haven't yet. And oh, I think when I posted the Raidline link, they had given me a questions number to call too. So write that down if you did not see that earlier. And let's see, what else do I have for you? Yeah. Oh, this ebook from our friends at Market Taker. Check that out. Also, Dan at Market Taker has a presentation that he is going to do in about 2 hours tonight. So you can take a break and then check out this 3-minute earnings blueprint that he's going to be doing later tonight. I think you'll find that interesting. So check that out. And then also have this QQQ options playbook PDF that you'll like. So, all right. Yeah, that's it for today. Anyone else have any questions? All right. Yeah, and if you're new to timing research, I do host along with events like this, I host a um, market panel discussion at 4 p.m. Eastern Time every Monday. So I was Jim, the option professor, who was on this morning. He usually moderates, or every once in a while he'll do a solo episode with just a market outlook from him. But usually it's a panel discussion with 2 or 3 other educators, trading experts, and they just talk about whatever is exciting going on for the week, share trade ideas, outlook, that sort of thing. So that's at 4:30, or I'm sorry, 4 p.m. Eastern, every Monday. So, and then also if you have any ideas for themes that you'd like to see for future events, or if you have any ideas for educators you'd like to see on one of my events, you can, or if you have any other questions, comments, suggestions, anything, you can reply to any Timing Research email or just go to the contact page on TimingResearch.com. I, of course, have a lot of people who help me with these events, but all the actual setup and emails and stuff on Timing Research itself is all me doing that. So I don't have a big, I don't have a big team or anything doing this. So if you see a typo anywhere or anything like that, feel free to send me a correction. Yeah, I have 10 monitors and 4 computers around me, managing all of this. So let's see, it's a lot of lot of work, but everyone seems to really enjoy it. So you get access to a lot of different access to a lot of different educators. Okay, Patricia says thank you from Germany. Where in Germany? Just curious. Um, and yeah, so anyway, that's why I host these events is because Dusseldorf. Okay, cool. Well, thank you for joining us. Um, it's probably what 11 at night there. Um, yeah, so yeah, yeah. So the reason I host these is because you get access to a lot of different ideas and different types of trading. Trading is very complicated and very requires a lot of dedication, and but you have to find a system that um, works well with your with the way that that your mind works and the way that your schedule and your time and so you can come to these events and see a very large variety of different trading styles and then find something that works for you. So that's it. So